ahead for the company. We are here joined by Mr. Peter Bains, who is the MD and CEO of Syngene International. Mr. Bains, welcome to the show and pleasure to have you. Speaking about the Q1 FY26 numbers, how were the numbers? How was the quarter gone by? And if you could give us the bifurcation of how your discovery services or research services and generic business performed overall.
Sure, thank you very much. So we're very pleased with the growth performance in the first quarter. It's a very positive start to the year and I think sets us up well for the rest of the year. And that the revenue from operations was up 11%, and that was underpinned by strong momentum in our research services, where we've seen continuation of conversion of pilot projects into programs and programs into bigger programs, and I think we see that momentum carrying on through the year. In our manufacturing services, we've made good operational progress. I think the highlight being that we've now operationalized the Unit 3 biologics facility in Bengaluru with the first clinical batch to a customer provided there. And in our Bayview facility, which is our first foothold in the United States, we're making good progress there, consistent with our guidance to operationalize that in the second half of the fiscal. So very good progress on revenue, and we've seen EBITDA grow very much in line with expectations, with a margin around 25%, again consistent with expectations and guidance. And we've seen profit growth as well. The profit growth, I think, needs to be seen in the light of there has been a one-off this quarter related to the gratuity fund, which has pushed that up a little, and that will not play out for the rest of the year. But overall, the quarter has been very pleasing, a very solid start, with all indicators very much in line with expectations and consistent, so that we're very confident in maintaining guidance for the full year.
Understood, Mr. Bains. Now, so my second question would be, has the biotech funding recovered, and how is Syngene experiencing when it comes to growth in inquiries or conversion? So how has the biotech funding, are you seeing some kind of recovery? What is the on-ground reality?
So from our lens, we've seen a partial recovery, but it's still, I think there's still movement there and it's not yet returned. This is biotech funding, VC biotech funding has not yet returned either to the levels we saw pre-pandemic, nor has it fully stabilized. Notwithstanding that, Syngene's discovery service platform is wide and diversified, and as we've seen this quarter, we're still able to look at growth, and we've seen that 11% revenue growth, and that has largely been driven by discovery services. And we continue to see momentum from the multinational companies, the biopharma companies, the large and the mid-size, coming to us for RFPs, and these are requests for proposals to start pilot studies to assess our capabilities, and on the basis of that, we look to convert the pilots into programs, and we've seen a high conversion rate, and we see a maintenance of that pipeline through Q1 and beyond. And again, that underpins our confidence in maintaining the guidance for the full year. So not fully recovered, the biotech funding is not stabilized and not fully recovered, but Syngene has a wide platform and a set of diversified capabilities, and we're certainly seeing good growth beyond that.
Understood. Now, Mr.
All right, so that was the management of Syngene Limited. Viewers, welcome back. You're watching Ask Profit with NDTV Profit. Before we move on to your queries for today, let's take a quick check as to how the markets are doing at present. Well, markets most surprising today. In terms of the Nifty 50, of course, it's down 0.16%. The Nifty Bank is down by about 0.2%. Nifty IT taking a significant hit. The broader markets also seeing some pain. The mid cap 150. Nifty down by about 0.3 odd %. The small cap 250 down by about 0.12%. So that's with regards to where these indexes stand. Just try to pull up the Nifty 50 heat map. The surprising one was Tata Consumer today, although it's paired off its gains since morning. It was up 3%, but it's come off from that point and is up 1.5%. Eternal seeing again gains of 2.6 odd %. DRL seeing good growth of 2.4%, although numbers were not good, but the new launch is something that's positive for the counter. Tata Motors up 2.3%. Apollo Hospitals, Geo Financial, Eicher Motors, some counters doing well, some counters not doing well on the Nifty includes the Trend, something like the Trent, Shriram Finance, Tata Tech Mahindra. There's Hero Motor, which is down 1.3%. Infosys, Street not reading the results well, down by about 1 odd %. Let's also take a look at the advanced decline ratio and see how the broader end of spectrum is looking like. There you go. There's around 1,000 odd advances versus 1,100 odd decline. So the ratio is almost 1:1 when it comes to the entire advanced decline ratio. Let's also try to pull up the sectoral heat map and see how sectors are faring in trade today. It's the Nifty Auto, which is the top gainer, up almost 0.5 odd %. There is also Nifty Healthcare, which is doing well, 0.7 odd %. Pharma doing well. Consumption doing fairly well, but Nifty IT taking a hit of almost 1.75 odd %, followed by Nifty Realty seeing downtick of about 0.6 odd %. So that's with regards to where the sectoral picture is. Let's quickly pull up the NSE 500 before we move on to our guests and see what counters are doing well and what are not doing well. IEX down 15%, Persistent down 8%, Coforge down 7%. Some counters doing well, KIOCL, ZF Commercial, Ipca Labs doing well in trade today. But with that, let's welcome in our guest for the day, Kush Bora of kushbora.com and Shaina Mukaddam joining us now. Welcome to both of you. Kush, I'll come to you first quickly, your quick take on how the markets are reacting today.
Very good morning, guys, and to all the viewers as well. Not surprising, nothing to write home about. It's a consolidation with a mild negative bias today, but if you see Nifty is in that broad range of 24,900 to 25,250, and the call congestion is also suggesting that 25,200 could be the pivotal point for today. We might close a little under that given the call writing. Bank Nifty also very similar, 57,300, 57,250 has been a bit of a resistance. It's just hovering around the 20-day moving average. So I suppose consolidation is par for the course. Given where the VIX is, we might see Nifty and Bank Nifty consolidate around or other in the respective ranges for some more days to come.
We've got our first caller for the day. Dheeraj is calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. I purchased 95 shares of Persistent Systems today at 5225.
Okay.
And I hold it for the next 2 to 3 months so that can I see the levels of around 6,000 again?
Okay.
Should I average it at lower levels? Is it a good entry at this point, or should I sell and move to some other stock is my query, ma'am.
Okay, got your question, Dheeraj. I'll take this up with Kush quickly. Kush, I'll come to you on this one. The idea was that results did meet estimates and the outlook was also not very bad, but the stock is tanking in trade and how? Your sense of how the charts are faring, is it the technical factors that are playing against the counter?
Well, let's just get this clear. The IT pack has been under pressure. Persistent also has seen sharp bouts of profit booking today. It's broken below the 20 and the 50-day moving average. My suggestion would be that, while the stock is down today, it's not really, just made a bottom just yet. My suggestion would be continue to hold with a stop loss near the 5050 mark, which is a medium-term support zone. If that level is held for the day, you might see some rebound. 6,000 price, in the next 2 to 6 months, quite likely. But I think the immediate, idea should be for a rebound and the stock see his buying price. So my suggestion would be continue to hold with 5050 as your stop loss in this case.
Okay, Dheeraj, you can wait by and see the conversation that my colleague Neeraj has had with the management at 10:45. We'll play out that conversation at 10:45, so do stay tuned. And we've also Anushi joining us in the studio today. Anushi, why don't you take the next question?
Absolutely, thanks for that, Mahima. So, the next question is from Vishwanath Sharma, and he has a query from the auto space. Now, he has about 250 shares of Tata Motors, wants to exit from this counter and enter TVS Motor on M&M. Whether that's the kind of view that is Shahina agreeing to is, let's see that. Shahina, what's your view regarding this?
Well, as of now, if you look at it, I would say yes, it makes sense to switch from Tata Motors to M&M rather than TVS. M&M is doing well. The new launches also are doing well, as well as tractors should do much better in this quarter. Monsoons have been good. Tata Motors is going through some, corrective phase because of issues in terms of the components. Also, in terms of, there is some issue with JLR in terms of volumes in China. But let us watch how the agreement with UK works out. Today we may have some good news, but at the same time, as of now, it makes sense to switch.
Sense to switch is the view that China has on Tata Motors. Okay, the next question is from Murthy, who's writing us from Hyderabad. He's holding 5,000 odd shares of 2,500 odd shares of Bank of Baroda and sitting on a 15% loss is what he's saying, and wants to know if he can continue to hold from a longer term perspective or maybe book partial profits. Shaina, I'll come to you again on this one. Bank of Baroda, what is the outlook like?
Bank of Baroda, it is better to continue to hold. If you look at it in terms of valuations also, it is not too expensive compared to the overall PSU basket. It's just about 1.5 times book. So I would say you can hold as of now.
Okay, so that's the view that we are seeing for Bank of Baroda. Now, we've already spoken about persistent systems and their view. So you can catch the full conversation at 10:45 as well. But the other stock in pressure is Coforge, and Chandana Jain wants to understand the view for this one for a short-term basis, whether it's an avoid is what she is asking. Kush, let me come to you on this one.
So Coforge, I would actually look for a buying opportunity at lower levels. Right now, the stock is actually slipping lower. It's just perhaps held just above the low point of the day, mild recovery from those points. But I don't think the worst is over. But wherever the stock settles could be near the 1640 mark, which is a medium-term support zone for the stock. So between the 1640 mark and the 1700 zone, if the stock does take support today and tomorrow, I think it will hit oversold territories, and there could be a rebound that could very well come about. So yes, not today, but let the stock settle, let the fall settle. Let it show you a rebound on the 30-minute chart, and then perhaps you can consider a rebound. But fairly constructive on Coforge.
Okay, so that's the view with regards to Coforge, and buy is the view that Kush has. All right, our next caller, Swarna, is calling us from Hyderabad. Swarna, hi, a very good morning to you. How can we help you today?
Yeah, hi, very good morning. My question is regarding ABLBL, Aditya Birla Life
Brands Lifestyle.
Yeah, Brand Lifestyle. So
Okay.
After the demerger, after this ABLBL is listed, I bought this at 155 April, and
Okay.
I wanted to understand, my intention of buying this was after demerger, I felt Aditya Birla, this was at I was expecting some profit around it, expecting the review I have received. So I'm trying to understand how much time I can hold this, and is this profitable or not?
Yeah, I got your question, Swarna, and I'll take this up with Shaina quickly. Shaina, post the demerger, all the brands like Louis Philippe, etc., are going to go to that segment of Aditya Birla Brands Lifestyle. And the guidance that the management has given for this counter is pretty strong. They've said that they're targeting a 15% revenue CAGR and a margin expansion of almost 300 basis points and an ROC of 70% plus by FY30. Your view with regards to where she should continue to hold something like Aditya Birla Brands Lifestyle?
Yeah, see, the news flow as of now and the sentiment is positive. So as of now, she can hold. I don't have too much of data in terms of how it was in the previous years because of the demerger that's happened. But as of now, I believe she can hold it because there is some restructuring that's happening in terms of the brands. But do keep a stop loss. I would say a stop loss close to about 140 should be kept because we do not know exactly how it's going to pan out.
Okay. Now, as promised earlier, Persistent Systems is the counter that is in focus today on the back of its earnings. Let's try to pull up the counter. It's down almost 8.4%. Overall, the earnings were in line. The outlook was also positive, but the stock is tanking in trade today and at its day's low point. My colleague spoke to Sandeep Kala, CEO of Persistent Systems. Listening to that conversation.
straight quarter, so congrats on that. Can we first just summarize what went behind this 3.3? Even though it is maybe 10 basis points lower than what was consensus estimated, it's a good quarter.
So good morning, Neeraj. Happy to be here. So for Q1 FY26, we delivered a revenue of about $389.7 million. This translates into a sequential 3.9% quarter-on-quarter, 18.8% year-on-year. In constant currency terms, this translates into 3.3% quarter-on-quarter. Now, as you rightly said, this is the 21st sequential quarter of growth. So it's been built up over several quarters. Now, coming to the margin part of it, EBIT came in at 15.5%. This is 150 basis points improvement year on year. And as compared to the last quarter, it is 10 basis points down. Please keep in mind the currency fluctuations that happened over the last quarter. Now, let me give you a little bit more about the order book. The total contract value for the quarter came in at $520 million. The TCV of the new bookings was $337 million. The annual contract value was about $385 million. Happy to answer questions on this.
Okay, let me try and peel this off one by one. So, BFSI was very, very strong. Is this Europe geography contributing? Would you focus a bit on Europe right now? Is that coming up? Because, and that's the obvious question in everybody's mind about what the trade wars are doing to different geographies.
Right. So if we were to look at the geographical split, the North American geography for us grew by 17.4%. Europe grew by 37.5%, but please keep in mind Europe is only about 8.5% to 9% of our revenues. So on a smaller base, it grew much faster. India grew by 18.3% and the rest of the world is very small for us. Now, if you look at banking financial services comment that you had earlier, the banking financial services growth that we saw was predominantly North America. And if you look at the overall, geographical thing that is happening in terms of the macroeconomic, the President Trump tariff discussion and so on and so forth, our feeling is that this will continue for another maybe 1 quarter, 2 quarters. It will settle down and the North American geography should also, once this is settled down, start growing very, very well for everyone. It is the biggest market any which ways for everyone in the world. Europe, obviously, because of these tariff discussions, etc., obviously they have their own takes from this and they will also start investing. So in the next 2 to 3 quarters, we believe that the macro should settle down. Also, given the fact that late next year, there are US elections, all this has to settle down well for the incumbent government to do the right things. So all of this should bode well for the demand environment. In the meantime, while the macroeconomic environment is soft a bit, people are not stopping. There are enough and more deal discussions. The decision making is taking longer, which obviously should get adjusted. So overall, I do believe, even though the macroeconomic environment right now is soft, from a decision-making perspective, it should open up and it should bode well for everyone.
So, well, there was solid TCV this time around, per se, Sandeep. You expect that to get better from where it is right now? Because you're saying that things are not closing. If they start closing, what happens?
Yeah, so look, there are 2 parts to it. One is, the effort required right now to close this is inordinate. And that's where, if you look at many of our peers who have come out in the industry, their revenue growths are tepid, their bookings some are doing well, some are not necessarily. And I would tend to believe that for the like-to-like effort, the results are not necessarily at the same level. It takes a lot more effort in this economy to deliver the 3.3% constant currency, the 3.8% otherwise. And all I'm saying is, for the same thing, the effort required may come down. And yeah, if we can close more, absolutely will. In the past, we have had many years where, we have had even 35% growth year on year. So I'm not giving any forward-looking guidance. All I'm trying to say is, market is tough, effort is more. Market becomes lesser tough, things should be even better.
Okay. So, okay, fine. The other question is vertical-wise, right? So, BFSI, very strong number. I'm guessing the percentage growth can't keep on being at this pace. But from an absolute number perspective, do you think strong BFSI growth continues, part one? And two, on healthcare. What is this? US funding cut led pressure, and I read in one of the reports that it might resume from quarter two. I presume that would have been written after the con call. So does it resume from quarter two, or is it still skittish?
Yeah. So two parts to that question. One, the Doge part of it. The Doge part of it, when we look at what happened in the Doge part, there was significant amount of funding cuts done for research activities in universities, foreign aid grants, etc. were significantly cut, and a number of things related to Medicare, Medicaid are also under pressure in terms of reimbursements. So if you put all of this together, it's the same ecosystem. If the university's funding is cut for research, they're buying equipment, software, services, and so on from the entire value chain of healthcare. That comes to a grind. Although it may not be that huge, but it does come to a grind. The federal spending in terms of departments related to health services in the US, that slows down or that gets cut. That also has an impact on the entire value chain. So a lot of that is baked in. Now, I don't want to, take a paint brush and paint it for the entire industry, but those are the headwinds for the industry. Within that, we have done very well in healthcare. If you look at our healthcare segment for the last 6 quarters, it was growing at, absolutely, brilliant pace. And so it has to also consolidate as a part of our larger deals with some of the largest customers we have. There's a certain amount of offshoring that has to be built in, which is what is panning out, and it's not that big a decline, 2% decline on a quarterly basis, where we are saying it will come back again to growth, because even our healthcare segment is a sum of parts of many customers. So overall, confident BFSI will grow. It may not necessarily be at 50-60% year on year, but it is growing at a very healthy clip for us. It will continue to grow. High tech has started doing very well. It will continue to grow. Healthcare took a dip for a quarter. It will come back to growth, and it will consolidate the growth. So overall, each of these verticals, by the time we finish the year, should be healthy growth, and some of parts should be pretty healthy.
All right, that was the management of Persistent Systems. The stock under pressure today posts its Q1 results is what we are seeing. But let's shift our focus back to the questions, and we have a caller joining us. In fact, this is Sunil calling us from Noida. Hi Sunil, how can we help you on the show today?
I've got shares of IRB Infra.
Right.
I got them at an average price of 22 rupees each, 4,600 of them.
Okay, and Sunil, what was the reasoning behind you entering the stock?
I'm just holding on, just building up my shares for a long time. I've held it. Okay. And I'm wondering whether I should hold it any longer, or should I now book profits, or should I accumulate?
Okay.
I don't mind holding for another year to 2 years, just no problem.
So you want an overall long-term picture is what we are looking at. And let me take this across to our guest. So let me take to the fundamental guest, Shahina. Shahina, what's your view on this one?
He should continue to hold. If you see the order book, it's very strong, about 32,000 crores. And in terms of pure valuation also, it is not expensive. It's just about 12 times EV by EBITDA. They have got very good orders in hand across India. So I would say hold currently. Do not book your profits as of now.
It's interesting because he's sitting on profits of almost 1.2 lakh rupees. So Sunil, congratulations on that. All right, the next question is from Babu Raj, who's writing us from Kerala and holding Hindustan Copper. 100 odd shares at 226 a piece. Wants to know if you can continue to hold or sell. Kush, your view on the charts?
It's a hold. If you see, the stocks actually rebounded quite smartly from the 260 levels. Now it's trading comfortably above the 20-day moving average. Since buying price is much lower, my suggestion would be to keep a trailing stop loss near the 260 mark from where the stock rebounded currently. I'm a little constructive on the overall metal play. Hindustan Copper has been one of the standout players, in this space. So yes, continue to hold. On the upside, you're looking at 295 once that is taken out at 310 as well. But yes, do keep a trailing stop loss at 260 right now, and as the stock moves higher, keep trailing that upwards.
Okay, so hold is what we are looking for Hindustan Copper. But the next question for that also, I'll stay with you, Kush. Now, DJ Rao is asking us about ITC Hotels. It initially bought the shares at a price of 169 and then exited at 255. Wants to re-enter this stock again. What is the correct price levels that we should be looking at for this one, Kush?
It will not be a bad idea to re-enter the current levels. The reason being that the stock has a tendency of, moving higher for a few sessions and then slipping and seeing some sort of profit booking. If you see the last 3 sessions barring today, the stocks actually slipped lower, but that's on the back of fairly thin volumes, which means the weak hands are being shaken out, the stronger ones stay on and in fact look to accumulate at lower levels. So you might not see a very deep cut, but 235 to 245 is a good accumulation zone if it comes to that. But you could initiate a small position at the current level as well. On the downside, as I said, 235, that support zone will continue to act as your stop loss. On the upside, you're looking at 260 and about 280 as well as positional targets. So start accumulating ITC hotels at the current level for higher levels, and 235 that comes in as a stop.
Interesting. Start accumulating ITC hotels is the view that Kush has. With that, it's time to slip into a very short break. But don't go anywhere. We'll be right back answering all your queries on the other side and a very interesting conversation with Tata Consumer as well. Stay tuned.
That's huge. That is a biggie. It's out of there.
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे क्लियर.
हेलो
हेलो
बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
Welcome back. You're watching Ask Profit, and as promised, an interesting conversation with Tata Consumer Products. Well, the company came out with its earnings. It's been a mixed quarter. Good revenue and PAT growth, but margins have taken a significant hit. And to discuss as to how the quarter has gone by and what the future is looking like for the company, we're joined by Sunil D'Souza, Managing Director and CEO of Tata Consumer Products, joining us now. Mr. D'Souza, always a pleasure speaking with you. You know, first of all, I'll take this up with you, congratulating, because it's been a mixed quarter, but you've managed to grow in terms of PAT overall. In terms of your overall outlook, because I was trying to understand that you've said in your con call that margins will recover, in the second half of this FY26. Just want to get a sense of what has worked and what has not worked according to you this quarter.
Yeah, so before I get into this quarter specific, as you rightly said, we had a double-digit top line, 10% growth, which is what we've always guided for. EBITDA was negative, 8%, and I'll come to that. Group net profit was up by 15%, and we're sitting on 400 crores of cash, right? The EBITDA was negative primarily, if I take it for the same quarter last year, we were down by 250 bips. Now, out of the 250 bips, 160 bips is accounted for by the tea cost, right? Last year, tea prices went up by roughly 30%. And we've been able to pass on to the consumer only 70% of it because in various pockets or various segments, to remain competitive, we did not move prices. That said, what we are seeing this year, and last year, the reason why the tea prices went up is because there were roughly 3 droughts through the year, and that impacted the total tea crop, which was down by roughly around 5%, and the tea prices shot up. This year, all forecasts point to a normal crop. And we're already seeing actually the last few auctions have been down by about 13 to 15% prices versus same period last year. So we do expect probably the up 30% will be down 20%, and therefore the margins will come back. Market shares are strong. We've delivered volume growth in tea and overall a 12% top line in tea. So as tea prices drop, we do see margins coming back. That's number one. Number two was the impact of coffee. As coffee prices have dropped, we're carrying slightly higher priced inventory, but that also will stabilize. And as soon as that stabilizes, coffee prices, the coffee margins, unbranded coffee, that is, will roughly go back to where it was 2 years back. So therefore, for us, the critical piece is, as long as we know that these are the specific pieces pressurizing margins, and there is a line of sight in the next probably 1, if not 2 quarters for it to come back, we remain confident of getting margins back.
Interesting. Mr. D'Souza, I have a lot of follow-up questions with regards to everything that you said. But the first thing I wanted to understand, when you said that you've passed 70% of the inflation and absorbed 30%, have you taken price hikes this quarter? And if yes, what's the kind of range of price hikes that you've taken? Because the part of inflation being carried forward is also because you've already taken price hikes in the previous quarter as well.
Yeah, so most of the heavy lifting of the price increases happened between, I would say, Q2 to Q4 of last year. Q1 of this year, marginal changes. In fact, it was a mixed bag. There were some increases, there are some decreases, because as we see, again, tea is not, everything is not one quality. There are different qualities of teas which goes into different blends and prices move differently. Whatever we are seeing in the auctions, we are starting to translate. So we've taken some up, we've taken some down. Broadly, I would say minimal net movement for this quarter itself.
Okay, interesting. Okay, in terms of your core business growth, that has been good, but the growth business was lagged, and this is because of a one-off. Do you think this is only part and parcel of this quarter, or will it also be carried forward in Q2 or Q3?
So we've always guided for our growth businesses contributing to 30% of our top line and growing at 30%. Now, this quarter it was 28% contribution, but grew only at 7%. And that's for 2 or 3 very specific reasons, right? Sampan did grow 27%. So that is, moving on a very, very strong footing. Ready to drink beverages, we re-indexed pricing in Q2 of last year, end of Q1, Q2 of last year. Therefore, we're cycling higher prices from last year. We did deliver volume increase. It was up 3, but total value was down 13. because we corrected prices, and the +3 should have been far higher if it was not for the unseasonal rainfall. Now Q2 we expect to be normal weather, and if so, between Q2 and Q3 we should come to a 30% trajectory. Capital Foods and Organic India, which were our acquisitions, Organic India still was a 30% plus. Capital Foods was the one which was slightly lower for a couple of reasons. We had a bunch of issues in exports and imports, I would say. Exports because of supply chain issues internationally with the geopolitical issues around the Middle East. Imports, there are certain ingredients which we import for various food products which we started to face issues in imports, and we had to rejig the formulation. So that's number 2. Number 3 was we had capacity issues, especially as we started to ramp up noodles. That is more or less now behind us, and we've started to move on a different trajectory. And lastly, in some specific distributors, we right-sized inventories to make sure that we are on a firm footing. So as you rightly said, this is one-offs. And between Q2 and Q3, you will start seeing the trajectories come back in line with expectations.
Okay. In terms of tea and coffee both, tea, you said there's volume growth, there's also value growth when it comes to tea. Coffee has also seen a good growth, though on the back of a lower base as well. But just want to get a sense of competition there. Are you seeing some kind of market share losses when it comes to both tea and coffee? Because in the past few odd quarters, we've seen a lot of new companies getting into this space, be it startups or be it from the unlisted space. Any view there?
So coffee actually, for India, my volume growth was 33% and my value growth was 67%. I don't have access to numbers from competitors so far, but I would dare say that we were right up there in terms of coffee growth. So I wouldn't worry too much about market share. As regards startups, etc., as quick commerce, e-commerce gains traction and business, the channels move between a GT and the new age channels of e-commerce, quick commerce, etc. You will see a lot of players coming in because they don't have to do the hard yards of building the GT distribution. But that said, ultimately the business basics have to play out. Brand equity, product quality, marketing, execution has to play off. And I wouldn't worry too much about it. I think we've got enough runway in terms of market share for us. We're still a very small player. We've got a huge runway. I wouldn't worry about competition. I think we need to get our execution buttoned up tightly.
Understood. Okay, one last question, Mr. D'Souza, before I let you go. International business has seen a growth of 9%. Constant currency was around 5-odd%. Just want to get a sense there. What's the outlook like, one thing? And do you think that the pricing interventions are still impacting that part of the business? And what is the expansion plan looking like?
So we've always guided international for being mid-single-digit top-line growth and being accretive to the India business. And I think they've delivered 5% constant currency, 9% total reported growth. And my EBIT margins are 14%, which is accretive to India. So international has come to the party. The most important thing in international is I think UK and Canada are on a strong wicket. UK, we have started spending behind building brand Tetley as well. In the US, now we've started to see very strong top-line growth. We saw a 12% top-line growth. 16% top-line growth and margins in line with expectations. As coffee prices settle, the margins will come back. And therefore, the better position that we land up in terms of market share, etc., will play to our advantage. So international, I would think broadly, we are where we should be. We need to accelerate from here on.
Thank you so much, for giving us all those insights and all the best for FY26. And thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you. Always a pleasure.
All right. So that was Tata Consumer. Interesting conversation there. The stock is up almost 1.8% as we speak. And this is because there's an optimistic guidance given by the management for margin recovery by Q3 FY26 is something that the street is liking. All right. Moving on to the next question for the day then. Ishant from Rajasthan has bought 15,000 odd shares of Central Bank at 40.6 a piece and wants to know the target for this counter. Kush, I'll come back to you, and thank you so much both Kush and China for waiting by. I'll come back to you on this one. Central Bank, what are the charts indicating?
Well, there has been a bit of a profit taking and a slide in the central bank stock. If you see from exactly the 40.5 mark, the stock's actually slipping lower. My suggestion would be continue to hold, but with a tight stop loss at 36.5. If that is broken, with this is a medium term structure, that medium term structure gets disturbed negatively if 36.5 is broken. So my suggestion, continue to hold, but with a tight stop loss at 36.5. You're seeing some volume waning off on the downside, which means there is a possibility, slim chance that the selling might be coming over. So yes, if the stock does rebound, then you could see 39 and then again 40.5 levels on the upside.
Okay, so hold is currently what we are looking at for central banks. So that's the view that Kush had to give in terms of how technicals will shape up. The next question is from Tom's. He's writing us from Bangalore, holds about 500 shares of RVNL, and this is at a price of 432 that we are looking at. If you see his current positioning, he's facing a loss of 28,000 on the counter. Kush, coming back to you on this one, wants to understand the 6-month outlook on the stock.
Not very positive because after the kind of fall that these stocks had seen, there was a bit of a rebound attempted in some of these names, but it's not sustained. Particularly RBNL, if you see, there's a double top near the 440 mark itself, and the stocks now continuing to slide lower below its near-term averages. So it will not be a bad idea to maybe consider holding on, but again with a very tight stop loss at 360, and this is just to give him a chance at the rebound because the momentum indicator is starting to just show a mild uptick. But even if that were to happen, my suggestion would be to start exiting at 395, perhaps even 410 kind of zones, and not wait entirely for the 440 level to come about. So yes, you could continue to hold, but start exiting as the stock inches higher.
Okay, so that's with regards to where RVNL stand. The next one is IEX that we're talking about, and I think everybody wants to know about this counter today. Suman has 130 odd shares at an average price of 199 and wants to know if she should continue to hold this counter or not. Shaina, just to give viewers a perspective, the problem that has happened with IEX is that market coupling for day-ahead market starts on 2026. Power exchanges like IEX will not be able to compete on price discovery. Common algorithm will determine the best price. Basically, this will reduce IEX pricing power and competitive advantage as well, and that is why we're seeing the kind of pressure on the stock that has happened today. Your view as to how this will pan out for IEX as a whole, and should somebody who's invested in IEX continue to hold the counter or book profits or losses wherever they're sitting at right now?
I would say it's better to exit because it would affect almost about 50% of their revenues in terms of increased competition. So, to that extent, they could see some pressure. Also, in terms of overall competition, number of exchanges have launched their own trading platforms for electricity trading. So, you are going to have increased competition. And in terms of valuation, it is on the higher side as of now. So, it would be, safer to exit and move on to some other stock or sector.
Okay, exit the counter is the view that Shahina has on IEX. All right, our next caller, Venkat from Bengaluru, is calling us. Venkat, hi, a very good morning to you. I believe you have a question on Tilaknagar.
Hi, Mahima. Good morning. Yes, I'm holding 99 shares at 292 price.
Okay.
So I just want to, within 2 months, it's been 60% increase in the share price. So shall I hold or hold for 6 more months, because there is also one more acquisition news of Imperial Blue.
Correct.
Can I expect more hike in the price?
Right. Venkat, I understood your question. I'll take this up with Kush since your view is only with respect to where 6 months are concerned. But a bit about the acquisition. It's an interesting acquisition. They're acquiring Imperial Blue, and this is a very accretive acquisition for Tilaknagar because Imperial Blue's revenues are almost double than what Tilaknagar is doing right now, and it's at a very attractive valuation, almost 1.5 times EV to sales versus that of Tilaknagar's own valuation at 6.5 EV to sales. So it's a very interesting acquisition. Kush, I think the stock is not moving much in terms of needle today because this particular news was somewhere out there in the public, and because of that, in the past few odd weeks, we've seen a significant amount of uptick in the counter. But do you think there is more steam left when it comes to this counter for the next 6 odd months?
I think nearly about 45% in the last 10 odd sessions. So not a bad move at all, maybe a little more than that. So yes, given the kind of move that it's already seen and some profit booking at higher levels close to the 500 mark, what I would suggest is a partial profit booking. since he's already making good returns and the stocks now hit overheated territories. I would suggest book 50% right now, and you want to re-enter the same stock, because if you see the medium-term setup for this one, it's been fantastic. The stock's actually been doing very well. If you look at the medium-term setup as well. So any dip towards the 450, 455 zone should be taken as an opportunity to re-enter whatever stock you've sold. So don't exit completely. Book partially, take some money off the table and re-enter at lower levels.
So that's the view that we are seeing for Tilaknagar Industries. The stock up over 0.3%. Now we did see a recent rally considering this news flow was already ongoing about the stock. But next we have a caller joining us, and this is Srinivas calling us from Hyderabad. Hi Srinivas, how can we help you today?
Yeah, good morning ma'am. I am holding Sai Silks Kalamandir share, 500 shares at the rate 160.
Right.
So I just want to know, is there more upside left technically in the short period of time?
Okay, and in this short period, you mean next 3 to 6 months? What's the kind of time horizon that you're looking at?
Yes, correct.
Okay. Let me take this across to Kush. Kush, your view on the stock?
Very, very interesting moves. I think he's entered the stock as well at the right price, because that's where one breakout came about. Right now, at the current price, above 177, the stock's actually given the second breakout. I think you should continue to hold, but with a tight trailing stop loss, because while the weekly setup is encouraging, the volumes are picking up. On the daily charts, it's now just above the overheated territories. So maybe in the coming days you could see a profit booking, but I would rather bet on the momentum. Hence the view is a hold, but a very tight stop loss near the 177 mark. On the way up, there's a good possibility that the stock could also hit 195 and about 202 kind of levels. That's where you want to perhaps book partially.
Interesting. So that's the view that we are looking at for Kalamandir. That's silk. A hold is the rating that we are seeing. Now, next query is from Tarun, who's writing us from Kerala. He's holding about 1,000 shares of Suzlon, and this is just under a 1% of a loss that he's facing currently. Wants to understand whether he should accumulate more, sell, or enter a stock like a CI India Automotive stock as well. Let me go across to Shaina for her view on this.
Well, actually, my view is that he can book part profits. You can keep some for the longer term. Basically the growth is very strong, and that is going to support in terms of the stock not moving down substantially. At the same time, valuations are expensive. EV by EBITDA is 30 times FY27, which actually could limit the upside that you see in the medium term. So you book part profits and you can keep some for the long term.
So that's the view that we are seeing for Suzlon as well as CI Automotive. But more trouble brewing for Anil Ambani as ED is conducting raids, and this is at his Mumbai and Delhi premises that we are looking at. Vishwanath joins in with more details on this.
Right. So what we're learning from our sources at this point in time is that there are searches going on over 35 premises. There are 50 companies that are covered as part of these searches, and 25 individuals who are being questioned as part of the search operations by the Enforcement Directorate. What we're learning is that about 3,000 crore worth of fund diversion linked to Yes Bank promoters is also part of the search and searches that ED is conducting. According to some preliminary findings of the Enforcement Directorate, the Yes Bank promoters had actually received money. This is back in 2017 and 2019, between that period of time when Rana Kapoor was the promoter of Yes Bank. At that point in time, the Yes Bank promoters had received certain money, a certain amount of money into their bank accounts right before a loan was sanctioned to Reliance Group companies, to all of the companies that are associated with Anil Ambani specifically. What our sources are also telling us is that SEBI, the markets regulator, has also shared information about certain misdeeds within Reliance Home Finance. It's a company which is part of the Anil Ambani group of companies, where according to what our sources are telling us, there was a dramatic increase in the corporate loans given by Reliance Home Finance. That is also under scanner. Remember that this money has been diverted to other group companies, to shell companies, and thereby taken out of the system. Sources are saying that according according to the current findings of the Enforcement Directorate, it looks like this was a well-planned sort of a scheme by the Anil Ambani group of companies to move that money out. So there is a significant action by the Enforcement Directorate. You can tell by the scope of the action that they've taken. You know, if you're raiding 35 premises or conducting search operations, conducting search operations at 35 premises and involving 25 people, then that's a significant action by the Enforcement Directorate. All of these actions are being undertaken under the Prevention of Money Laundering Act, under which, of course, the ED operates currently.
Thank you so much, Vishy, for explaining that in such good detail. That's probably a developing story, and we'll keep you updated with what's happening ahead. But certainly, we're seeing that impact on Reliance Infra shares. The stock is locked in lower circuit. Let's try to pull that up. If it is in lower circuit, it's on the ticker right there. It's down almost 5% and locked in lower circuit as we speak. Shaina, if you've got the chance to take a look at what the update is, any quick view on how this will shape up, and your view on Reliance Infra as well?
See, normally I would avoid, any entry into any stocks, or I would exit any stocks which have this sort of negative news flow. Maybe valuations are not expensive, but you do not know how things will evolve. So I would just say avoid. And, there are a lot of other sectors in the power sector, infrastructure, which you can look at. Something like an NCC you can look at to enter. I don't see any reason why you should, remain invested in a stock which has such a lot of negative news.
Interesting. So don't remain invested in counters that have such negative news, is the view that China has. All right. The next question is from Hemant, who's writing us from Telangana and asking about delivery stock. He's bought 200 odd shares at 248 a piece. That was earlier in 2025, April. Then he again added 100 more shares. At present, his average price is around 284 rupees of 300 odd shares. Wants to know if it's sustainable to hold for the next one more year or not. Kush, I'll take this up with you from a slightly longer term perspective. 1 year charts, what are they indicating for delivery?
Very, very interesting setups. And I think, kudos to him for buying at lower levels and then averaging on the upside. So that's a fantastic strategy, so clear proof that it pays more often than not. So yes, you could continue to hold. However, what I would suggest is, there is some congestion near the 450 to about 470 zone. So maybe the stock could go sideways. Also, if you see the kind of run-up that it's had, ever since it started spurting from the early April, time frame, it's hit overheated territory. So yes, there are upsides for at least, about a year's time frame. I won't be surprised to see the stock cross the 500 mark. But for at least, a couple of weeks, maybe a couple of months going forward, you could expect some sort of consolidation. As in when the 470 threshold is taken out, I think another leg of rally will emerge. Like I always do, I would suggest a trailing stop loss near the 400 mark. That is a medium-term support zone. So yes, if the stock were to fall to that level, you should take money off the table and perhaps consider a re-entry. Right now, it's a hold with a trailing stop loss at 400.
Okay, hold is the view on delivery. All right. Coach Shaina, it's time for the rapid fire segment on this edition of Ask Profit. You know the drill. I'll take up the first question then. It's on SJS Enterprises. Charukya from Hyderabad has 180 odd shares bought at 1197 a piece. Wants to know from a short term perspective if we can continue to hold. Kush, on the charts?
Continue to hold, keep a trailing stop loss near the 1245 mark.
Okay, a hold is what we are seeing. Now, Pakshal from Ballari is writing to us about Motherson Sumi. He has about 500 shares and this is at a price of 136. Stock currently under pressure. Shahina, your view?
I would say hold at current levels.
Okay, Lodha is the next counter. Seema from Jodhpur wants to know if Lodha is the right bet in the realty space. Shaina, would you say yes to Lodha, or would you prefer something else?
Well, I would prefer DLF to Lodha as of now at current levels. So it's a switch.
Okay, next question is from another question. So this is from Gauranga Das. He's writing, it's another query he's writing us about 1,000 shares of Havells, and he had bought this in April. Wants to understand the short-term outlook on this one. Kush, your view?
Very range bound. I think you could continue to hold. 1585 is the level on the upside. If that is taken out, you could see further momentum. On the downside, 1515 is the support zone, so that should be a stop.
Indus Towers is the next counter. DJ Rao wants to know if he can continue to hold for the next 6 odd months. His buying price is 319 and 3,500 shares he's holding. Kush, on the charts?
Again, the stock's not going anywhere, but it's not even breaking down. So yes, even this is a hold with a stop loss at 385.
Okay, next Manu Bhutra is writing to us about Anant Raj, bought it at the levels of 550, has about 1,000 shares, who wants to understand whether he should hold or sell. Shahina, your view?
Yeah, it's a small cap. I think he can continue to hold at current levels, but he can keep a stop loss close to about 540.
Okay, Phenolics Cable, quick view on the charts, Kush.
Sorry, Phenolics Cables, right?
Yes, Phenolics Cables. Money has this question.
It's an exit.
Okay, exit is the question, and with that, Kush and Shaina, thank you so much for taking out the time and speaking with us and giving us all those insights at NDTV Profit. We've taken 21 queries today despite of the 3 management interviews that we've had, Anushi. So good number of questions that we've covered. But with that, we're completely out of time on this edition of Ask Profit. But do stay tuned. KYC on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Mahima Vashajani, and today we're going to dissect Bikaji Foods. Of course, the numbers, but outside of that, there's plenty of things happening with regard to this large player within the packaged food segment. Let me first start off with volumes. Well, volume growth in core markets is, of course, on a high base, not as strong, but you want to do well in the non-core. So the core markets, which is typically West India and Rajasthan in particular to start with, and now the non-core, as Mahima tells me, is UP, Haryana and the like, more of central India. Volume growth, well, you want to see how much are they targeting and what's the traction they're getting with regard to their non-core markets, whether they're able to build that same brand, that same rapport with the customer or not is really the question. Second one is competition and the impact of that on the growth number. Of course, within core markets, but more so in non-core markets, competition remains strong in a segment like this. Is the receptiveness of products in other states also just as good? How quickly can we evaluate that? What kind of timeline should one look at and what kind of performance should one look for is really the other question we'll try to understand. The fourth piece is probably the most important, and that's raw materials. One in terms of direction, second in terms of pass-through. Price increases don't seem to be something that the company is very enthusiastic about, at least basis commentary. It seems like a low single-digit kind of price increase. Everything's going to largely be driven by volumes, but the cost pass-through will be the question. How much of the cost increase is going to happen? How much of that is going to get passed through? How confident of a 32% gross margin, that's the guidance that they've given, and a 15% EBITDA margin in FY26. How confident are they of that? 32.5 to be absolutely precise, but I'll give it to them if they are able to do that 15% EBITDA margin nonetheless. Acquisitions, what's the thought process and what's the growth prospect with regard to already made acquisitions, and how do they view new acquisitions and new places where they are making investments? There aren't too many large capex projects that they are undertaking, at least in the near term. That's not the announcement, but broadly acquisitions will be one thing which I have my eye on. Anything else, Mahima, that you feel that we should add?
The interesting part here would be to try and understand as to how they're doing, what they're doing in terms of its international expansion, considering now the UK FTA is in place. That is something to watch out for, because a lot of these competitors of Bikaji Foods, like something like an ADF Foods, is doing the ready-to-eat part of business. So we'd have to see as to what new products also they are trying to foray into. But before we go on to the 8 metrics that we're going to talk about, let's take a quick look as to what the company does exactly. It's probably one of the largest companies in India in the listed space that is into ethnic snacks as well as Western snacks. The product mix per se for the company, ethnic snacks is almost 75% of their overall business. Packaged is almost 6 to 7 odd %. Western snacks is still small in terms of percentage, but a very fast growing business for them, around 9%. Papad is around 6% and others is around 3 odd %. So that's with regards to where the product mix stands. Market wise mix, as Harsh mentioned, the markets are divided between core and focus. The core market is around 72.4%, focus market is 13 odd %. Others comprises of around 9 odd %, and exports exports right now is almost 5% of the total business. The core markets include your Rajasthan, Assam and Bihar. Focus markets is your Uttar Pradesh, Haryana, Punjab, Delhi, Northern India, and in the southern parts they're focusing on Karnataka and Telangana. In terms of its international presence, the company has presence in over 30 plus countries, but the revenue contribution right now is restricted to that 5% mark. In terms of the SKU mix, family packs contribute to around 57% of the total business, and impulse pack is around 40.6 or 41% odd there. So that's with regards to the mix in terms of SKU. The network, there are around 3,26,000 plus outlets that the company has, and store counts right now are around 15 in the core plus focus markets. In terms of the overall capacity for the company, Bhujia has around 57,600 metric ton of capacity, Namkeen with 1,41,000 metric ton, packet sweets around 62,000, Western snacks at 39,300, Papad with around 11,400 metric ton capacity, and that sums up to overall capacity of 3,25,000 tons. So that's the overall view of, in fact, the whole and soul of Bikaji Foods that one needs to know about.
Okay, so that's how we're looking at the company. Let's look at the key metrics now, and in terms of, okay, so those are some segments as well. Mahima, you want to cull that out?
Sure. So in terms of the overall segments, you know, ethnic snacks, this is of course as to where the Q1 FY26 numbers stand. Ethnic snacks grew around 11%, packet sweets grew around 3%, Western snacks grew around 4%, and Papad grew around 5.8%. So growth has been faster in terms of where the Papad segment stands. This quarter, Western snacks has slightly seen, you know, a lesser growth as compared to where it was in earlier quarters in double digits per se. So that's one question that we need to you know, ask the management as well. In terms of the core markets performance, that grew around 8.5%, focus markets grew 11.5%, other markets grew around 26.5%. We need to know as to what these other markets are that, you know, that's growing faster in, even better than the focus markets as well. And exports grew almost 61%, though a very small chunk, but has seen a significant amount of growth. So an outlook there also, you know, is something that you know, the management needs to answer. All right, so that's with regards to where the overall segmental and core market and focus market performance stands.
Yeah, but you know, if we can pull out that core versus focus in terms of revenue mix, when you're looking at that, somewhere you're starting to build in a risk that the focus market, or rather the core market, is a very heavily reliant market for Bikaji Foods. Around 72% of the top line comes from there.
Correct.
Let's pull up the mix, actually, the revenue mix in about the company. So 72.5% comes from there. And these are, of course, your core markets. Outside of that, when you're looking at focus, it's a much smaller pie. So focus markets is as you correctly mentioned, is just around 13%. The others is what is 9%, which has contributed substantially in terms of growth, at least this quarter.
Correct.
So again, something we should try and understand as to what's playing out and how quickly does this mix change, how quickly does this wheel that we're seeing change, because the focus on the core is just so large.
Correct.
It creates a large risk for the company. So that's the other piece I'd want to know. So, but let's go across. Let's understand the key metrics where Bikaji Foods is concerned. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, valuations and street coverage. So we'll cover all 8. I'll allow Mahima to, as usual, take the lead with regard to income statement.
Right. So income statement overall, you know, it's a thumbs up because it's been a good growth for the company in the past 3 odd years. If you take a look at the overall revenue CAGR, that's been around 18%. The overall EBITDA CAGR has also been around that 33% mark, and net profits have shown a growth of 37%. Margin trajectory overall, where it stood in FY22, that's improved to around 13%, but the margins have taken a hit as compared to where they were in FY24 at 17% to around 13% in FY25. But this is largely because of the kind of inflation that the entire edible oil space has seen. So raw material inflation is something that is impacting the margins overall. So margin trajectory has been slightly on a negative note when it comes to comparison with FY24. But overall, from an FY22 perspective, it's been a good growth. In terms of where the Q1 numbers stand, Revenue growth at 14%, EBITDA growth at 5%, margins from that 16% mark to 14.7% mark, and net profit up 3%. Volume growth has been good this quarter for Bikaji, so that was something which stood out for me, which was at 7.5%, and this is because Q4 was not very good for the company, but this quarter they've done well in terms of the volume growth. So that's with regards to where Harsh, the overall income statement picture stands. So it's a good growth in terms of where the 3-year performance has been. So it's a thumbs up.
Just the one concern possibly is what you correctly pointed out. FY24 to FY25 the margins have fallen. FY24 the profit after tax number was 265 crore. FY25 it's come to below 200 crore. So that contraction in profit after tax is not looking good. It's obviously a concern. How much will it bounce back and what will that inch up be? Will we exceed FY24 levels? What's your sense?
I mean, it will all depend on, overall how this raw material prices impact plays out, first thing. Secondly, as I was mentioning earlier also, there has been a duty cut in edible oils. So that will probably play a positive role and have a better impact on PAT overall. But the other factor is that ad
Sorry,
spends...
when will that translate? Will that translate
That will
Q2?
transfer from Q2 itself. Start translating from Q2 itself because they might have some inventory in place already.
Sure.
The third aspect is, I think they are also going big on ad spends. So that is something that is also overall impacting your bottom line numbers. So we'll have to see as to how the trajectory of ad spends also go, because they've been onboarding a good a lot of personalities on board to keep their advertising spends going up, plus social media marketing also is on the card. So that is something that might impact the profitability. But overall, I think considering the duty cut and inflation slowing down is going to be positive for the company.
Point taken. Let's switch over to the balance sheet. Again, not looking bad. Mind you, the company has a market capitalization of around 20,000 crore. You look at the equity plus the reserves, you're looking at a even sub 1500 crore kind of book value. The borrowing number, of course, looking fairly okay from book value standpoint, even more so comfortable from a market cap standpoint. And when you're looking at the cash and bank balances, also there is enough comfort available. Clear thumbs up where the balance sheet is concerned. Cash flow, Mahima.
So cash flow overall, cash flow from operations have slightly slid when you compare it to FY24 numbers. But it's been, in the same range at where it was in FY23 per se. But in terms of the cash flow to the overall EBITDA percentage, that has come down, from that 80% mark in FY23 to almost 59%. So that is something, which is on the negative side of things. And taking a conservative approach there, we've given it a neutral rating here. Net cash flow from operation overall at 7 crores in FY25, although that has also slid quite significantly from that FY23 number. So that is also a bit of concerning part, and that is why we've given it a neutral rating for now.
Yeah, inventory as well as some amount of build-up over there, working capital build-up, that's contributing to that slightly tepid cash flow number versus the EBITDA. My guess is that's just the nature of the business as well, something to keep in mind. Return ratios, let's quickly look at those, and fairly healthy, but fluctuating. So that's something you want to keep in mind. The return ratio was is in the late teens broadly. 1 year of blip or so, but broadly it's in the late teens. We've given this a thumbs up as well. Shareholding, Mahima.
Right, so pretty well held company, it's there is skin in the game. Promoters holding almost 75% of the total company. FIs have increased their stake over a period of time from the 3% mark to 7% in FY25. DIs have also steadily increased their stake in the counter from 10% to 12%. Public shareholding, however, has come down from the 10% mark to around 5% mark. But number of shareholders overall has gone up from that 83,000 mark to almost 1,44,000 mark. And of course, this is in terms of where the in thousands number. But overall, it's a well-held company. DI steadily increasing their stake. FIs increasing their stake, almost doubled in the past 3 odd years. So we've given it a thumbs up when it comes to the shareholding pattern.
Okay, let's look at street cred therefore. And when you're looking at the last 1 year or so, it's been largely range bound. We've given that a neutral, but the last 3 years since listing, it's done fairly well for itself, 2.5x in terms of shareholder returns, so very strong. And therefore, kind of nullifying each other over the longer term, it's done fairly well for itself. We've given this a neutral. But valuations.
Right, so valuations, what we've done here is we've compared it to the likes of Gopal Snacks as well as ADF Foods, which are the like-for-like competitors for Bikaji Foods. And in terms of the overall valuations, 1 year forward 26 plus 2 year forward 27, both look expensive when compared to peers. Gopal Snacks trading nearly half at where Bikaji is trading at. Similarly, ADF Foods trading much below than where overall Bikaji Foods is trading at. So valuations look expensive. Plus the 5-year average PE for Bikaji Foods has been around 41 times. So the forward valuations are looking much more expensive as compared to the 5-year average PE as well. So we've given it a thumbs down when it comes to the valuations part of the business.
Well, you have to consider that. Let's look at analyst recommendations now. 7 buy calls, no holds, no sells. Return potential though just 4%. That's reflecting with the kind of valuation that it's getting. So of course, largely looking priced in terms of the 12-month performance. We've given this one a neutral as well, since there is so much conviction, but just not enough upside there. So we've left it at that. Let's bring on board the management. Manoj Verma, CEO Bikaji Foods, and Rishabh Jain, CFO Bikaji Foods, joining us. Mr. Verma, let me start with you. Let me try and understand the outlook with regard to raw material costs and pricing. One, how much is it going to improve starting Q2? What's the visibility now looking like with regard to raw material costs? Second, how confident are you of that 32.5% kind of gross margin and 15% kind of EBITDA margin? What's the sense? Give us that perspective.
Thank you, Harsh. So for doing such a great analysis, I have seen the analysis the last 10 minutes. So you've done a great job.
Thank you.
So from margin perspective, you see last 2 years, so we listed in November 22, and in third quarter of last year, due to edible oil increase, tax rate increase by government during peak festivity, edible prices increased to a substantial level. It is close to 60-70% rise in quarter 3. So our EBITDA and gross margin impacted in quarter 3, but you've seen last 2 quarters, we again turn around the company. And overall margin from gross margin after EBITDA has been, this quarter has been the highest in last 6-7 quarters. So from that lens, we are very much confident that that 32% is sustainable for us in this year. And from EBITDA lens, we are close to 14.5-15%, very much sustainable. So we are confident about this.
Hi, Mahima also joining in. Always a pleasure speaking with you. Just want to get your sense on the trajectory of the raw material pricing that Harsh was talking about. There's positives that has come in. The custom duty impact of 10 from that 20% to 10% mark, that should positively aid your margins. Just want to get a sense there. And there's also easing of inflation when it comes to the palm oil prices. What is your sense? Where do you think the margins will go at? Let's say by the end of FY26 or FY27, give us a range of where you're seeing the margins to be like.
So in last 6 months, we've seen good cool off in prices of each raw material, like all pulses and all. Of course, in edible oil also, we've seen good reduction in prices after import duty reduction. So we see that our gross margin EBITDA will be in the range of 30-33%. Gross margin after EBITDA will be in the range of 15% at the year end. That's what we see. We will also majorly focus on volume growth and overall top line growth and fund the growth. That's what our major focus is. So our EBITDA target is around 15% in the year. That's the target.
Mr. Verma, let me come to you with regard to growth. 72% of your top line comes from the core market. How much of a shift in strategy has played out in terms of focusing on the focused markets, and what about other markets, because that one has just grown extremely well, at least in this quarter. Give us what's happened, what's the outlook, and what is the medium-term trajectory you see in terms of top-line breakup?
Yeah, so our focus states is grown ahead of the core states, right? And that's what was a part of our strategy. Talking about other states, so while we call them as other states, but by no ways are they under-focused states for us. The only change, the only difference in the strategy of go-to-market is that in those states, we drive through modern trade, new age, e-com, and the other channels basically. So that's where is the trading model, and which is doing very well. Modern trade is doing extremely well for us, and those are the states where modern trade, say, like, let's say a state like Maharashtra, Gujarat, which are very high on modern trade stuff, and we have by far higher share in those states. So by virtue of these channels, we are doing extremely well. Also, the bases are relatively low, so therefore these growth looks better in that state.
Okay, so I take your point, and therefore how should, sir, the mix evolve? Because currently the reliance on your core is very, very large. You've always intended to shift away from the core. How quickly does that happen? Give us that perspective.
So Harsh, one is I would want to correct that it was never shifting from core to focus, because these are our most profitable states too, right? So they will continue to be our core and our utmost focus for us. But yes, from strategy and in terms of our route to market, coverage, reach, and all. So let me share some numbers with you. So in these core states, we are available in upwards of 800,000 outlets, just 3 states, right? Whereas when we talk about focus states, our presence is about 275,000 outlets. That's where we are in these 6 states. And the rest of other states in all put together is about 150,000 outlets. So the drive, what we are doing in terms of increasing our reach, availability, that's what is part of our strategy and the go-to-market phase, what we do.
Interesting. Rishabh, in terms of your international business, what is the kind of strategy in place that you have? It's been a growing business for you, although 5% of revenues right now, because there are a lot of opportunities out there. There's UK FTA that's in favor of India, plus your competitors are already going into that ready-to-eat segment and going big when it comes to exporting, overall. There's Tasty Bites, ADF Foods, all of them doing that. Do you also want to go ahead and, foray into that segment? One question. And international business expansion, what are the plans looking like?
So we are also very much focused on growing export market, and we see great potential in growing this, because you will see last year we acquired one company named Ariba. They are mainly into frozen, ready to eat, ready to cook. And we also had set up one plant in Bikaji, that's frozen sweets. So we see great potential in export. Frozen part is a big category, and we see great potential in doing this. And you'll see the numbers in this year also.
Varma, does growth rebound sharply for you, and how much of the cost pass-through goes through this year? Give us that perspective. Give us the knock-on effect on margin. So top-line growth, margin, what should those numbers be for FY26?
So from top-line lens, we have targeted close to 15 to 16% growth from top-line lens. That's what our major focus is. With volume of 10, 11%, upper of 10%, that's a target we are taking. And from EBITDA lens, of course, overall 15% EBITDA, that's a target we are taking, and we are on track of achieving the same.
Okay, Mr. Varma, a quick question on competition. How is it looking like? It's not just, the organized space, it's also the unorganized space in the snacking segment that could probably impact. And plus there is healthy snacks, which is picked up so much. Just want to get your sense there. Is there market shares that are, that are being pared away? Is that anything that you've observed there?
Yeah, so talking about unorganized, for this category, unorganized sector plays a big role. And even today, if we look at, it's about 40% of this stationery business is still unorganized. So they will definitely have a role to play. But more importantly, what we have seen is that in last few quarters, the local and regional players, or more importantly, local players have emerged and they've done well. So that's where the challenge is. And we as a company, large player, so we have to fight both, the top leaders and also the small players there. So that's the shift what we have seen. So ₹5 price point has done very well, in terms of category if we look at.
Rishabh, give our viewers maybe a 3-year lens into what we can expect from a Bikaji in terms of performance. You've given us FY26. Give us the 3-year picture, because in no way, from a valuation standpoint, does the stock trade cheap. And I'm not alluding to the fact that there is no potential, but I'm trying to understand from you what the 3-year runway is, so that investors who are already invested in Bikaji or looking to can see that, can have that visibility? What's that number looking like?
So we have just completed our capex cycles. Currently, we are at close to 50% utilization. Our major focus is to drive growth and volume growth. That's a major focus. So we see that at least we should grow at least 15-16% year on year for next 3-4 years. That's a target.
And maintaining that 15% kind of margin on all of that growth.
Of course, yes.
Got it. Mr. Verma, Rishabh, it's been a pleasure. Thank you so much for joining us this morning and giving us all of that to take home with us. But that's all the time we have on KYC. Before we wind up, let's quickly look at and stack up the ratings for Bikaji Foods. In terms of the start, 4 parameters were really robust. They were solid, good performance, cash flow. I want to quickly mark out, we've given it a neutral, but largely par for the course. That's just the way the business is done. And overall, you get a 5.5 on 8. Valuations were a thumbs down. That's something you want to look out for. 5.5 on 8 on the KYC ratings on Bikaji Foods. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Powered.
Benchmarks under pressure, Nifty below 25,100, while Sensex loses almost 400 points. All sectors barring pharma trade in the red. And it's Nestle that reported a mixed set of numbers for the first quarter. Revenue rises 6%, but net profit sees a dip on a yearly standalone basis. A mixed bag of earnings for the IT pack as well. Infosys sees a revenue beat, while Coforge is an all-round beat as well. IEX shares down 24%, a big setback for power exchange as the electricity regulator has approved what are called market coupling norms in the day-ahead market. And ED has raided nearly 50 sites linked to Anil Ambani in 3,000 crore rupees Yes Bank loan fraud probe as well. The searches follow 2 FIRs registered by the CBI. Good afternoon, you're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at how the markets are doing. Let's take a look at the Nifty first things first, and not doing all that much in terms of the Nifty holding up above that 25,000 level regardless. Let's take a look at the list of sectors, and from within the sectors, you have IT, Realty, FMCG, Energy on the back foot. In fact, most sectors, barring a couple of sectors, Auto and Pharma, are holding on to a tinge of red as we speak. Let's take a look at the list of top losers from within the Nifty 50 pack as well. Of course, you do have select few shares, the likes of Eternal from the Nifty 50 pack, lots of buzzers as well that you have holding on to a tinge of green, but it's Nestle that's on the back foot. We'll talk about this in a little bit more. Trent as well, Shriram Finance, Tech Mahindra, Hero MotoCorp down anywhere between 2 to 5%. Other than that, you also have a whole set of gainers as well. You have Eternal that is gaining about 2.5%. Yesterday, of course, you did have the stock gaining about 11%. Towards the end of the trade also, you had that stock, in fact, closing in the green, holding on to some of those gains as well. That's Eternal for you. Dr. Reddy's Labs as well after its numbers. That one is in focus and up about 2.5% as we speak. Tata Motors also up. Tata Consumer, Apollo Hospital, Geo Financial Services, Cipla are your other set of gainers as well. So that's what you're looking at from within the list of gainers. Let's also take a look at some other gainers as well, because you do have a whole host of stocks that are buzzing away in trade. So you have a Gravita India, a Rainbow Children's Hospital, Ipca Labs as well, and Capri Global. Those are some of your other gainers as well. And in terms of the list of losers from within the Nifty 500 pack, you also have Coforge, Persistent, on the back foot. The IT sector, in fact, is on the back foot. And speaking of being on the back foot, you also have Nestle. That's the one to watch out for on the back of that update coming in for the first quarter. Of course, you have elevated commodity prices that impacted the quarter. But tell you what, let's also take a look at the more trouble that you have brewing for Anil Ambani, because you do have ED conducting raids at his Mumbai and Delhi premises. In fact, Vishwanath is joining in with the latest on this one.
Right. So what seems to be happening is that an investigation is ongoing, a search operation is ongoing, and at multiple locations, 35 premises, 50 companies, and over 25 people are being investigated as part of these search operations by the Enforcement Directorate. At the center is a loan diversion case where Yes Bank had extended 3,000 crore worth of loans to Anil Ambani Group companies, and then this money was then diverted out of the system through shell companies and other group companies. Now, what sources are telling us about this investigation is that the Enforcement Directorate has found, as part of its preliminary investigation, found that this money was given without clear approvals, without clear processes being followed for these loans. And then, of course, some bribe was also paid to the former Yes Bank promoter, Rana Kapoor. This was between the years of 2017 and 2019. So right before the loan was sanctioned by the bank, some money was paid out to Rana Kapoor. And then after that, of course, this money was immediately transferred to other accounts and then diverted out of the system. According to what sources are telling us, the EDS found that these were pre-planned and well-oiled machinery that was at work to ensure that this money was being transported out of the system and banks were being duped. Actually, we have with us Sriram Subramaniam, who's joining us on this conversation. Sriram, welcome. I wanted to get a sense of the timeline of this case, right? The investigation is on about cases between 2017 and 2019 where money was being pulled out of the system and being siphoned out into other accounts. Just tell us a little bit about what our viewers should be expecting from such an investigation.
Good afternoon. I think the investigation agencies, by delaying for so many years, them do not do justice to what should be have been investigated many years earlier itself. Whether there was a diversion of funds, etc. Yes Bank is a very old case. It was well known. So why everyone would be thinking as to why ED is searching now, and especially there is purported revival of the ADAG group companies, which is Reliance Infra and Reliance Power companies. Yes, recently SBI, that is the State Bank of India, has classified the ADAG group as fraud account, and even other public sector banks have classified it as fraud accounts. So to that extent, I think there is diversion of funds to the promoter entities. The funds were not utilized for the purposes they were intended for, and it is not just Yes Bank, it is other banks also which have had this issue of diversion of funds. So from that perspective, it's a well-known case. Only issue is what were the investigating agencies doing for so long and why now? That merits the question.
Shreya, my question again to you is the way in which this money has allegedly been diverted, right? I mean, so the classical case of moving it to group companies and then to shell companies and then out of the system, this is something that we've seen in a lot of other cases as well. I mean, from a corporate governance point of view, just tell us, who is at the end of the day responsible for these actions that are going on?
Definitely the buck stops at the promoter, and then obviously the promoter and the senior management at the companies. There is no, I would say, whistleblower, or there is no accountability. The board is just yes men or yes women out there who just sort of sign off on whatever loans have been granted or whatever funds have been diverted to the promoter group companies. And eventually, one default leads to a cascading effect where even a cash-rich company, like it happened with Mr. Vijay Mallya's company, where Kingfisher was the bleeding company, and McDowell's, which was a cash-rich company, sort of ended up losing that asset. So from that perspective, of course, the infrastructure sectors where ADAG Group is prominent has been a very tough play in the last 10, 15 years. So from that perspective, whenever ADAG Group diverted funds, it has obviously had the knock-on effect of debilitating all the group companies.
I also wanted to get a sense from you, some of the points that are measured here is that no proper documentation of loans was done, no due diligence was done on the borrowers. A lot of the borrowers had common addresses, common directors, diversion of funds by the promoter group entities, evergreening of past loans. I'm just trying to understand, is this commonplace when it comes to corporate fraud or corporate misdeeds as such?
Yes, I mean, see, obviously, ADAG Group thought of any funds which come their way as the promoter's funds. So irrespective of the company, the delineation of the end use of the funds, even if the funds were sanctioned to set up a power projects, probably they diverted it for some other business, etc. And even probably enrichment of the promoter themselves. Two is Yes Bank itself was a very pliant bank. It itself had its corporate governance issues, and it was a fraud bank, and the promoter and probably a drink or even a dinner, they would have probably sanctioned loans, and everything was hunky-dory till the going was good. And then Yes Bank obviously had went down, and subsequent rescue, etc. But these cases should have been investigated pronto. I mean, in that sense, it was known in 2017-18 itself. So why, after 5-6 years, is the ED raiding and trying to investigate? That's a question.
Okay, that's a fair question, and I wanted to ask you about the bank side of the story as well. Yes Bank 2020 went through severe pain. The whole bank had to be reconstructed. A new set of investors had to be brought in, and Reliance group of companies of Anil Ambani are only one set of companies that were involved in this situation. And a lot of other companies as well, like for example DHFL, there were also investigations conducted on those loans as well. I'm just trying to understand from a bank point of view, when you have a situation like this, how do you sort of coincide the entire governance structure at these corporates, but also governance structure at banks?
Yes, definitely governance structure at the bank is also important, because there's a credit sanction committee, and the committee should function independent of the promoter of the bank. That was not the case with Yes Bank. So to that extent, the Corporate Governance Act, Yes Bank was lacking. Two is RBI oversight was also probably lax, and the numbers that Yes Bank reported to RBI in terms of NPA recognition and other metrics were fairly misleading. Even Yes Bank continued to show higher and higher profits to investors and shareholders, but at the end of the day, their revenue recognition or their asset recognition was totally incorrect, because they engaged in evergreening of loans. Their fee income was always high because they sanctioned dubious loans, etc., etc.
Right. Sriram, thank you so much for joining us and taking us through all of these pointers. Sriram Subramanian from InGovern speaking there. Shreyansi, important sort of developments that are happening as far as your situation with the Yes Bank and Reliance are concerned. Reliance group of companies under Anil Ambani. I just want to make that very, very clear. But the developments are quite startling. If you are going through 35 premises, 50 companies, it's a very wide-ranging.
The figure that you're looking at, it's a big number. Yeah. It's a big number of the premises that they're raiding as well. That's a very important development coming in. And in fact, the word that you have coming in from Sriram Subramaniam is that he's talking about how this should have been investigated earlier, in fact 5 years ago, is exactly what he said. Tell you what, let's also go across to my colleague Paras Dama, who's standing right outside Ballard Estate, which houses Anil Ambani's Reliance Center office. Paras, what are you picking up?
Rightly said. I just want to clarify first, this whole raid has been conducted by Delhi ED team, and the 3 to 4 officers has been inside from the morning, and they are doing a search operation in this entire matter. There are 30 to 40 locations where this raid and search operation is ongoing. I'll just tell you the backgrounder of this entire case. What is it? It's Reliance Anil Ambani Group companies suspected of money laundering of rupees 3,000 crore. The Enforcement Directorate, which is investing in a major money laundering case in the country, has taken a major action today. The case is related to the companies of Reliance Anil Ambani. The ED suspect that these companies defrauded bank and common investor, and illegal transaction of about rupees 3,000 crore were made. This whole case started after the 2 FIR were registered by CBI. After this, ED started this investigation in the entire scam. Many agencies helped in the investigation, including the like National Housing Bank, SEBI, National Financial Report Authorities, and and many others. The thing that came into light in the initial investigation of ED are shocking. It is being told that under a well-planned conspiracy, the money was diverted by devastating bank shareholders and common investors. So this is a major breakthrough right now. We can see that there is a suspicion of 3,000 crore rupees of fraud in this entire matter, and from morning the Delhi ED team is continuously raiding and searching in different locations. In Bazaar estate area of the town area, and you can see this is the Reliance Center office, where from morning there are 3 to 4 ED officers which are there, and they are doing their search operation. It will be very interesting to see what will come out in this entire matter, because the raids are continuously on different places in Mumbai also, Delhi also, and other part of the country also.
And this is a very important story, Paris. Thank you so much for getting us all of these details. When it comes to this search operation, very important one, and we'll trust you to get us more details later as well. But let's move on. Let's take a look at Nestle, because that particular counter is down, taking it on the chin after the set of results that was reported. So despite steady top-line growth, you do have Nestle India that faced margin headwinds in the first quarter. Revenue, in fact, rose about 6% thereabout on a year-on-year basis, largely in line with expectations. In fact, we have Mahima joining in with the earnings fine print.
Right. So overall, EBITDA as well as revenue is largely in line with what the street was expecting, but both margins as well as PAT did in fact miss the street estimates by quite a bit. The expectation was that the overall PAT will come at around 751 odd crores, but it came at around 659 crores. Margins were expected to be at the 23.1% mark, but they've come at around 21.6% mark. And this is the story of every FMCG company reporting its number. We saw Tata Consumer as well shrinking margins by quite a bit, and that's the story with Nestle as well. But the important factor here is that we'll have to find out as to when these margins will recover. Overall, margins have been impacted by elevated commodity prices that has impacted this quarter. Higher operating cost due to significant manufacturing expansions also overall impacted the bottom line, and increased finance costs from temporary cash flow borrowing has also impacted the bottom line. In terms of the growth drivers, confectionery category saw a double-digit growth is what the press release says. This growth was driven by robust volume increase. Urban markets grew. Now this is something new, because till now we've been hearing that urban markets have remained tepid, but urban markets have grown because of demand rise. So the benefits of tax cuts, the benefits of rate cuts and 8-pay commissions are already flowing in as per what Nestle is saying. 7 out of 12 top brands have achieved double-digit growth for them. E-commerce has maintained its growth momentum. E-commerce contributing almost 12.5% to the overall business. But overall, if we see, because of the margins taking a tanking in a net profit number, which was not something that was expected to come at this low a number, is the reason why the stock is tanking so much in trade today. And Shreyanshi, it's almost trading at its day's low point, and that's the reason, that's the whole and soul of how Q1 has panned out for Nestle.
Well, absolutely, whole and soul of how Q1 has fared out, and it doesn't look like the stock is taking it lightly, taking it on the chin as we speak as well. But it's a big setback for power exchange IEX as well. In fact, that particular counter is down about 26% in trade. So we're talking about India Energy Exchange. You do have the electricity regulator that has approved what are called market coupling norms in the day-ahead market. What this essentially means is that IEX stands to lose its dominant position as the leading platform for power prices and delivery. In fact, we have Varsha standing by with an update on this one.
Yes, thank you so much for that. In fact, investors have lost more than 3,300 crores of money today. Well, the biggest moat, for IEX was benefit of price discovery on their platform. And IEX was known for its efficient price discovery mechanism, which is a key advantage to participants. So this was the biggest moat for the company, which won't be there now, and that's the reason you're seeing 26% of downtick when it comes to IEX. Now, why this is negative for IEX? Because market coupling, if you see, for day ahead starts Jan 2026, and power exchanges like IEX will no longer compete on price discovery, and common algorithm will determine the best price. What is market coupling? Now here aggregates buyer and sell orders from all the power exchanges, and this discovers a single uniform market clearing price. Now, why this is negative for IEX? Because this reduces IEX pricing power and competitive advantage, and IEX will rotate as a market coupling operator with the other exchanges, and this dilutes IEX current market share or market dominance, I would say. Market coupling can shift volumes to other exchange platforms or to the competitive exchanges, and the IEX has a market share of almost 85% when it comes to the spot market. Now, what are the next steps ahead? So, real-time market and term ahead market coupling will follow, and Grid India will develop software and conduct a 3-month pilot for term ahead market. Now, overall, because of that loss of moat that IEX had, now no more moat for IEX, and this is the reason you're seeing 26% downtick when it comes to the counter.
Well, absolutely a big downtick there, losses to the tune of about 3,000 crore rupees for the investors as well. In fact, we also caught up with Rupesh Sankhe, who's the Senior Vice President Research at Elara Capital. He talks about how this is going to be chipping away at the market share for the particular company as well. Let's go across and listen in.
Clearly, it's very, very negative for IEX, because if you look at their DAM volumes, which is close to 50% of their overall volumes, and this market coupling will start with the DAM product, and eventually it will end up with the RTM and other TAM market also. And if you look at the overall market share there for IEX is close to 99%. So clearly now the role of IEX is just like a traders. So price discovery, everything will happen at the grid controller levels. So clearly, I think there is a complete change in the business model, and the kind of multiple IEX we are getting because of monopoly kind of business, we'll see significant derating on the earning side also, PE multiple side. At the same time, we'll see the significant fall in the volumes, because when the two exchanges launch TAM product, the market share there come down to close to 40%. So similar kind of volume market share losses could be there from FY27 onwards.
All right, then losses to the tune of about 4,300 crores for the investors, as you can see on your screens as well. But let's move on. Lots to take stock of when it comes to the IT pack as well, because you do have Infosys. That's the one that reported an inline set of numbers. Coforge also missed its estimates in a steady set. As far as Persistent is concerned, Puneet is standing by with the update.
Well, with Infosys earnings out, we've seen the large cap IT earnings complete, and we're seeing some key trends visible in all 6 results. So the first key trend is, of course, Infosys, which is a clear winner on overall parameters in the large cap space for Q1 of FY26 within the IT sector. We've also seen that the deal wins for someone like a Wipro was a key positive surprise. Market also rewarded the stock on the day of the result as well. But overall, the lower end of the guidance for something like a Infosys as well as HCL Tech was inched up in this particular quarter, and that's the third key trend that we're seeing. So we are not seeing the upper end being revised because of the uncertain environment for all the IT players as well. The fourth key trend that we are seeing is the healthcare performance, and this segment is weak across the board for the large cap, but also for the mid-cap companies as well, and that will be one of the key ones to watch out for going forward. BFSI and the banking space has been the key growth parameter and is expected to be one of the major sectors for FY26 for all IT companies. That's the fifth key trend. And finally, a margin impact was visible in this quarter. Most companies either maintained margin or saw a dip in margins in this quarter for all IT companies. So these are the 6 key trends. When you look at the large cap players in terms of constant currency growth, Infosys is the only one reporting a major increase in constant currency revenue growth of 2.6%. Someone like an LTIMindtree also reported an increase, but just 0.8%, while the others reported negative growth in terms of constant currency. In terms of deal wins as well, Infosys was a standout at 3.8 billion versus 2.6 billion in the last quarter, while someone like a Wipro as well continuing its positive momentum of over $5 billion in terms of deals. And finally, in terms of margins, we also saw, as visible on your screen, the margins were also largely flat in this particular quarter. finally, what should you look forward going forward for the IT players? Now, essentially, the growth is more done by cost takeout deals rather than transformative deals for all companies within the IT space. The second trend we're seeing is that AI-driven opportunities are still small and not contributing to revenue in a bigger way, but have started to, have been requested by its clients. And finally, brokerages have also largely tweaked some of its estimates slightly on the downside for at least this year, but are hoping for a broader recovery in H2.
Other than that entire pack is on the back foot. That's the IT pack that I'm talking about. Persistent down about 7.5%, and Coforge also down about 9% as we speak. But tell you what, Puneet, stay with us. Tell us about Force Motors as well, because that particular counter is buzzing away in trade gains to the tune of about 10% coming in for this one.
Well, Force Motors is in focus after the company reported a very strong set of earnings for Q1. When you look at the four numbers, revenue is up 22% in this particular quarter. EBITDA margins as well has inched up over 130 basis points to come at 14.5%, while profits as well have gone up by over 52% to come in at 176 crores. Now, just for some context, Force Motors is, a manufacturer of commercial vehicles, including school buses as well as ambulances. It also manufactures engines for the likes of BMW as well as Mercedes. So it has been operational for the last 2 to 3 decades, and now seeing and having its moment in the sun. Essentially, in terms of this quarter, we saw the sales grow by 26%, and that's led by its key models, which are the Traveller, the Urbania as well as the Trax model as well. Apart from that, we also saw management change. The board of directors have approved the appointment of Anshul Saxena in the senior management team. Anshul Saxena has been responsible and has been designated as the vice president of corporate strategy and will be leading the company's efforts within long-term strategic planning as well as initiatives. So it's a key appointment, and we've seen the stock fly from the morning highs as well and continuously inching up. The valuations will be something to watch out for, but with no analyst coverage, the stock has been flying over the last 6 to 8 months on the back of strong operational performance seen in the last year or so, and definitely rewarding investors as well.
Well, absolutely, Puneet, and a continuation of that is something that we're seeing at this point in time as well. Double-digit gains coming in for Force Motors. But tell you what, with all that in mind, that's all the time that we have on this show. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to Profit Buzzers. I'm your host Anushi Vakharia and with me is Varsha Chandranani. Varsha, you know, it's definitely all the stocks playing out that effect that we are looking at in terms of the earnings. We've seen a couple of misses in terms of the recent earnings that have come. Even Nestle, if we see it's down under pressure. In fact, you know, let's take a check at the benchmark indices to see how they are faring currently. Now, in terms of how the Nifty 50 is doing, it's down about 0.6%. Did see some recovery from the day's low point of the day that we are looking at the mark of 25,000 is what we are looking at. Sensex mirroring those moves of Nifty 50 that we are looking at. But let's look at Nifty Bank as well. Nifty Bank, if you are seeing also under pressure, is what we are seeing, down about 0.5% as well. Let's see the point contribution table to get a sense of which are the stocks pulling down the index. So in terms of where the point contribution table is concerned, Reliance, HDFC Bank, you see the two heavyweights under pressure. Infosys seeing that front in terms of where the Q1 numbers came out of the company. Trend also the other stock under pressure as well. While what is currently working out is Eternal, it is up over 13 points is what we are looking at. Tata Motors, another stock, and this is buzzing on the back of the India-UK FTA trade deal that we are looking at. Geo Financial Services also in the green is what we are seeing. But let's take a deeper look as well in terms of the Nifty 50 heat map. So what we are seeing here currently, the Nifty 50 heat map is Eternal right at the top, up over 2.9%. In fact, Tata Motors up about 1.6%, Geo Financial, Cipla seeing gains of around 1% as well, while Nestle is down about 4%. And of course, it's the earnings impact that we are looking at. It did miss the estimates in terms of where the street coverage was concerned. Trend also facing that bit of a brunt. So you are looking all of these consumption FMCG plays down in trade today. Tata Motors also reacting on the back of the numbers, seeing cuts of over 3%. In terms of margins, we did see some bit of that pressure coming in because of higher tea prices playing into effect, but the management remains positive on the overall commentary in terms of whether H2 would pan out for the company. So that's in terms of where we are looking at in terms of the Nifty 50 heat map, but let's take a check at the sectors also to see how they are faring currently. So what we are seeing currently in terms of the sectors, Nifty Healthcare is the top gaining sector, followed by Nifty Pharma as well. Both of these indices seeing gains of over 0.8 to 0.9%. Nifty Metal also seeing that slight bit of an uptick, while Nifty Auto flat in the green is what we are seeing, but it's Nifty IT which is under pressure. It's almost down about 2% in trade currently, and this is the impact that we are looking at after the results of Infosys, Persistent, Coforge as well. Nifty Realty continuing on a downward trajectory. The index was almost down about 3 to 4% in trade yesterday, and today also we are seeing cuts of around 1% in this index as well. In terms of how the market is shaping up currently in terms of the advanced decline ratio, the advances, if we are seeing about 788, which is almost of the half the size that we are looking at decline. So market seeing some bit of that pressure. It's the declines which is outpowering the advances that we are seeing. But Varsha, talk to us about the broader markets as well, how they are faring currently.
Yes, so a lot of stocks are moving on. These are based on news flows, I would say.
Right.
But let's see what Nifty Midcap 150 is doing. Is down almost 0.39%. Let's see what Small Cap 250 is doing. It's down almost 0.5%. Let's pull up BSE 500 chart. Let's see what counters are doing. You have Rainbow Children, which is up 5.76%. You have 197, which is up 4.88%. Ipca Lab, Samvardhana, Capri Global, Raris and Eternal are actually moving up when it comes to BSE 500. Let's see what the losers. IEX is the top loser, for the day on the back of market coupling. You have Coforge, Persistence are also under pressure. Nestle is under pressure on the back of earnings, Q1 earnings that we saw. MGL, Godfrey Phillips and Leighton Few are some of the counters which are under pressure. But let's invite our guest for the day, who is Raghvendra Kedia, who is founder of Prosperity Advisors. Hi Raghvendra, welcome to the show. Always pleasure to have you. Just wanted to have your view on markets, considering a lot of news flows today. You have IEX, then Nestle came out with its numbers. IT Pack also, some of the counters are under pressure. So overall, what is your view on the overall market and some of the counters?
Good afternoon, Varsha. So let me start with the market view first. Broadly, we believe that Nifty would trade in a range-bound fashion, and it would, if at all, be like a seesaw movement where we see 24,500 on the downside and 26,000 on the upside. So if you look broadly between 24,500 and 26,000, it's a 1,500 point index move. But in terms of percentage, that's only a 6% range. So we believe that we are in the center of the range, and there is no big trigger or concern in the days ahead. So a range-bound movement for the market in the days ahead. Specific to these counters, where we believe that, yes, since there is no sectoral leadership or any particular sector outperforming, we believe it is a stock-specific cherry-picking market, and a significant dip like what we have in IEX today would be looked upon positively as buying opportunities, but more for a trading perspective, for a 8 to 12% trading upside rather than a long-term investment horizon. So any significant dips can be taken as entry-level opportunities, and IEX also is no exception. We look at positively for trading point of view in this market for at least 6 to 9 months ahead.
Thank you so much, Raghvendra, for that view. But IEX, as you were speaking, it's under pressure. I think it's down 26%. There you go, 26%. Now this is on the back of a market coupling, which is gonna expected from Jan 2026. Now the biggest mode for IEX was, to discover the price on the platform, and IEX was known for its efficient price discovery mechanism, which is a key advantage for participants. And now power exchanges like IEX will no longer compete on price discovery, and common algorithm will determine the best price. Now, why it is negative for IEX? Because this reduces the IEX pricing power and competitive advantage, and IEX will rotate as market coupling operator with other exchanges, and this dilutes IEX current market dominance, and because of this market coupling, volume can shift to the competitive exchanges as well. As IEX has a market share of around 85% when it comes to spot market. So overall, yes, a negative, very negative when it comes to IEX, and that's the reason we are seeing the stock is under pressure. In fact, we spoke to Rupesh Sankhe, who is the Senior Vice President Research of Elara Capital. Let's see what he has to say.
Clearly, it's very, very negative for IEX, because if you look at their DAM volumes, which is close to 50% of their overall volumes, and this market coupling will start with the DAM product, and eventually it will end up with the RTM and other TAM market also. And if you look at the overall market share there for IEX is close to 99%. So clearly now the role of IEX is just like a traders. So price discovery, everything will happen at the grid controller levels. So clearly, I think there is a complete change in the business model, and the kind of multiple IEX we are getting because of monopoly kind of business, we'll see significant derating on the earning side also, PE multiple side. At the same time, we'll see the significant fall in the volumes, because when the two exchanges launch TAM product, the market share there come down to close to 40%. So similar kind of volume market share losses could be there from FY27 onwards.
Well, Raghavendra, you just said that you are positive when it comes to IEX. Wanted to know the reasons for the same, because the fundamental has been changed, and people are saying that the numbers that were expected in FY27, FY28, we won't get that numbers as well when it comes to EPS and profitability. But any reason that you give a buy recommendation when it comes to IEX?
So, Varsha, what has not changed for IEX is it's a platform-based business. What has remained same is it's an asset-light model. What continues to be the case is it's a debt-free company. So these fundamental valuation comforts in terms of asset-light model, platform-based business, a debt-free company, they continue to attract us towards this stock for a longer time horizon. Now, yes, the dominance from a market share of around 90% would come down, but that was sooner or later going to happen. Across the world, if you see any exchanges, it's actually a duopoly or a triopoly kind of sector where there are only 2 or 3 dominant players, and there is no room for even a third or a fourth player. So broadly, in the years ahead, we see that with this new regulatory change starting 2026, there would be a duopoly in the market. IEX will lose its edge, but they would significantly be the largest market share in terms of volume, considering their existing base in terms of and the first mover advantage. So we look at IEX from a point where it is trading at 140 rupees, and this regulatory change will actually be functional from 2026, and in a best case scenario, how badly it will impact. So at 140 levels of IEX, we are attracted to this price, considering a 15% pop or 15% upside in a 6-month horizon. We believe that at current levels, it is attractively placed for a trading entry.
Very interesting view coming there from Raghavendra, and that's on IEX that we're looking at. The stock down about 26% in trade today, but lots to take stock from the IT pack as well. Now, if you look at Infosys, they have reported in line sort of numbers, while Coforge did miss its estimates when it comes to margins. And for Persistent, we did see a steady set, but the stock is down as well. 6% of cuts is what we are looking at. Puneet is standing by with updates on all of these IT names that we're seeing.
Well, with Infosys earnings out, we've seen the large cap IT earnings complete, and we're seeing some key trends visible in all 6 results. So the first key trend is, of course, Infosys, which is a clear winner on overall parameters. in the large cap space for Q1 of FY26 within the IT sector. We've also seen that the deal wins for someone like a Wipro was a key positive surprise. Market also rewarded, the stock on the day of the result as well. But overall, the lower end of the guidance for something like a Infosys as well as HCL Tech was inched up in this particular quarter, and that's the third key trend that we're seeing. So we are not seeing the upper end being revised because of the uncertain environment for all the IT players as well. The fourth key trend that we are seeing is the healthcare performance, and this segment is weak across the board for the large cap, but also for the mid cap companies as well, and that will be one of the key ones to watch out for going forward. BFSI and the banking space has been the key growth parameter and is expected to be one of the major sectors for FY26 for all IT companies. That's the fifth key trend. And finally, a margin impact was visible in this quarter. Most companies the maintained margin or saw a dip in margins in this quarter for all IT companies. So these are the six key trends. When you look at the large cap players in terms of constant currency growth, Infosys is the only one reporting a major increase in constant currency revenue growth of 2.6%. Someone like an LTIMindtree also reported an increase, but just 0.8%, while the others reported negative growth in terms of constant currency. In terms of deal wins as well, Infosys was a standout at 3.8 billion versus 2.6 billion in the last quarter, while someone like a Wipro as well continuing its positive momentum of over $5 billion in terms of deals. And finally, in terms of margins, we also saw, as visible on your screen, the margins were also largely flat in this particular quarter. Finally, what should you look forward going forward for the IT players? Now, essentially, the growth is more done by cost takeout deals rather than transformative deals for all companies within the IT space. The second trend we're seeing is that AI-driven opportunities are still small and not contributing to revenue in a bigger way, but have started to, have been requested by its clients. And finally, brokerages have also largely tweaked some of its estimates slightly on the downside for at least this year, but are hoping for a broader recovery in H2.
Well, thank you for that breakdown, Puneet. In fact, we spoke to Sudhir Singh, CEO of Coforge, and Persistent Systems CEO Sandeep Kalra as well about the quarter gone by and the outlook going forward. Listen in.
Our sequential dollar growth, and this is sequential dollar growth, has been 9.8%. The CC growth that you talked about has been 8%, and as you rightly said, organic CC growth itself has been around 6%. So the growth numbers have been fantastic. On margins, EBIT, we've been very, very clear. The numbers we're talking about are EBIT margins, not EBITDA margins. EBITDA margins have jumped 61 bips sequentially. EBIT margin again has gone up. And the very clear guidance we've given for the current year is that EBIT, reported EBIT, is going to be 14% for Coforge in fiscal year 26 itself. That's going to be a big, strong jump at a time when growth is set, as you can see from our numbers, to be extremely robust in FY26.
There are two parts to it. One is, the effort required right now to close this is inordinate. And that's where, if you look at many of our peers who have come out in the industry, their revenue growths are tepid, their bookings are, some are doing well, some are not necessarily. And I would tend to believe that for the like-to-like effort, the results are not necessarily at the same level. It takes a lot more effort in this economy to deliver the 3.3% constant currency, the 3.8% otherwise. And all I'm saying is, for the same thing, the effort required may come down. And yeah, if we can close more, absolutely will. In the past, we have had many years where, we have had even 35% growth year on year. So I'm not giving any forward-looking guidance. All I'm trying to say is, market is tough, effort is more. Market becomes lesser tough, things should be even better.
Okay, so that's the global picture also that the CEO pointed out of what we are seeing in the IT space happening. But Raghavendra, coming to you, two-part question. Firstly on Coforge and just the numbers that we are seeing for Persistent Systems. Firstly, do you see this kind of reaction that's happening with that stock prices? Is that warranted? Because if we look at the constant currency growth as well, now they were on the stronger side that we're looking. And the second part is, now we have these mid-cap earnings and large-cap earnings of the major companies out in the IT space. What is your overall assessment of the space that we're looking at?
So let me start with the positive view or positive answer first. Broadly, we do like mid-cap IT space, and Coforge continues to remain our top pick. considering their margin remains slightly positive, and it is better than peers across the overall IT industry. At 1700 levels, we believe there is still a good 15% price upside in Coforge if you hold it for a 1-year investment horizon. So we are looking for a price target of around 1950 to 2000 in Coforge for a 1-year horizon. What also works for Coforge is their takeover and merger with Syngene, which we expect to be in the timeline of around 4 to 7 months from here on. So that also will be a positive catalyst in the quarters ahead. So Coforge, we are having a bullish view and a bullish undercurrent to continue in this price. It looks attractive. Now moving on the overall IT space, we believe that the rupee strength versus the US dollar will actually will augur negatively and have a price correction impact on the overall IT space. There have been not any impressive order wins from the geography of Europe, and that might continue to hurt and remain so for the large cap and mid cap IT space, with order wins not so attractive, impressive from the Europe geography. Even the US geography, if there are not any significant order wins, that would impact the revenues. So broadly, with no great catalyst or positive trigger lined up, we would avoid any large cap IT names and have a very cautious to avoid wait and watch approach to the IT industry. But across large cap and mid cap, Coforge remains our top pick for a 15% upside at current levels.
Right. Thank you so much for that view, Raghavendra. Well, Dr. Reddy's is in focus today. Let's see what that counter is doing. It's up almost 2.73%. Now, in fact, if you see the numbers were not that good. They did not meet their estimates. So, just talking about the key takeaways, and then we'll move why the stock is up, in spite of delivering not good numbers. So there was a miss due to weaker than estimate North America performance. North America business was down 11%, which was led by Revlimid, that is cancer product pricing erosion, and India business was up 11%. Now this was due to new launches and pricing. Also margin decline that you're seeing is due to higher generic price erosion, and they're expecting a ramp up in biosimilar business, which should reflect from FY28. But still, if you see, the stock is up because they're going to launch the generic version of Wegovy, which is a semaglutide or your anti-diabetic or weight loss medicine in 87 countries, and that's the reason the announcement of this is what leading to surge in the stock price. They're going to plan to launch this generic version in 87 countries next year, and the target markets include Canada, India, Brazil and Turkey, and US and Europe launches is expected later between 2029 and 2033. The market opportunity, the global obesity market to reach almost $150 billion sales by 2030, and they are anticipating hundreds of millions of dollars in sales from generic drug, and this is the reason why the stock is up. In fact, I caught up with MV Ramana, who is the CEO of Branded Markets of India and Emerging Markets of Dr. Reddy's. Listen in to what he had to say. Mr. Ramana, welcome to the show. Pleasure to have you. Just, I'll start with the US business first. So we saw a decline of almost 11% in US revenues on the back of pricing erosion when it comes to, Revlimid. What is the outlook for US for the whole year, that is FY26?
Sure. So what you saw is something that we had expected, which is pricing pressure around the generic Revlimid and also some of our base products. However, as we go along, we do expect to see that we would be in the US flat, maybe slight amount of growth. But overall, the company also has been able to deliver on a double-digit growth. This is thanks to the rest of the businesses, whether it is India, emerging markets, Europe, PSCI, all growing well. And as we go along, these businesses are expected to contribute to the rest of the year as well.
Got that point, sir. Also, you've launched 5 new products in US. Just wanted to know, when can you see the ramp up of those 5 products?
So we launch products normally about 15 to 20 products in the US. Normally they do have a ramp up. The first products that we launch in the quarter ramp up over the next few quarters, and then you have some of them that we launched in the last year that will start to show the growth in the current year. So this is something that is normal in the US, and we expect that ramp up to also contribute to improving the growth in the US.
Well, that was, Dr. Reddy talking about the US business. Raghavendra, though US business is down 11% and, they're expecting flat US business for the full year. How are you seeing this counter? Because though the stock is up because of the semaglutide launch that they are expecting, but overall, if you see the numbers did miss estimates. So, do you track this counter, and how are you seeing this?
So we do track and believe that at levels of 1280, the stock trades at around P multiple of around 25. And if you see the price to earning multiple of the overall large cap pharma names, the P multiple comes at around 45. So it is, in terms of valuation, very attractive. And there is a good catch-up play in terms of P for DRL to happen. We do believe that though the US overall growth looks plateaued or flat, but there has a significant ramp up in the biosimilar business, and which the management is very confident would continue for the next 2 to 4 quarters. So biosimilar business ramp up will actually increase their margins, considering the margin expansion would happen in that particular business vertical. We also believe that overall the exports continue to be steady. So though there is a slowdown or no significant growth from the US geography, it could actually continue well from Europe and overall APAC region, which would offset if there is any downside in the US numbers. So overall at 1280, we believe that considering a valuation comfort and a catch-up play in terms of price to earning, there is a 20% upside in DRL for a 1-year investment horizon. And we are looking at a price target of 1550, 1550 for a DRL in a 1-year investment horizon, and believe that the bullish undercurrent would continue.
Very optimistic view that we are seeing for Dr. Reddy's coming there from Raghavendra. But let's shift focus to the auto space. Now, Tata Motors is set to be a key beneficiary from the India-UK FTA deal that we are looking at. In fact, the stock is up almost 2%. Puneet joins in with more details on this one.
Well, thank you for that. So the India-UK FTA deal was approved a few weeks ago, but we are seeing the contours of it coming now. We have seen that India has already inked the FTA with UK, which has been in the works for almost a decade. Now, the interesting part is that there will be some key aspect and key sectors that will be in focus, because it is expected that nearly 99% of the products and Indian exports to the UK will enjoy zero tariffs. What's also interesting is what is imported in India from the UK, and that's where Tata Motors could be in focus. We've seen the company and the counter being active over the last few days. Largely, currently, Tata Motors has its factories in the UK as well as in Slovakia, which manufactures the Jaguar and Land Rover brand. This is, imported in India via 2 models. One is a completely built unit, which is the whole car being manufactured in its factories in UK and imported directly in India. This attracts a 70 to 100% import duty as of now. This is expected to have some reduction because of this FTA. While we don't know the exact percentage, it is expected to come in somewhere between 40 and 50%, but we'll wait for the final contours of this. The other one is a completely knocked down unit, where essentially, in very simple terms, is the parts that are imported in India and then put together that attract 15% duty, and that'll be the other key benefit if that sees a reduction as well. So it could see a reduction. We have the results in the first week of August, so more details on that, but largely could be a benefit in the auto space.
Okay, Puneet, also talk to us about Force Motors. Now, this is also a stock which is gaining traction today. Now, it's up almost at the levels of 14% now, and this is on the back of the first quarter results also that we are looking at. Talk to us about this one as well.
Well, it's a stellar set of earnings, because we've seen almost a 20% growth in the company's revenue in this particular quarter. EBITDA is up 33%, and because of strong operating leverage, the profits has bumped up by 52%, and this does not have any kind of exceptional item impacting the profits positively. So this is pure business fundamentals which is doing very well. In terms of sales in Q1, it was up 26%. That's fueled by multiple growth sectors for the company. The Urbania has been doing very well, as well as the Traveler and Trax models. Now, just to give some context, Force Motors is manufactures commercial vehicles, including school buses as well as trucks and ambulances. So we're seeing all these three verticals fire, and Urbania is the urban vehicle which is used for 8 to 10 people. So we're seeing that kind of benefit and sale of that particular model, high average selling prices, and definitely a benefit. There was also one key announcement that they made. Board of Directors have approved the appointment of Anshul Saxena in the senior management team, and he's also been designated as the Vice President of Corporate Strategy. So it'll be interesting to see, because he has experience of over 19 years in the field. So that's another key benefit. But the stock flying in trade today on the back of Q1 earnings.
Right. Thank you so much, Puneet, for all the details. Well, Raghavendra, what are your views, when it comes to both the counters, like, Tata Motors and of course Force?
So Tata Motors, we are bullish at current levels. It's a great play across commercial vehicles as well as passenger vehicles. If you see the overall PE of Tata Motors, it trades at around 9 to 10 price to earning ratio, which is significantly less, or rather 1/3 versus its peers of Mahindra and Mahindra, Maruti or Hyundai, where trading at P multiples of around 30. So there is a significant comfort in terms of Tata Motors at 700 levels from a P angle. Now, the demerger of the CV and the PV business will also augur well as a positive catalyst in the months ahead. Plus, it's a global play in terms of sales coming from China and Europe and India. So if any one geography comes for a slowdown, that is offsetted by another geography. So at 700, we are very bullish on Tata Motors and believe that this should be taken as a core portfolio stock. This is a great opportunity. Entry levels are attractive. So Tata Motors with good corporate governance is a buy at 700 levels for a 1-year horizon and can be your core portfolio stock for the quarters ahead. Moving on to Force Motors, we believe that the positives are already factored in the price in terms of a new senior management coming in, Urbania doing very well. There has been significant ramp up in margins and revenue across different models. So at current price of Force Motors, we would not go for a fresh entry. If someone is holding, continue to hold, but we would actually wait and watch for any price correction. But we do like the company. Right. But there has significant run up, so it's a wait and watch on Force Motors.
Okay, so that's the view that we are seeing for Tata Motors and Force Motors, so do keep that on your radar as well. But it's time that we slip into a short break. Lots more lined up on the other side, an interesting set of managements as well, so do stay tuned in.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has.
Benchmarks under pressure, Nifty below 25,100 while Sensex loses more than 500 points.
Nestle reports a mixed set of numbers for the first quarter. Revenue rises 6% but net profit sees a dip on a yearly standalone basis.
A mixed bag of earnings for the IT pack as well. Infosys sees a revenue beat while Coforge is an all-round miss that we're looking in terms of margins.
IEX shares down 24%, a big setback for power exchange as the electricity regulator has approved walled market coupling norms in the day-ahead market.
ED raids nearly 50 sites linked to Anil Ambani in rupees 3,000 crore US bank loan fraud. The searches follow 2 FIRs registered by the CBI. Hello and welcome back. You're watching Profit Buzzers. Now the big story of the day that we just spoke earlier is about IEX. Now a big setback is what we are looking for power exchange, especially IEX, as the electricity regulator has approved what are called market coupling norms in the day ahead market. What this means is that IEX stands to lose its dominant position on the leading platform for power prices and delivery. To discuss now we are joined by Manoj Jawar, CMD of PTC Industries, is what we are saying. Firstly, welcome to the show, Mr. Jawar. My first question to you is about this new market coupling norms that we are looking at. How is this expected to benefit you?
You see, I mean, what is meant by market coupling, I hope the audience would understand. But in nutshell, it means that a buyer and a seller in a spot contract in the power market can place the bid on any exchange, and the bids from all the exchanges would be consolidated and a collective single price will be discovered for market clearing. So that is what is meant by collective segment and market coupling. Currently what is happening that in the collective segment, which is the DAM and the RTM segment, all the volume is concentrated only in one exchange, which was IEX. Now with this market coupling, what will happen that any buyer or a seller would be able to place his bid on an exchange of his choice rather than out of compulsion, because earlier, before this market coupling, all the volumes were concentrated in one exchange because that was the dominant exchange and it was only able to provide the liquidity. So people would naturally go where liquidity is. So any new buyer or a new seller, he could not have gone to any other exchange but the IEX, so that his bid gets cleared in the collective segment. Now with the market coupling, that barrier is removed, and because of that, I believe now all the three power exchanges operating in the country would have a fair chance of winning the consumer confidence based on services they provide.
Hi Mr. Jawar, Varsha this side, pleasure to have you. I just wanted to ask you that without market coupling, what was the market share, and in the next 6 months, where do you see the market share to go up?
Currently, practically in the collective segment, entire volume is going to one exchange only, which is IEX. So practically more than 99.5% share is with the IEX. Almost all share, you can say, practically. Very sporadic bid, one bid or two bid in a month here and there, nothing else. So practically current market share is 0. But yes, with the coupling thing, now all the exchanges would have to compete on the basis of services, their reach, and whatever their offerings are towards the constituents, which are the buyers and the sellers. So whosoever is able to win that service game would be able to grab a market share. I believe it would be reasonable to assume that we will strive to achieve at least 1/3 of the market share.
Okay, Mr. Jawar, you hold about 22% of stake in HPX. You said that you will have about 1/3 of share going ahead. Can you just tell us about the timeline and what is the current market share that you have?
Current market share, I just told you, it is practically nothing. In the collective segment, it is 100% IEX and no one else. So currently, current market share is 0. Now, we would definitely want it to grow because this important barrier of everyone being compelled to go to the dominant exchange due to liquidity is removed and market coupling has happened. So now exchanges would have to compete on services, and I believe there we would have an edge. So we would definitely wish to aspire at least grab 1/3 of the market share. Let us say in 1 to 2 years time is fine.
Right, got that. Also, Mr. Jawar, so this is in the day ahead market. Now, when this is expected to come for RTM market, any view on that?
RTM market is roughly half the size of the day ahead market. But as and when that comes, that is again likely to benefit all other competing exchanges as well. So I think this is a very right and positive trajectory for other competing exchanges.
That's the outlook that we are seeing. Also, just wanted to understand the kind of, your business outlook in terms of the performance, the revenue metrics. What's the kind of picture that you see ahead for this one?
Currently, you see in the DAM segment, which is mandated to be given this coupling from going from January 26. So in the collective segment, the previous year's volumes were around 80 billion units. So that roughly translates into a trading margin of around 240 crore rupees. All of that was basically concentrated only in one exchange. All other exchanges were at 0. So whosoever is able to compete in that market and grab a share would be essentially, if the market remains static, which it is not, it is growing. So if it is growing, the growing market as well as ability to capture the market share. So you can do the math.
Right, and also Mr. Jawar, so my last question to you would be, do you see any chance of this rule getting challenged or reversed?
I don't see. I think a due process has been followed by the Commission. All the stakeholders have been consulted duly. And I believe it is a move which would benefit all the constituents. That is the buyers and the sellers and the ultimate consumers. So this is likely to benefit them. So I don't see that.
Right. Well, thank you so much, Mr. Jawar, for answering all the questions. It was a pleasure to have you.
Right, sir. Thank you.
Well, the next stock which is in focus is Sky Gold, and this is on the back of Q4 numbers. Well, we have Mahima with us, to just get us a sense on how were the numbers when it comes to Q1 FY26 for Sky Gold?
Right. So, stellar set of quarter for sure when it comes to Sky Gold. Revenue saw a growth of 56%, EBITDA saw a growth of almost 91%. Margins did take a jump of from 5.2 to around 6.3%, and net profit almost doubled to 43 crores from 21 crore mark. In terms of the overall additions, also in terms of new clients, good set of clients added. Indria added, Cat Lane added, as well as Pothys and Vega also being added. Plus, the revenue split right now stands at around 12% export and 88% domestic. Volumes also has gone up in terms of kg per month, gone to almost 456 in terms of number. But to discuss as to how the quarter has panned out and how the future is shaping up for the company, we're joined by Mangesh Chauhan, MD of Sky Gold, joining us now. Mr. Chauhan, hi, a very good afternoon to you. Always a pleasure speaking to you. Just want to get your sense on what has kind of spurred the growth that you've seen in this quarter, because one factor is of course the gold prices that have constantly been on the rise, but overall what's that gap been like in terms of volume versus value growth?
So again, we have done a good growth year on year. You can see by 40-45%, and we have done a fundraise last year only. We have infused capital in both the subsidiaries and the parent company, and we have come up with new products and new design in 22 carat. And again, we launched 18 carat rose gold, white gold jewelry, all these, and studded jewelry also. So all these have driven our sales in volume also, and the value also. So again, we have added new large corporate clients in last 3 quarters, and we have added mid corporates also, those who have 15 to 20 stores, those who have 3 to 5 stores, added those clients also. So we have mixedly gained the revenue from all the clients. So all the clients are opening the stores by 30% run rate, and we are gaining the share. We are selling the inventory in the new store also, and we are supplying the inventory to the old store also. So the quarter was very decent and good. And again, in the current quarter, Diwali season's order, Navratri and all will come in this quarter also. So customer faith has gained in the gold jewelry because of the rates have tripled in 6 years. Customer gained 3 times profit in 6 years. Before COVID, those who have bought for 30-35,000, they are getting 1 lakh rupees per month. So customer faith is gained very much in the gold jewelry, and the demand for the jewelry is good. Again, the inventory shift is going on. Lightweight jewelry is gaining the shares. 18 karat jewelry is gaining the shares and all.
My question to you is that from that 56% increase on YOY basis from revenue, how much of that is from rising gold prices versus that of volume growth actually?
So both are blendedly we have gained a share because of the gold rates also, and volume value growth also. Volume growth also year on year is there by 25-30%, and where volume growth is by 40-45%. So both have triggered the sales, earned the volume also and the value also. So both the mix, we have launched 18 karat also, its sale also increased. We have launched studded jewelry also. Its subsidiary has increased the sales. Sparkling chains and Star Mangalsutra both have added the sales to our numbers because they were not last year in the parent company. So blendedly, all have gained the sales.
Margins have improved to that 6.1% mark, 6.3% mark almost. Just want to get your sense. Last 2 odd years, you've been doing, the same margins at 6%. Any scope of improvement there? And if yes, what are the levers that will augur the margin growth?
So 100% this quarter also we have improved our EBITDA margin and PAT margin because of the advanced gold business we are increasing. So new clients we onboarded, we are driving, boosting the advanced gold business. We are onboarding new customer advanced gold business company models. We are onboarding them, and we are expecting this year the advanced gold business to come up at 7.5% and next year at 10%. So this advanced gold business will increase our EBITDA and gross margin both. And again, we are launching new lightweight featherlight jewelry. We have reduced the weight by 20-25% by using the 3D printers and all, which will help us to because in lightweight jewelry margins are better. So number of pieces are increasing again. Inventory shift is going on. Weights are changing, but again, fancy and lightweight jewelry are gaining the shares, and we'll gain the shares from both. Launching the new varieties, new verticals and new design, and again from the advanced gold business, we will improve our working capital cycle also and improve the EBITDA and gross margin.
Okay, Mr. Chauhan, one last question, before I let you go. The Sky Gold 2.0 is aiming at an enterprise value of 7,600. That, I believe, is your top line growth that you're aiming at. You ended FY25 with almost 4,000 crore, but what you're aiming at in the next 2 odd years is doubling the revenues. I just want to get your sense as to where this kind of growth will be coming in from, because, of course, you're onboarding new clients. There's capacity expansions that is on the card, which you'll be funding through the new the funds that you've raised. Just want to get your sense on, what will be the growth levers that will almost double the revenue from here on?
So again, you can see our facility at 0.5 utilization. We have the facility, we can go up to 100% in 2 years. So there is no challenge for facility. We have already developed the facility. You can see there is a huge shift of unorganized market to organized. There is a huge 9 lakh, 10 lakh crore unorganized market shifting to organized. Organized market is at 35%, unorganized is 60%, 65%. So as per data, in 5 years time, the huge shift is going on from unorganized to organized market, which will help us to drive this sales. Again, our clients are opening stores at a 30% run rate. Somebody is opening at 40% run rate. You can see in 2 years of span of time, 2,500 new stores are coming in the market. So that will help us to drive our sales because we will be supplying the inventory to the new opening stores also and increase our sale in the old stores also in the corporate. So there is a huge shift of unorganized to organized. That is helping the market to boost up very much. And again, we are onboarded we are into every huge corporate in the India, and we are supplying to them, and they are expanding their stores drastically because their stores are performing very well in the opening of the first month and second month. They are in the profitable business. So that will help us to boost our sales.
Okay, Mr. Chauhan, thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much.
Anushi, interesting numbers, but the stock is not enthused by that. It's down 5% as we speak, and this is because the stock has already seen a significant run up in the past few odd weeks, and that's probably one of the reasons as to why it's locked in lower circuit today.
Absolutely, and the guidance also that you was giving was very strong. But let me take this across to our guest as well to understand. You just spoke about the rally which is there. Thanks, Mahima, in fact, for joining this conversation. So we have Osho Krishnan with us, who's the Chief Manager of Technical and Derivative Research of Angel One. Osho, what's your view on something like a Sky Gold?
Very good afternoon to all of you. Well, technically, this counter have seen a very strong vertical rally from the zone of nearly 2-digit 40-50 zone towards 400 kind of a zone in a very vertical manner. And from there onwards, we are witnessing a quarter-on-quarter basis. The counter is into a cooling phase, or that on technical front, we can say that it is on a time-wise correction phase, which is going on in this counter. So I expect that with the kind of consolidation this counter is having, technically it is showcasing a support approximately around the zone of 285 to 290. That I am expecting to be a very crucial support, because if there will be any fall down below 285, then we can see a further correction in this counter. But I expect that it should not get breached below 285. While on the higher end, the resistance is placed around the zone of 350 to 360. So that is also a very crucial zone, and until it witnesses a very strong breakthrough, till that time this counter is likely to hover in a broader range of 70-80 points.
Okay, so those are the levels that you should be watching out for Sky Gold. But now let's shift focus to Nestle India. Now we just saw that its earnings came out, and when we look at the margins, now they were a disappointment. While if you look at the revenue growth, that was majorly in line. But to give us a deeper sense of analysis on this, Mahima, talk to us about how the earnings were.
Right. So Anushi, as you rightly mentioned, revenue and EBITDA was largely in line with what the street was expecting, but margins and PAT saw a sharp dip, and that's the reason as to why we are seeing the stock also tanking in trade today, almost trading at its day's low point. Now, a couple of things that have not worked. Elevated commodity prices impacted the overall quarter. Higher operating costs because of manufacturing expansion is also one of the reasons that has impacted the overall bottom line. The expectation was that it will be flat in terms of bottom line, but it's come down around 10%. Now, in terms of the positive side of things, e-commerce has seen a good growth. The strong momentum has continued. The revenue contribution right now is almost 12.5% of overall revenues from e-commerce. Urban markets grew during the quarter because of rise in demand. This is something that we have not heard from any other FMCG companies that have come out with their earnings so far. So that's a new thing that the management has pointed out. For them, 7 out of 12 of the top brands grew in double digits. And the significant part here and important to note is that Mr. Suresh Narayanan did step down and has retired, and Manish Tiwari will be appointed as the chairman and MD with effect from 1st of August. In terms of the overall growth drivers going forward, confectionery category did see a double-digit growth, and that will continue. Overall volume growth has been around that 2 to 3% mark. In terms of the overall urban markets, the commentary that's come in from the management is positive. So this is the overall view, Anushi, as to how Nestle has done this quarter. But I think it's the margin downtick and PAT downtick that the street is not liking, and which is why we're seeing the downtick in stock.
Absolutely. Thanks for that, Mahima. So that's the picture that we are seeing for Nestle India. The stock down almost 5% in trade right now. Osho, your view on Nestle India?
See, overall, again, the FMCG counter have started gaining some traction in the recent period, and with the earning season, Nestle India is witnessing some kind of correction from the higher levels. But looking at the technical setup in the current financial year, then again it is on a positive note because it has regained its strength from a very strong support zone of nearly 2200. So I expect that downside is there, but it is limited towards the zone of 2200. So that should be seen as a buying opportunity if it further aggravates towards a correction zone towards 2200. While on the higher end, on a medium term perspective, I expect that there will be a gradual up movement that can be seen in this counter. Gradually, I am expecting that initially 2450, 2500 will be the first resistance zone, which is the immediate high. And once it breaches the zone, then we can see a movement towards the zone of 2650 to 2700. So for now, there can be a correction of further 100, 150 points of downside, but from those levels, one can look for buying opportunity in the counter.
Right. Thank you so much, Osho, for that view. Well, moving on, Thyrocare and DAM Capital are in focus now. This is after posting their Q1 earnings. Vansh joins us with more details on that. Vansh, tell us more details when it comes to Thyrocare and DAM Capital.
Yeah, so let me start off with Thyrocare first. Now the company has come up with a set of numbers. There has been a best YOY profit growth in at least the last 3 financial years, and there has been a strong revenue uptick of 23%, and the margins for the company have remained steady sequentially. If we talk about the numbers, the revenue is up 23% and the EBITDA is up 35%, while the margins are at 29.9% versus 27.2%, and the net profit is up 61% at 38.9 crores versus 24.2 crores. And second one on the list is DAM Capital. Now the company has reported set of numbers. The finance cost has surged partly due to the new office premises that they have come up, and the total expenses has increased by 10% on a sequential basis. And the merchant banking, this is important to note that the merchant banking revenue has declined 44% on sequential basis, and the total income has declined by 15% on a sequential basis. If we talk about the numbers, the revenue is down 15%, EBITDA is down 54%, and the margins are down at 19.5% versus 36%. And the net profit is down 97%. So clearly these are the muted numbers that the market is penciling in for DAM Capital.
Right. Well, thank you so much, Vansh, for all the details. Well, Osho, let me come to you on both the stocks, DAM Capital and Thyrocare. Good set of numbers when it comes to Thyrocare. What are your views? How the charts are looking?
See, both the counters are having very vice versa kind of a technical setup. Firstly, for DAM Capitals, this counter is into a very strong corrective phase and it is hovering below all its exponential moving average. So I expect that technically, until it surpasses the zone of 280 on a sustainable manner, there can be some further downside restricted to the counter. So better to stay sidelines from DAM Capital. While on the other hand, Thyrocare is looking very positive. It has given a very strong breakout and the counter was already into a very strong secular uptrend. So I expect that although for the recent or for a very short-term perspective, there has been very strong deviation from the short-term moving average, but that should fizzle out in the coming period. Overall, the technical setup is very strong. And I expect that on the short-term perspective, 1350, 1360 will be the first immediate hurdle for short-term traders, but nothing to worry about because even if there will be some kind of profit booking towards the zone of 1200, 1240, that should be seen as buying opportunity for the counter from short to medium term time frame.
Okay, thank you so much, Osho, for joining and sharing that perspective that we are seeing. But before we quickly move to the next story, we have ACC numbers flashing on the screen. Now we are looking at 18% of a growth in terms of where the revenue is concerned. EBITDA is up over 23%, while margins, if you look at, has seen an uptick as well at 12.1% as compared to 11.6%, and net profit seeing over a 4% of a growth. Now currently what we are looking at in terms of the stock price, it's down about 1%. So that's the kind of picture that we are seeing for ACC first quarter earnings. But now we have a special set of previews as well. So what we are looking at is SBI Life and Bajaj Finance. They are all set to announce their first quarter numbers. But before we talk about that, let's go across to Mahima, who will be talking about the stocks which are in focus on the back of the India-UK FTA deal that we are looking at.
Right. So, a couple of sectors that will benefit from this US-India FTA deal, and the first sector that we're focusing on is textiles. The tariffs were as high as 12% in UK, which has come down to 0. Duty-free access in UK markets will be available to a lot of these players, and that will provide a level playing field. This will, help India compete against markets like Bangladesh, Pakistan, Cambodia. Stocks that could benefit probably from this includes Welspun, Trident, KPR, Pearl Global, as well as Gokuldas and Arvind Limited. Now, footwear tariff is eliminated from 16% to 0%. FTA is projected to add around 5% to UK market, so footwear counters could benefit. In terms of agri, a lot of agri commodities like turmeric, pepper, cardamom, mango pulp, pickles, etc. Will enjoy duty-free access. Zero duty on 95% of these agri commodities is there, and this could benefit counters like Tasty Bites, ADF Foods, etc. Marine exports, again, zero duty access to all of these exporters. So counters that could benefit include Coastal Corp, Apex Frozen, Avanti Feeds, etc. Engineering goods also tariff elimination was as high as 18%, and now there is no tariff on it. So counters that could benefit include Thermax, Cummins India, Greaves Cotton, as well as ABB India. Lastly, chemical companies like Gujarat Fluorochem, Balaji Amines, Naveen Fluorine, etc. could also benefit. Some gold exporters, jewelry exporters could also benefit from this, and some pharma names could also benefit because of streamlining of regulatory process in the generic drugs. So this is the overall view and sectors in stock that could benefit from the UK FTA trade deal.
Okay, thank you so much for that, Mahima. So that's all that we are seeing on this edition of Profit Buzzers, but stay tuned to NDTV Profit. Lots more lined up on the other side.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome to Profit Top Trades. I am Puneet Zaveri. With me is Soumit today, and over the next half an hour or so, we'll get you some key results that are out right now. Also get you some more perspective on a bunch of stocks. But first, let's go across and address ECC results. They've just come in on the exchanges, and numbers largely look in line. It's come in a growth of about 18% in terms of revenue at 6,036 crores. This is versus 5,113 crores in the same time last year. The number of 6,000 crores is, it's actually much ahead of the estimate that we were working with of about 5,718 crores. So it's definitely a strong number in terms of revenue. Let's also quickly pull up the EBITDA as well. That's the other one. It's up 22% to come in at 727 crores versus 593 crores in the same time last year as well. Margins have also come in at 12.21%. This is in comparison with 11.16% in the same time last year. Net profit as a whole has come in at 375 crores versus 360 crores in the same time last year. And that's some key numbers coming in for ACC as well. When you also look at the other couple of aspects in terms of costs, they've largely been slight inch up compared to the same time last year. The power and fuel costs have come in actually lower than last year, 858 crores versus almost about 1,000 crores in the same time last year, while something like a freight and forward expenses, they've also come in at roughly about 1,144 crores versus 1,085 crores. So that's a lowdown of the numbers on ACC. We're still awaiting the press release for the company to get more perspective on the volumes amongst others and what's happened with the EBITDA per ton. But that's largely on ACC as well. But Soumit, there's also another result that's come in right now, which is V-Mart. How did that fare?
Well, a strong set of numbers that has come in from V-Mart in the first quarter of FY26. Revenues have jumped by nearly 13% on a YOY basis. EBITDA jump is nearly 28%. The number has come in at close to 126 crore. Margins have expanded by nearly 200 basis points to close to 14.3%, while net profit number that has jumped nearly 3 times to close to 33.6 crore as against 12.1 crore reported by the company in the previous quarter. Now, as soon as the company reported numbers, the stock jumped nearly 10% in trade. Now it has cooled off a bit. It's up 7%. But if you look at the net profit jump, that is largely because of the fall that we have seen in the finance costs. Finance costs have come down from around 37.5 crore to close to 18.2 crore, and that has largely led this uptick when it comes to the net profit number. Apart from that, the EBITDA growth is largely seen to be on the back of lower cost and higher sales that we have seen, which is actually a strong sign given the fact that the company had not relied on more of discounts for higher sales. So that is also indicated by the fact that the margins of the company have improved on a YOY basis. So overall, a strong set of numbers coming in from V-Mart. in the first quarter. Well, with that, let's welcome in our first guest today for the show, Kushal Mittal, the Joint MD with BCL Industries. Sir, firstly, to start off with, I would want to know how has been the performance when it comes to the biodiesel segment, or what is the kind of outlook that you're looking for the biodiesel segment going forward?
Good afternoon. Thank you for having me on your show. Regarding the biodiesel segment, the company is very optimistic for the biodiesel segment because one, the raw material for the biodiesel will be in-house. So that will be the maize oil that is extracted during our ethanol production, for which we've already commissioned a unit and are successfully extracting this maize oil. And this will be further used to manufacture biodiesel. For biodiesel, we are hoping for a price increase from the government, and we're also awaiting the new tender to be floated for biodiesel, which is yet to be done since our unit was ready. So for now, we've already started extracting this maize oil and are processing it and selling it in the market for other industrial uses. But once the tender is out, we will surely participate in the same. And I think we'll be much ahead of our competition, considering majority of the raw material required for biodiesel production is in-house and is a byproduct of our ethanol production.
Right, sir. So if you could give us some idea on what would be the capacity of this biodiesel segment, how much production are we looking at, and what is the kind of revenue currently that you're getting and revenue growth that you're expecting going forward?
See, biodiesel is a new segment that the company is entering into. So the capacity that has been installed is a 75 KLPD biodiesel plant, which should give us around 225 to 250 odd crores in revenue when working at 100% capacity utilization. We're yet to start the supply of biodiesel.
And any revenue projections that you could share with us for biodiesel?
Yes, at 100% capacity utilization, around 225 to 250 odd crores.
Right. So, Mr. Mittal, it's Puneet this side. Thanks so much for joining and a very good afternoon to you. Somewhere around February, you had mentioned that you won an ethanol supply tender from OMCs as well. Is that largely been completed for you?
Yes, so we have time until October 31st to complete all our ethanol tenders. Our company track record has been 100% since the launch of the ethanol policy in 2018. We've never defaulted on any of our tenders, and we're expecting the same this year.
In terms of expectation of further orders, are you currently in process of applying or any particular order that's already currently on the way, or do you see some more orders coming in terms of tendering process within the space?
Yeah, so just yesterday we have uploaded on the exchange that we've received an confirmation for an order from RSGSM for 59 lakh liters of ENA, which could be further increased. In the past too, we have supplied to RSGSM. They're a big buyer of ENA in our region, and in the past always the order has been increased, and we're expecting the same this time. So that is another major order for ethanol. As I mentioned, our plants are operating at 100% capacity utilization. We have the orders we need for this sugar year. For next year, the tender will be out and we'll surely participate in the same. For our ENA business, besides RSGSM, whatever quantities we wish to sell, they're usually booked at the first week of every month. And based on that, we plan our production. So we have a strong order book on the ENA front as well.
Right. Also, if you could guide us, what is the margin that you're looking for overall FY26, given the fact that you're exiting the low margin edible oil segment?
Yes, see, we're exiting the lower margin business of edible oil, and we've also decreased our debt accordingly. Since the company will now focus morely towards ENA, ethanol, and biodiesel, we expect our margins to surely improve. But it is always a little tough to give a forecast of an entire year, since we are working with commodities that tend to fluctuate in prices. There is fuel, there's grain, there's the price of DDGS, which is always contributing to the margins. So it's tough to give you a figure for the entire year. But yes, with the exit in the edible oil business, our debt has decreased. Our total overheads have significantly decreased. Our new plant is very modernized. So we're expecting a decent improvement in margins as well.
Got that, Mr. Mittal. Thanks so much for joining in, giving us perspective across a whole host of businesses for you. We look forward to our next conversation, but thanks so much for joining in today.
Thank you.
Well, let's look at one of the key other IPOs that will be opening next week. Sri Lotus Developers, a real estate firm, is making waves, backed by Bollywood stars like Shah Rukh Khan as well as Amitabh Bachchan and Ashish Kasholia as well. Now that is hitting the stock market on July 30th. My colleague Charu caught up with Sanjay Jain, CEO, and Anand Pandit, who's the MD of the company. Listen.
For the layman viewers and for the investors who are very excited about the IPO market in general also, what would you like to tell them about the company? So what is the company like, what does it do, and why is it important for the investors?
Lotus Developer is a Mumbai-based real estate company, and right now primary focus is in redevelopment of societies, where we take old societies as our project and construct very high-end luxury buildings. That's what our primary business is. And IPO is aimed to expand our business basically.
So talking about the funds that you will be raising through the IPO, how are you planning on using these funds? How are you planning on utilizing them for the company?
So we have 5 ongoing projects. So out of 792 crore, 550 crore will be utilized for 3 ongoing projects. One in the Versova, one in the Juhu, and one in the Bandra. So these 3 are the Amalfi, Arcadian, and Varun.
So you've listed 3 projects, and other 2 are in the pipeline right now?
So that is already under process, under construction. That is from our internal accrual.
All right. And is there a timeline when these projects will be completed?
So within 2.5 years.
Oh, that's wonderful. Now talking about the value of the company, you also raised funds through private placement last year, I think 8 months back. Yeah. So if we look at the value since then, how do you feel about how it has grown? Because there have been some articles also about it not giving the right returns to the investors. But if you talk about it, how do you think it has grown, and how do you plan on taking it forward?
So first of all, I would clarify, all those investors who invested in private placement, which was in last December and September in 2 tranches, these are very long-term investors. They are not here to make buck out of it. That's one. Second, we want to welcome our new investors also, and our merchant banker also proposed that. And that is how we came with the valuation. And we consider that even our new investors, they are also at par with the old one also, and old one is just 6, 8, 7 months back only, and they are here to be with the company for a much longer time.
So it's a long-term investment. You're not worried about any short-term.
No. We are not a short-term kind of company even, and we are not looking for short-term kind of investors also. They have to grow with the company. And I'm sure that even the new set of investors who will be coming through IPO, they will be also part of our longer journey. Along with the company, they will also prosper.
If you had to quickly summarize what is there in it for the investors, why should they invest? Why should they be excited? What would you like to tell them?
This is a very, very unique company, and our model is very asset-light model. In which, and also we are operating in a very high-end market where we have got good profitability. Our debt is very, very controlled. We don't need to take much debt. And management also is very lean. And we finish our project much faster than typical real estate companies. So we are more like a product company rather than just a project company.
That's wonderful. Sir, if I ask you about it, would you like to tell us how, since you work in luxury units, how is a Mumbai buyer different from any other buyer? What is the unique thing about the Mumbai market?
So Mumbai buyer is the actual user. In the other area of the other countries, other state also, there is the investor. So in the Mumbai, most of the buyers are the actual user.
And
it's
what is the demand like?
More non-speculative market, I would say, because the pricing and product has moved in such a way in Mumbai that those investors has gone off. Earlier, like 20 years back or 15 years back, there were investors. But now this whole Mumbai market is a beautiful actual user market.
And what is the demand like for the product that you are giving out?
We are seeing growing demand, everyday growing demand, because luxury has become part of life now. Whatever product it may be car or watches or house or whatever, clothing or whatever. Everyone wants to move in the pyramid upper side. So we have seen that demand is growing every day.
Well, another stock that remains in focus is Bombay Dyeing. The stock has been buzzing in trade of late. With what could be the rationale behind the same? Let's get in Mahima with all details.
Right, so I'll just give you a brief about what the company does. Basically, it's into manufacturing of polyester stable fiber, which is almost 90% of the total revenues. Plus, there's building real estate business, which is around 6.2%, and there is trading in the textile segment, which is around 3% of the total business. In terms of the overall stock performance, as you rightly mentioned, it's been gaining momentum. Last 1 month, it's been up over 26%, 6 months up 12%. 1 year, it's been down around 19%, but 5 years, it's shown a growth of around 181%. So not been one of those multi-bagger stocks. So overall, in terms of financial performance as well, the sales growth has been a negative 7% in terms of its 3 years CAGR. Profit has seen a growth of around 29% in the past 3 odd years. That's the 3 years CAGR. In terms of the balance sheet health, company has reduced its long-term borrowing from 2,700 crores in FY23 to almost 3 crores in FY25. So that's a positive. Cash positions have been declining, so that's a negative. And FY25 cash position stood at around 99 crores versus that of 479 crores in FY24. So that's the overall view of what Bombay Dyeing does, and of course why it's seeing some momentum in trade today.
Right, thank you Mahima for that. Let's welcome in our guest for the show, Vaibhav Vidwani, Fundamental Research with Bonanza's portfolio. Vaibhav, coming to you on Bombay Dyeing, how are you looking at this counter?
If we see, Bombay Dyeing is trading at a PE of 136, first of all, so stock is already trading at a very expensive valuation, and in future they will increase their exposure into the real estate segment. So I will say that means they have ability to perform in future also, and they have reduced their debts by selling land banks. But I will say that stock is trading at already at a very higher valuation, so we should be little cautious regarding this stock.
But another stock that's in focus is Mukund Limited. Now, stock has soared 18% today after announcing a 673 crore rupee land sale in Thane. Let's get my colleague Anushi to give us more perspective on this. Anushi.
Thanks for that, Puneet. So what we are looking for, Mukund, as you just specified, that the stock did in fact touch a intraday high of 19%, and this is on the back of them executing an agreement for a sale of a land parcel that we are looking in Thane. Overall consideration, if we are looking at, is at the likes of 673 crores. So it's a significant consideration that we are seeing, of which they've already received an advance of around 110 crore. Now, in terms of the stock performance also, while we are seeing strong up moves today in the last 1 month or so, the stock has seen about a 10% of a gain, while on a year-to-date basis, the stock is up over 13%. Just about the company, before we talk about the financial metrics as well, now this was established in 1937, and it is a part of Bikaji Group that we are looking at. Company engaged in manufacturing of special alloy steels, billets, bars, rods, etc. Market cap of this company being around 2,188 crores. So considering that the overall land sale the sale amount that we are looking at is significant. In terms of the FY25 performance, if you are seeing, now the revenue was down about 5%, while EBITDA saw about a downtick of 3%. Margins majorly remained in line at the likes of 6% or also, and net profit, however, saw 27% of a dip. So this is the overall picture that we are building for the stock.
Got that view, Anushri. Thanks so much for that. Vaibhav, coming to you on this counter, is there any view that you have specifically on Mukan Limited?
If we see continuously metal prices were down for FY25, I will say, because of the international crisis. And it is expected that metal prices will be sideways for a while. And this company have delivered a maintained volume for 2 years. So I think so they will utilize this capex for the volume growth in upcoming years. So for a while, I will say that I am quite cautious regarding this stock because they have not shown growth in their volumes to protect their revenue, and metal prices will be sideways for a while.
Right, another stock that remains in focus after delivering a strong Q1 numbers is Ceneris Pharmaceuticals. What led to this 72% jump in the company's revenue? Let's get into Varsha with more details on the same.
Well, thank you so much for that. Another quarter with the robust earnings that the company has shown, and that's the reason why the stock is buzzing. Just to speak on the key highlights of the Q1 FY26, the growth was led by strong growth when it comes to branded generics, which increased 4.5x year on year. Regulated market revenue was up almost 69%. Now regulated market is an important market for the company as it contributes almost 65% to the total revenue. Their own products and CDMO is seeing steady growth according to company, and the emerging markets, if you see, grew 32% year on year, but there was a 21% quarter on quarter decline due to the seasonality or inventory adjustments. They're focusing on complex pharma products for both regulated and emerging markets as well, and they have 24 commercialized products and a pipeline of 57 products. They also has 53 CDMO and CMO projects in various stages of development. Just to speak about the four numbers, if you see, revenue was up 72%, EBITDA was up 60%, EBITDA margins were at 25% versus 26%, and net profit was up almost 94%. Now onto the guidance for FY26. They are expecting 50% of revenue growth when it comes to FY26, and they're going to double the profit in FY26 from 58 crore. So this seems the CDMO projects will come online, and of course the company going into more acquisitions, just like they recently did with the Dr. Reddy's products which they acquire. So more of those acquisitions will actually lead to doubling of profit, which the management is eyeing on for FY26 as a whole.
Right. Vaibhav, any views on this counter? The stock's been up after reporting a stellar set of Q1 numbers. Would you advise investors to buy into this company right now?
Yes, surely we can buy the stock. The reason is that first of all, stock is trading at a very attractive valuation, and they have delivered robust numbers in such market conditions when their competitors are showing the I will say stress numbers. So I'm quite optimistic regarding this stock.
Vaibhav, we leave it at that. Thanks so much for joining in, giving us perspective on a whole host of stocks. But viewers, with that, that's all the time we have on this edition of Profit Top Trades. Stay tuned to NDTV Profit. India Market Close comes up next.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the Hello and welcome. Thanks for joining us here on India Market Close. I'm Harsh Saita. With me is Neeraj Shah. And let's quickly pull up the Nifty. And within that, of course, there's some bit of pain that is visible, 150 points lower. First time when we've seen that kind of a fall, at least this week. So this will certainly feel difficult because we were on road to recovery and we're seeing this little bit of pain. But dominated by earnings is the movement on the stocks on the Nifty, and the heat map will reflect that. Eternal, of course, still perked up 4% today. Dr. Reddy, despite a weak performance by North America, still does well and is in fact aiding the Nifty Pharma Index higher as well. So 2% higher on that one. Tata Consumer also very similar. It's not like the earnings were a resounding success, but you're seeing that stock too perked up 1% on an otherwise difficult day of trade. Nestle justifiably saw 5% lower. The earnings were a miss, and raw material prices continue to pull down some of the numbers. We'll talk about a lot of these things as the show goes by. But that's the texture at this point. Consumption not exactly doing well given Nestle's numbers. That's the theme that's really playing out. Let's pull up the sectoral heat map before I hand it over to Neeraj for broader markets. The PSU banking index is doing fairly well for itself. I'd want to know whether it's a Canara Bank kind of show on that PSU banking index or not, because that one came out with numbers as well. The Nifty Pharma, there you go, 5% up on a Canara Bank on the back of the numbers. The numbers were quite a beat, and therefore you're seeing that kind of a stock reaction. Indian Bank as well came out with numbers, and that one too is up 4%. Sorry, let's pull up the sectors one more time and look at the IT and the realty pack. IT justifiably again down 2%, even though the numbers frankly for a Coforge weren't all that bad, nor was the guidance or the commentary persistent, neither that. But 2% lower on the Nifty IT. The realty pack second straight day where it's one of the top losers sectorally, 1.3% lower on realty. FMCG, we saw all the stocks that were dragging that index down, and 1% lower on the Nifty FMCG index as well. Actually, let's pull up the constituents before I toss it to Neeraj for broader markets. There you go. That's how it really stacks up. Nestle, top of the pile in terms of the losers. The others two getting dragged down. Let's pull up the advanced decline. Well, that's clearly not looking good, Neeraj.
Yeah, I mean, so there are individual accidents, if you will, but by and large, it's okay. I mean, IEX is the standout mover in trade and 28% lower. And then some IT names as well as some real estate names have cracked quite strongly today. That's such an interesting step chart, by the way, of IEX as well. But even otherwise, I mean, Persistent Systems and Coforge amongst the other IT losers in trade. Realty stocks looking slightly wobbly in trade, so that's the other piece that you ought to keep in mind. In Nifty Realty is down about a third of 1.3%. So some of the real estate stocks have looked slightly wobbly. On the other side, some gains for Borosil Renewables, Electra Green Tech, Canara Bank ahead of the numbers, Coromandel after the numbers, and Paytm is now 1110. So actually those two, before we get to Kush Bora, Paytm 1110. And Coromandel after the numbers have come out, and the sharp spike that we've seen in those are the ones that stand out. Kush Bora, founder of kushbora.com, with us to talk about the markets currently. Kush, very quickly off the bat, good afternoon to you. Are you taking a trade on the index here right now?
I'm not on the Nifty most certainly. Bank Nifty perhaps on a bit of a decline. I just might consider. I think this is exactly what a storm in a teacup would look like, right? I mean, from Monday onwards, we've had an uptick on the index, and we tested that 25,250 level yesterday, even today as well. But we retraced from there. It was showing, at least in the morning, when 25,200 call options had a very heavy base. That's now shifted to 25,100. Supports very clearly at 24,500, 25,000. So I think for the past 3 to 4 sessions, the commentary has been the same. The market reaction and behavior has been fairly same. So as long as these levels are taken out, 25,250, maybe if I push it a little to 25,300, which is also the 20-day moving average, as long as that is not taken out, I think this consolidation could well continue. Slightly more constructive today as well on the Bank Nifty, and we've seen that kind of a movement where from 56,850, the index has shown a smart up move. Now it's once again knocking at those resistance levels close to the 57,300 mark. If we do get a closing above it, I won't be surprised to see another 300-400 points of zoom to 57,700. So a little more constructive on the Bank Nifty. Any dip further, closer to the day's low, or just below 57,000 should be taken as a buying opportunity. Nifty could well continue to consolidate for somewhat.
Okay. What specific ideas for the afternoon then, Kush?
Still going with both long ideas, Neeraj. The first one is Sai Life Sciences. It's had a good run from a medium-term perspective. It's had a very good run. A couple of days of profit booking. Yesterday, the stock was up. Today, you're seeing a mild uptick on this one. So 20-day moving average support also kicking in. For the last couple of days, that's been the trend for Sai Life Sciences. So on the way up, 538, 838, I beg your pardon, 860 are your targets, and 793 is where you place that stop loss. The other one is Timken. Very interesting moves on this one as well. For the last 15 sessions, it's taken support of the 20-day moving average, rebounded. Today also, if you see the recovery from the low point of the day, which was close to 34.50 or the levels, has been rather smart. So yes, I think this momentum in Timken could continue for levels of 37.30 and 34.30 is where you place that stop loss.
Wow. How many times have we seen someone talk about Timken? Very interesting, Kush. A couple of names, Kush, and one of them has to be Paytm. Yesterday didn't show the massive reaction that some people may have anticipated. In today's session is up quite a bit. Is there a trade here on offer?
Neeraj, not at the current levels. I mean, if you'll recall, we discussed that, Paytm was a call that we discussed at 980 odd levels. I think, not too far back, about 6-7 sessions ago. It's been doing, very well since then. Yesterday also, we saw a very smart recovery on this one, again, from the low point of the day. Today, you're seeing that run extend. But now, from a near-term perspective, the risk-reward ratio is just not favorable. So my suggestion would be a partial, profit booking on Paytm. However, if you see the medium-term setup, very interesting. The stocks actually crossed that 1050 resistance mark. And, if you go purely by technicals, I think another 250 points of rally very much on the cards in the next 3 to 6 months. So from a medium-term perspective, it's a hold. But if you did buy it for, a very short-term view, yes, you should look to book profits partially, hold the rest with a trailing stop loss near the 1080 mark.
What's the take one platform company to the other? What about Eternal?
A very similar story, Harsh, here. Eternal also had a very good run, with that gap up sustaining, that we saw 3 days ago and yesterday and today as well, continuation of that. I think the near-term trade is done and dusted. So yes, if you do have a position, again, book profits partially. But here too, you've got a breakout above the 305 mark, which suggests that the medium-term trend, is bullish, will continue to remain strong. A weekly setup does not suggest overheated territories, although the daily setup does. So yes, I'll give you, a view from two time frames perspective. From a very near-term time frame, you've made very good returns. So not a bad idea to take money off the table. But if you're in this from anywhere from 6 to 9 months kind of a horizon, the 305 resistance level being taken out, again, you're looking at about 75 to 80 points kind of an uptick from here on as well. So 375, 380 are the next targets if you're willing to hold on for some more time. So depending on your time frame, broad trend is intact, so you could hold. But from a very near-term perspective, slightly overheated, so maybe book partially.
The other one, Kush, which is looking interesting is the Tata Motors. Couple of days, it's shown remarkable resilience. What's your take on this one?
Nothing's changed. The remarkable resilience that you spoke of, I think, the trade deal that, has come out with UK is perhaps pushing it today. But otherwise, if you see what's happened here is that, it's struggling to break past that 50-day moving average today also. It's retraced from high levels. I maintain my view, which is, if you have 12-18 month kind of a horizon, the risk reward ratio, even now after this 100-point up move from 600 levels, is still very, very healthy. So, a long-term pick is still understandable, but I wouldn't trade Tata Motors for momentum. For that, I put Mahindra and Mahindra. So yes, if you have a long-term horizon, you should continue to hold Tata Motors, but it's not a momentum trade even now.
Okay, Kush, stay on. So much more to talk about. Let's get in fundamental voice on the conversation as well to try and understand how to look at the markets fundamentally and from somebody who invests not just for the near term but for a slightly longer term. Rahul Mehta, founder and CEO at Bias Capital, with us on the show. Rahul, great having you. Thanks for taking the time out.
Good to be here.
Did I pronounce it right? Bias Capital?
Yeah, that's right. Okay. Bias River in Manali.
Okay, perfect. So the market is, well, you could argue not exactly flowing like a river because it's had, how do I say, it's been in a very tight range the last few days,
yes.
Right? You don't look at it from a very short term, but my question to you therefore is that if earnings are not able to drive momentum right now in India, how do you think of Indian equities from the next 2 to 3 or 4 quarters, let's say for the rest of FY26?
Look, generally we look on a long-term basis. a lot of the macro in India has been better this year than it ever has been from a current account perspective, from a global perspective, etc. We see earnings in some sectors being challenged, especially the global ones, etc. But from our standpoint, we are looking at having 20 companies in our portfolio in a few sectors, and there are several sectors, be they financial services or parts of consumer, that are actually very attractively valued today.
Okay. Sorry, maybe you should have started off by asking to tell us a bit about Bias Capital, right? When you think of 20 companies in your portfolio, you're long-term investors. How do you think about this? What's the AUM? What's the kind of money that you manage? And you invest what the perspective of investing for the next, let's say, 2-3 years? How do you do it?
So our goal is to pick companies. We have two primary strategies. One is when great companies make temporary mistakes. Perhaps there's a wrongly accused tax rate, perhaps something else happens. We have already done diligence. We have a strong corporate governance screening on the promoter, and we jump in and buy. The second, actually, very interesting one, is we're seeing a number of companies that are run by average promoters, and those companies are now getting pushed by the banks to sell them. And so you're having rapid consolidation in companies. For example, Euroca Forbes moved up from a very leveraged promoter, now with private equity, growing very rapidly. So those are the two strategies that we use. One, great companies that have taken a temporary fall, and two, companies that are getting sold who have good assets, but perhaps not the capital to invest, doing very well.
Right. Rahul, so you spoke about one theme being consumption. And consumption, we're seeing across companies or most sectors or subsectors and spaces, we're seeing a bit of tepidness with regard to growth. How should one therefore look at consumption? Because consumption is always commanded, or for the predominant part of the last decade, commanded a premium valuation. But at the same time, now we're starting to see growth come off as well. So how should one look at it?
Look, let's break down consumption. Consumption can be soaps. Consumption can also be, as we move up the Maslow pyramid, be hotels, suitcases, holidays, travel. The latter part is growing quite rapidly and actually entering the market from a disorganized to organized perspective. Now, staples, of course, will not grow so rapidly because I think we have moved from soap being a luxury to being a necessity. Toothpaste, luxury to a necessity. So those companies may not grow as rapidly as the ones I mentioned before.
And so therefore, what's the best way to play this? And how should one look at value and growth within this space?
Look, from a Bias Capital standpoint, we are playing higher on the Maslow pyramid. Like I said, hotels, consumption from a travel perspective, consumption from an experiences perspective, not necessarily staple. There we see significant growth and actually decent value also in some areas.
Also, tell us, I read your note and suggested that you're not exactly positive chemicals manufacturing. You don't see the cycle turning at some point?
Look, cycle will turn. India will be a beneficiary from the China Plus One. We just don't get the comfort in that sector from a valuation standpoint. It is a B2B industry at the end of the day. We've invested in it 5 years ago. Today, we don't see that margin of safety that we'd like to see.
Okay. So, Rahul, what's the construct? I'm guessing that you do bottom-up investing, and therefore you may be sector agnostic, if you will, or maybe you choose your sectors and then go bottom-up. So, where is it in terms of where are the pockets where you are completely avoiding investing? Maybe because of the valuation reason, maybe because of the growth faltering reason, or maybe because there's just too many uncertainties into these businesses?
Look, there are two sort of no-go areas from our perspective. One is bad governance. We don't understand it. And the second generally is public sector companies, because we like to identify a promoter. Promoters drive businesses. And so we're very focused on that. We do a lot of work on our sectors. We don't invest in a sector without a white paper written. We don't invest in a company without a level 1 report written. So I hate making mistakes, right? And then once we buy more when stock prices go down, and we stay with the investment for 2 or 3 years, because that's actually the period of time when value gets built.
That's true. That's true. Well, I'll tell you what has been the accident of the day, and I would love to get Rahul's view on the same, but let me first get in Varsha, my colleague, to speak about the setback for power exchange IEX or India Energy Exchange, as the electricity regulator has approved what is called market coupling norms in the day ahead market, or the DAM, in case you've read DAM, or DAM as an abbreviation. What it means, I believe, is that IEX stands to lose its dominant position as the leading platform for power prices. Varsha Johnson with the details. Varsha, good afternoon.
Good afternoon. Well, thank you for that. You know, Neeraj, IEX stock is down almost 26%. Investors lost more than 3,300 crores of rupees today. Now, the highlighting point over here is the biggest moat of IEX, which was benefit from price discovery on the platform, is no more there. Now, IEX is known for its efficient price discovery mechanism, which is a key moat or competitive advantage, which now, after this, regulation is no more there, as market coupling for day ahead market starts from Jan 2026. And power exchanges like IEX will no longer compete on price discovery, and common algorithm will determine the best price. Now, what is market coupling? It's nothing but it aggregates buy and sell orders from all the power exchange, and that discovers a single uniform market clearing price. Now, why this is negative for IEX? Because this reduces IEX pricing power and competitive advantage, and IEX will rotate as market coupling operator with other exchanges, and this dilutes IEX current market dominance, because this coupling can shift volumes to the competition. And IEX, if you see, has a market share of almost 85% in the spot market. Now, what lie ahead is that this is into day ahead market, but the real time market and term ahead market coupling will also follow, and Grid India will develop software and conduct a 3-month pilot for term ahead market. So overall, the moat which was there will no longer exist, and that's the reason we are seeing pressure in IEX.
28% down and counting. Thanks a lot for that, Varsha. Now, Rahul, can I bring you in on this conversation? You may not have a view on IEX individually, which is fine, and if you do, welcome. But either this or just this whole thing around exchanges, because the uniform belief is that on every sector almost, that whether it's capital markets or power or commodities, that there is one exchange or two exchanges at best. They are catering to a population of 150 crores, which will at some point of time use these exchanges. The story is 15, 20 years, and therefore you are safe with these businesses. It's only accidents like these which show that not always, right? How do you think of the exchange businesses in India?
We've tracked the exchange sector for probably 15 years.
Wow, okay.
We were part of a task force that was set up when in 2010 the government said that exchanges weren't allowed to IPO. And so we sort of rebuilt BSE and NSE, and being big believers in the private market. And regulation is still forming in that industry, and we're seeing part of that formation today. The NSE has significant technological advantage and significant desire to go into adjacent areas. And I think we're seeing some of that happen. What our operational walls are going away. The same thing has happened in other sectors in India with UPI, and will continue to happen. So I think regulatory risk in India is real. We are not invested in IEX. We have, like I said, been part of a lot of research papers, etc., with the BSE and NSE. We think the NSE will benefit from a lot of what you said, but that's sort of the only one that we would bet on.
I hear you. Okay. The other thing is that you've spoken about how what excites you is not necessarily market kya hai, but more like buying businesses for the value which in 3 years' time will compound in a way that it excites you, right? So I'm trying to think of where is it that you find a combination of promoters which are ethical, businesses that excite you, and they are available at valuations which may seem palatable, because that's a bit of a rarity these days in India, isn't it?
You're asking a lot. But look, we have significant capital in financial services.
Financial services, okay.
We own 4 banks. We're very excited by the progress these banks are making from a regulatory standpoint, from growth standpoint, and distribution. We think there are 2 moats in India. One is access to capital, and the second is just distribution. And we own financial services for both those reasons. So we're very excited by that. And we think the financial services from 2010 to 2020 was more corporate story. From 2020 to 2030 will be a more retail story. You've seen how the long 10-year bond in India has come down to 6.6%. It's getting close to the US. So people will consume more, they will borrow more, and that's the sector that we think the management teams are great. We got the best regulator in the world, the RBI, and that's the sector that I would say we spend a lot of time on.
Music to Harsh's ears. Harsh?
Absolutely.
Your follow-ups?
Yeah, so where?
He tracks BFSI so closely, yeah.
So where within the lending pack? Would it be the larger ones? Would it be the smaller ones? You've already spoken about exchanges being something that you're tilted towards, but where else?
So look, we don't base our decision on size. We base our decision significantly on management team, significantly on strategy, and really in financial services, regulation is very key. So understanding what the RBI is thinking, not getting caught in seemingly interesting stories that may not have the long-term perspective of the RBI is something we really focus on a lot. And so, like I said, we have a couple of large banks and a couple of mid-sized banks. We have stayed out of microfinance so far. We have stayed very close to SME lending. We think with UPI, etc., there'll be a lot more lending in that area. And so far, we've been out of corporate lending.
Okay. Unpacking this a little bit, you believe the MFI cycle will turn at some point this year?
We are seeing turning already happening.
Perfect.
We are seeing a nice segregation of some companies who are choosing to focus on MFI lending and some who are perhaps opportunistic, who are getting out. And so obviously our interest lies in the former.
Perfect. And sorry, I'll completely change track. IT and tech, that's the other place where you seem to have a tilt, especially AI. How do you play that theme at this point from an Indian market standpoint? Data centers, power generators, and the power value chain, how should one play AI as a theme?
So we have historically liked IT services. Today we don't own IT services.
Yes.
We are building our analysis on white papers. We own one data center company. We are very focused on the power theme for this reason. And we're actually looking at a lot of BPO companies and seeing how they can use a lot of the processes they have to build the large language models. So that's an area we think that is sort of different, but has a lot of value.
Okay. And so is data centers a part of the AI thing or the energy transition thing? And I'm just inclined to ask you, even if it is not, is the beauty about India is that traditionally, maybe until 2020, there were 5 or 6 large sectors. Suddenly, you had defense come up as a very large sector. You had energy transition, very large sector. EMS, very large sector, right? In these sectors that have been created in the last 4 or 5 years, have you find merit in longevity of the trend and thereby the ability or your affinity to invest into any of these sectors with a multi-year view?
So absolutely, when we measure sectors through our white papers, we measure what the size is of the sector, the potential size, what are the organized capabilities, how much can we get to, what's happening in other parts of the world, what the regulator is thinking. These are the sort of the key facets we use to measure a sector. And I think all of the sectors that you mentioned are good. And the good thing with public market is that if you miss it the first time, it'll always come back down. You always get to buy. You get to observe the companies as they go along. And observation is the way that we learn. We've been doing this for 20 years. We're still learning.
My last question, what's the last white paper that you wrote? Because you would have measured that sector. Give us some details about it.
We wrote something on microfinance in January of 2025.
Tell us about it.
And we wrote a few things after that too, but given our previous conversation, we picked up on it. And like I said, we found that there were some companies that were doubling down, had been very mature over the last 24 months, and some companies that had been a little more aggressive than they should have.
Got it. Okay. Rahul, this has been great, understanding how you think about things, the frameworks and companies in a good industry with a good promoter, every rupee to be treated like you own, some fabulous principles. We look forward to have more conversations with you. And thank you so much for your time today.
No, thank you so much. It's been a pleasure.
Thank you. That's Bias Capital with their thoughts on how they see investing, markets, and the current trends. What we do is slip into a very quick break. We need to slip into a commercial break, about time. Come back, get you all the chatter from the dealing rooms. Stay tuned.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Welcome back. Thanks for staying with us. It's a packed show today. Let's quickly get to Heard on the Street because Somit's just joined us, and with all of the dealing room chatter that he's been hearing today, Somit, what are you hearing?
And multiple stocks continue to remain in focus. Firstly, it's on Jaiswal Neco. Now, there was a large block deal that happened in trade today. Dealers are indicating that asset care and reconstruction was the likely seller here. But the interesting name that has come in when it comes to buyer. Dealers are indicating that it's a prominent investor who owns a PMS and a listed entity as well. And he's one of the likely buyers of this stake in Jaiswal Neco, and that's the reason why the stock is up more than 10% in trade today. Apart from that, it's OFSS. Now that counter has been buzzing. In fact, it's one of the few IT companies that has been trading in green. Dealers are indicating that there are large buy flows when it comes to FII desk, and this is after the strong set of numbers reported by the company in the first quarter. For Shriram Finance, sell flows across the board is what dealers are indicating, and dealers are also indicating that fresh concerns have come in for Shriram Finance, and they're expecting a big spike when it comes to the credit cost of the company in the first quarter, and that's the reason we are seeing this fresh set of sell flows coming in for Shriram Finance. And when it comes to Olectra Greentech, there are a couple of buzz on the street when it comes to this counter. First buzz is that the new CEO appointment is expected to be announced soon, and this new CEO will be someone with a strong background in the EV segment. And the second buzz on the street is that a large EV company might pick up some stake in Olectra Greentech. So keep an eye out for that counter. That counter is up around 12% in trade. And lastly, Hubtown is in focus. Dealers are indicating that there could be a potential fundraise announcement, a preferential issue that could come in Hubtown. So keep an eye out for Hubtown as well.
Wow. And an existing EV company, large EV company, picking up a stake in Electra after all the...
There are a couple of news. Either the CEO announcement could come in or this.
Okay, yeah, even that's an important one for Electra. Okay. Okay, any timelines for any of these, Somit?
No.
Nothing, no timelines as yet. Okay, great. Thanks a lot for that. Well, so watch out for those. I mean, I got greedy about the timeline simply because we spoke about Religare only yesterday and the news came out right at the end of the day. Okay, Aditya Shah, founder of Hercules Advisors, also joins in along with Kush Bora into this conversation. Aditya, great having you. Thanks so much for joining in. And can't not talk about some of the stuff that Somit highlighted, right? So, I'm guessing tracking a Jaiswal Necco might be difficult, but, or maybe you do, but an Electra Green Tech, a stock in news in the space, which everybody's talking about. Any thoughts here?
So Electra Green Tech, the company is doing well. Company's order book, company was in the news for all the wrong reasons when Maharashtra government cancelled out their orders for EV buses. But the company continues to do exceptionally well. And the buzz around maybe, as Somit was saying, maybe a new investor coming in or the CEO coming in. Most likely the new CEO will be announced for the company. So it's an interesting stock. I'm watching out for the stock, and the company should do well over the next 5 to 10 years. The other stock I'm not tracking, so will not be able to comment.
Okay. Kush, 2 or 3 stocks that Somit highlighted. Electra is one. Aditya offered some advice there. But on the charts, is there a trade here? If not Electra, maybe Jaiswal Necco, is there a trade here?
No, not on Jaiswal Necco, not for any other reason but the fact that the stock's been extremely volatile. I mean, if you see the last 7 sessions, it's gone from 50 to about 35 and then almost back to those 50 levels. So not a very healthy sign. Even if you want to trade, you would rather prefer a smooth uptrend or a smooth downtrend, depending on the case maybe. So no, but as far as just the levels go, I think from support perspective, the convergence around the 40 mark is a good support zone, and on the way up about 50. Electra Green Tech is shaping up very interestingly. I'm not looking at the daily setup on this one, the trade's done, but from a weekly setup, there is a falling trend line resistance that the stock has broken, came at about 1300, 1325 odd levels. Volumes, as we've seen now, have picked up quite a bit. So yes, this recovery could actually take the stock to significantly higher levels, that of 1600 and 1750 as well. So quite an interesting setup and a very healthy breakout on this one. Keep a stop loss if you enter now near the 1300 mark.
Electra Green, stop loss is for sure if you enter, and I think move forward with caution as well, though a lot of news now buzzing about it. Stay on with us, Aditya and Kush, but let's talk about the stock of the day. I mean, the Force Motors, I think there's with force, huh?
With force.
Force Motors with force today. The stock is up and about in trade, over 14% up. Let's bring in Puneet to know what's worked for the company. Yes, on the face of it, numbers were good, Puneet, but this level of excitement, what's behind it?
Well, we also took a look at the historical performance as well, but the company rightly performing well to its name today. Let's first look at what it does. We've also mentioned that it's a maker of engines for Mercedes as well as BMW cars, and also manufactures commercial vehicles. That does include something like an ambulance as well as school buses and vans. So these are the 3 key segments that they operate in. They operate 3 key brands as well, which have taken force ahead for the company in terms of financial. Urbania has really picked up over the last few months. We've also seen something like a Gurkha and the City Line, which are the 3 key brands for the company, doing very well. When you look at the key trigger today is the Q1 earnings. We have seen revenue up 21% at 2,297 crores. EBITDA is up 33% for the company, and the net profit because of that has come out at 52% growth. With strong margins of 14.5%. That was the key 4 numbers. The Q1 sales has been very robust. 26% growth is what they've reported in this particular quarter. That's led across the board and these segments that we just spoke about as well. Apart from that, the flagship models of Ovenia has been doing really well for Force Motors, and that has picked up at least over the last 18 months or so since it was launched as well. When you finally look at the other key trigger, that could be the management change. They have appointed Anshul Saxena as part of the senior executive management team to the board. They've also he's going to be taking the vice president corporate strategy role at Force Motors and taking responsibility for the company's long-term planning and initiatives for new focus areas as well. I also just want to pull up a quick table on the company's performance over the last few years, and this could provide some perspective there, because if you see from FY22, the company's revenue was roughly about 3,200 crores. That has inched up all the way to 8,000 crores in FY25, and they've also delivered a strong performance in this year as well. When you also look at the margins were just 1.5% in FY22 and have gone up to 13.5% in FY25. In this quarter, they've done 14.2%. Profits as well is up 8x in the last 3 to 4 financial years. So it's not just that this result has been, surprised the street, it's been consistent performance as well. They've been able to do that at a very strong return of capital employed ratio as well. For just minus 3%, it's gone to 30% in FY25 and should continue to do well with the launch and the higher capacity utilization as well as new investment take place as well. Stock currently trades at 43 times price to earning, and that's largely because of the strong up move we've seen over the last 1 year on the stock. It does not have any analyst coverage as well. So for retail investors, do your due diligence, because it is trading at higher valuation right now. But definitely a business that's done very well over the last 12 to 18 months and is getting rewarded now with the street giving that kind of fillip to Force Motors.
Also shout out to the management, Abhay Firodia and then Prasann Firodia, who have been building up this business and moving ahead, because that's really how these turnarounds take place, one step at a time. But let me come across to Kush Bora on Force Motors. Kush, I'm going to ask you about Force and then I'm going to ask you about IEX. I know you must have already answered that IEX question, but it's slightly different. Let's start with Force Motors.
Force Motors was close to 6,000 at the start of this year. I think that itself will answer what kind of a run it's had. Do you buy now? No, you don't. I mean, every time the stock dipped to the 20-day moving average in this calendar year, that's been a buying opportunity and the stocks rebounded from there. Right now, that level comes to 16,200, 250 odd levels. It is some distance away. But yes, I would say if you have, please continue to hold, but no fresh buying. On the daily, on the weekly setup, it's highly overstretched. So yes, wait for profit booking bouts, and the stock has given those profit booking bouts every now and then. So if not, maybe at least 16,200, closer to that 17,000 mark is where you consider an entry. Not at the moment.
140% nearly in the last 12 months. It's astonishing. Okay, my IEX question is a very simple one, and I'll come to Kush and then I'll come to Aditya. If by chance, and what's also astonishing with IEX is institutional investors who kept buying, hoping the worst would not happen. This question is not for them, it's for the retail investors perhaps. What do you do? This is a clear is raat ki subah nahi wala scene as far as IEX is concerned. First opportunity, cut your losses, shrug it off, move on to a better day. Is that what it is, or is there some turnaround that's possible here? Kush first.
See, for the optimists, it'll be, the night is darkest before the dawn. But yeah, sadly, I'll go with what you said, is raat ki subah nahi kind of a thing. Obviously, the volumes have spiked up massively. And even now, if you see the stocks actually not really clearly, too far off from the low point of the day. So yeah, no point venturing a trade, being such a brave heart. Even if, we were to do that, I always suggest that let the stock rebound, let the stock tell you that, the bottom's in place and, there's a rebound around the corner and happening, witnessing on the charts, and then perhaps go out. Right now, that doesn't seem to be the case. Mind you, Tamanna, this fall has accentuated today. But if you see the stocks actually been cracking from those 200 levels in the past 5 sessions anyway. So maybe markets sensed it, maybe there was something, already happening, but the structure wasn't looking that great anyway. So yes, I would suggest a wait and watch kind of an approach. I don't think there is, there is any kind of merit in buying at the current levels or even considering a break.
Question is not even on buying. If you're holding, are you still waiting and watching, or are you saying let's cut our losses and just call it a day? The moment you get an opportunity to sell, that is.
Look, with this kind of a drop, it's not a bad idea because see, a bulk of the losses seem to have come about. At least that's what it would seem like. So I would suggest, just hold it for a day or see if there is any kind of a rebound. And this does not mean any kind of a recovery in terms of, coming back in the black, but it only means that your losses would be a little less. So I would suggest a hold just because there has been a massive dip, oversold territories. You could see some sort of a rebound in, if not immediately tomorrow, maybe in the next couple of sessions, and you could exit at a slightly lesser loss.
Aditya, your take on what someone should do with an IEX if they are stuck in it at this point?
Draw some parallels with the equity markets. NSE is the exchange where 99% of the trades really happen. Even if BSE offered some lucrative prices for trading, liquidity just does not go away from NSE to BSE because the huge quantum of trade that happens on NSE means that people will need to come to NSE as well. So similar thing is happening with IEX as well. On IEX, what the regulator is CERC really is saying is that market coupling may come in. They have approved the concept, but how will the concept work? What is the framework of the concept? Nobody knows as of now. So what they are saying is that if market coupling comes in, for DAM market, the day ahead market, all the bits will be accumulated and then sent to a body, which will then finalize what is exactly the price at which these bids need to really happen. So from my perspective, even if market coupling does come in, which I don't think it will be weathered down to a lot of extent because the relevance of power exchanges will go away and nowhere in the world does any market coupling really happen. If it does happen, of course, IEX will lose market share. No exchange in the world can hold on to 80 to 90% of the market share. But the market already is expanding and IEX now coming down IEX will start to come to about 20 to 25 times multiple, which looks really very interesting to me, given the long growth potential that IEX has really got. So difficult position for IEX as of now. There should be a clarity as to how market coupling will come in. But for longer term investors, the steep fall in the stock price is a good buying opportunity over a bit of next 5 to 10 years. Investors must watch. Normal investors must not enter the stock. Only those investors who have high risk appetite should start to look at the stock.
Normal investors should not enter the stock? Is that what you said?
Of course, the volatility in the stock over the next 3 to 6 months until clarity emerges with respect to market coupling will mean that normal investors who don't understand the stock prices will get caught out. So from my perspective, any retail investor who does not have deep understanding should stay away from the stock for the time being.
Okay. Talking about normal investors, I think appetite has grown to the extent that everyone wants a piece of the pie, and that's what you're seeing when you look at the capital markets play. We're talking about Motilal Oswal, and it's been a stellar quarter for Motilal Oswal. The stock taking a bit of a dip right now, but just to talk about the quarter gone by, marked with a fair amount of milestones. We're joined now by Ramdev Agarwal, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agarwal, very good afternoon to you. Pleasure as always to have you here with us on NDTV Profit. It's been an important quarter. The AUM business has crossed the 1.5 lakh crore mark. What has been the top highlight in your view, and what has been the big move?
Yeah. So actually this quarter has been quite a milestone, I would say. I mean, in terms of declared number, it is the largest quarterly profit we ever had of 1,430 crores. So clearly for us, it is a big moment. Not that this is going to be the highest number in future, will clearly surpass these numbers. But right now, this is the largest in the history. And it is led by operations as well as treasury, because Motilal Oswal is twin engine kind of operation, treasury and operations. So operations have grown at about 24% on top line and 21% in terms of bottom line, in terms of 522 crores of profit for this quarter, which is what gives me the biggest, comfort. And it is led by fantastic performance in AMC, PWM, and above all the capital market, where we are the largest QIP raiser of about 30,000 crores in this quarter for the corporates. So I think these 3-4 operating highlights have brought the revenue up by 24% and matching performance in terms of profits. But because in last quarter we had a negative mark to market, this quarter as the market recovered, we have bumper a mark to market of almost 1,000 crores, and that takes the total profit of treasury and operating to more like 1,430 crores.
Mr. Agarwal, this is Harsha. So just give our viewers a perspective on how one should look at numbers. Because of this mark to market, your numbers do appear to move quite a bit. Give our viewers a perspective on how they should look at Motilal Oswal's numbers.
I think they should look at TTM basis instead of looking at a 1 quarter basis. That might be a little misleading. I think if you see at 4 quarter numbers, trailing 4 quarters, I think then you'll get a better sense. Like last year in March, our profits were about 2550 or something like that. Now with the June quarter, it will be about 3,000 crores as the TTM. Because in 4 quarters, you get 1 or 2 quarters low markets. In 1 or 2 quarters, you get high markets. I would say trailing 4 quarters is a reasonably good reflection of what's happening in the company in both the engines, operating as well as treasury. So now the operating profit for last 4 quarters have gone up from 2,500 crores in March to here more like 3,000 crores.
Sir, good afternoon, and Neeraj here joining in the conversation as well. I was going through all that happened in FY25, the investments that you guys made, and you gained market share across the 5 verticals. No flags about what will happen in the rest of the 5 verticals and continued growth. That was the con call in May 2025. You reckon the same narrative continues?
Yeah, I think except for the retail brokerage, which got a little bit impacted because of regulatory changes, which came in sometime in September, October last year. So that will play out for next 2 quarters more. I mean, this quarter is impacted. I think 2 more quarters have impacted more intensely the September quarter. But once we get over that, even for us in this quarter, even the retail brokerage distribution, B&D, brokerage and distribution retail is muted. It's not down, but it's not showing that 30-40% growth we are used to. So I think that year-on-year comparison will subside sometime in September and maybe probably December. But starting March 25 or March 24, I think we'll have a very good growth numbers even from retail brokerage side.
Sir, trying to understand the lending business a little bit more and what's happening there. Your yields have come off a little bit and your NPA ratios have spiked when I'm looking at it QOQ. There's also some bit of credit cost build up which is there. Just give us a perspective on what is happening in housing finance. A couple of big players have suggested competition is coming in a big fashion. Pricing has gone a little bit awry. So just trying to understand kya ho raha hai, sir?
We have actually, since housing finance is on a recovery mode, actually in the first quarter, the growth in the disbursal is more like 57% with more or less same kind of a yield. Just that we have built the sales force for further growth. So the productivity of the sales force has not built up and hence the cost have stacked up a little bit. So profit in absolute terms has not grown as much as the top line has grown. So as far as our understanding is concerned, because we are still a small company, we have just about crossed 5,000 crores AUM in the housing side. Everything looks to be fine. In fact, the sense is that for the whole year, because a lot of accounting cannot be done in terms of insurance income, in terms of some they downsell some of the things. So I think the overall, I think we are expecting 30 to 40% growth in the bottom line on a 25-26 or 23-24. Sorry, 24-25. So yes, we are a little, I would say, cautiously optimistic on housing finance side. But yes, what you're saying is right, that there is much more intense competition in the affordable housing, and more importantly, that segment is not growing as much as the upper end of the housing is growing. So much of capital is chasing. So yes, it becomes a little more difficult to grow profitably.
Oswal, the last few years, you've come a long way as an entity, right? From less than $1 billion at the very least to where you are right now, which is almost $7 billion or thereabouts and counting. What do you reckon over the next 5-10 years you could replicate what you've done in the last 5, 7, 10 years? Would the pace of growth be stronger?
Yeah, Neeraj, see, we are tailwinded right now. I mean, I'm telling you, we were tailwinded between 2003 to 2007.
Okay.
I remember of that phase now. I mean, from 2020 to 2025, this 5 years has been massively tailwinded. What we did between 2003 and 2008, 2008 profits we repeated in 2018. So we had a almost like flattish, broadly flattish decade. So again, there is another round of growth of expansion of capital markets on the back of retail expansion, starting from 2020 till 2025. Now we are at 200 million. I hope we are headed for 400 to 500 million kind of thing in next 5 years. That's my hope. I mean, it should happen like that. A lot of things don't happen as you expect, but we are tailwinded, and as the tailwind no tailwind lasts forever. As this tailwind continues for next 4-5 years, I think we will try to make best use of it, and we will put best foot forward from Motilal Oswal in every possible business.
Mr. Agarwal, I'm just wondering that with the way markets have been the last few months, have you seen activity on that end come down a bit in terms of number of accounts coming in, retail activity? Have you seen any kind of slump or dip there?
No, if anything, we have seen the corporate activity picking up. In fact, the block selling, one of the things which has emerged is the sustained selling by the corporates of their holdings. I think the promoters' holding have come off by 2-3% in last 1 year. So I think the rich valuation in the market and now no more promoter selling is looked upon negative. I think we are seeing a lot. I mean, the new phenomena for 25-26 is what I would say significant selling by promoter entities into the market. So that's the new one, which further expands the market. It is more. I mean, that certificate which was illiquid is becoming liquid. So floating stock, the free float of the companies are increasing slowly. But I mean, India is the only place where you have 45% promoters block. Only 55% is floating stock. So as the promoter block melts and comes to become kind of owned more broadly by the people at large, I think the capital market will expand. Meaningful capital market will expand, and corporate activity will also capital market activity will also expand, because the moment promoter sells the stock, he opens a family office, and the money comes back to the AMCs and wealth, and all sorts of activity happens.
I'm going to ask you a follow-up on that question, and not necessarily as someone running the company, but now with the hat of the market expert, of how you see that trend, promoter selling, and on the other hand, primary issues and how they are flooding right now. Do you see this as a healthy trend or a bit of a tread with caution kind of a situation?
No, this is the healthiest thing to happen for the longer term. See, short term, there could be a price spike down or whatever. Wherever there is excess supply or something like that, it will kind of quench the market appetite. But then the demand from the retail side is so sustained that we need supply of good quality paper. And so I think the companies which are growing, where there is a good demand, and if the promoters are willing to accommodate the fund managers' demand, I think that is the best thing to happen. I don't see it as negative at all. So free float increase in Indian markets are, I mean, it's fantastic in every aspect, except the liquidity is very, very poor, because the companies are relatively small, and of that, very small portion is listed. So as the listing increases, the play area will become much more wider and much deeper. So because the price of the stock is not determined by who is selling or who is buying. Price of the stock is determined purely by the earnings performance. So I mean, if the earnings performance goes double, even if the promoter wants to sell 50%, 60% of the company, I think the stock will move up.
Okay, so good times ahead. Just again, as the market expert view, and one last question. I know I'm over time and I've taken more of your time as well. Are you worried at all with the kind of lack of momentum that we're seeing right now?
I think we had great time. I think this is the period when earnings are somewhat slow. So we got to have patience, but we are very close to the all-time high. I mean, we are just about 1,000 points or something lower. So maybe 4-5%, 6% lower than all-time high. So we have done well. I think we need to bring some patience in the market, whereby let it consolidate, and as the earnings pick up, we should be ready with our dry powder to take the market to newer highs.
Okay, be ready with dry powder. That's important, view coming in there from Ramdev Agarwal. Thank you so much, sir, for speaking with us. Pleasure as always. Keep your powder dry at a time when things are slowing down. We've done well. We'll take a very short break. We're coming back with BTST ideas and a lot more as markets take a bit of a dip during closing.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising.
Back with India Market close right here on NDTV Profit. Dhaval Ajmera, Director Corporate Affairs at Ajmera Group, joins in. And Dhaval, thanks so much for taking the time out and being with us. Summarize the quarter, because it seems that MMR still has had decent sales and pricing trajectory. It can't be said for all the regions in the country, but in MMR, at least your peer sets who have come and spoken to us have said that both the sales volumes and the pricing trajectories look okay. Has it looked like that in your numbers?
So, I'm very happy to say that this has been our highest quarter over the last 5 years. The sales have been pretty good. Although our advance sales this quarter has been a little lower because we were just awaiting some project approvals, but in terms of project efficiencies and in terms of collections and all of that has been performed really well. So overall, the performance of the company has been good. The PAT margins have improved. We've gone from we have just increased by 20%. So overall, it is looking good. And this overall right now also the real estate market has been in a good position, and we feel in the coming quarters we should be able to perform even better.
Dhaval, hi, Tamanna here, and great to speak with you as well. Numbers are looking good, no doubt, but margin pressures have come in. What are the reasons there that you say?
So, look, these are all little cyclical in terms. There may be some cost rises and the points like that, but otherwise, overall, if you see, we have been incremental in our PAT margins also. From average, we were earlier at 8%. We've improved it to 17, 18%. Probably this quarter has gone down to 15, but otherwise, in the overall scheme of things, we will still be continuing to be over 17, 18%.
You've also had some project delays which have impacted your pre-sales numbers. Are those now getting ironed out? Can you just give us some sense of what's happening there and if you see this resolving going ahead?
Yes, definitely. A few of our projects, 2-3 of our main projects were getting delayed because of the regulatory approvals and certain things which are not in our control as is held at Supreme Court. But fortunately, 1 or 2 projects have, moved out of it. It was not held under Supreme Court general regulatory orders, but something related to our project, which we are hopeful to get it cleared and we'll be able to launch very soon. And that will start showing results in the coming quarters, which will definitely help us improve our pre-sales in the coming quarters.
Okay, so in the coming quarters, by when? That's 1 quarter, 2 quarters. How do you see that improving?
Yeah, we are looking at September and December quarters to have good numbers coming in from these projects.
Okay, and what is the overall outlook looking like for FY26? What are you sticking to your guidance there? Are you revising it after the first quarter? Anything that you'd like to add or give us a sense about?
No, we are sticking to our guidance, what we've given about 1,500-1,600 crores. And we are very confident to surpass that with the way we are launching about this financial year. In the next 8-9 months, we'll be launching about 7 to 8 projects, which will have a top line of about 6,500 crores. So this will give us those numbers which we have envisaged in the coming quarters.
Just wondering, Mr. Ajmera, because luxury is where it's at as far as MMR real estate is concerned, and you have a new entrant, I would say an old entrant who's come a second time after a huge gap in the form of DLF with very aggressive pricing. Do you see this as adding to the competition in the landscape at all? Just wondering what your thoughts are there.
Well, honestly, the way Mumbai MMR market is, I don't really foresee too much of competition. In fact, it is great to have players like DLF and others who have been established in the NCR market and then coming over here. And obviously, they also bring in landmark projects. So it is then going to be fragmented to these kind of developers who have been established and developed and giving good projects. So I think that will be the preference going forward to all. So we're very happy that these kind of projects and developers come in, which does not add competition but gives a variety to the market.
Why no project additions this quarter, though, Dhaval? That's one thing that has stood out for Q1.
So as I said, we are awaiting a few approvals which got delayed over the last 5-6 months. But now one of the projects is just getting cleared and we should be able to launch in the next month or so. So we were supposed to launch it last quarter, but due to some approval issues, it got a little bit delayed. But now we are going to launch it in the coming quarter.
So does that delay sort of keep you on track for your 3,000 crore plus guidance, or does that get a little adjusted?
No. So we have given a guidance of 1,600 crores, and that's where we continue to still stand.
Okay, so for FY26, it's 1,600 crores.
Right.
Okay. Thank you so much, Mr. Ajmera, for speaking with us. Dhaval Ajmera, there, Director of Corporate Affairs at the Ajmera Group, and real estate there in the picture right now. All right, like going across very quickly to Rajesh Palvia, who's joining in on the conversation this afternoon. And Rajesh, we'll talk a bit about, let's talk about where the markets are going before anything else, and where you see the indices heading, even as we now start addressing the big story that's breaking on your screens, that the India-UK Free Trade Agreement has been signed. So maybe that's going to give the market some good news, if at all. But let's just talk about the indices, which have been fairly dismal.
Good afternoon, Tamanna. So looking at the fall in Nifty, it seems to be a controlled fall. Nifty is not going below 50-day moving average and holding around those level only. Bank Nifty is comfortably holding above 57,000 level. So I think looking at the fall which we are witnessing in today's session, that is purely for weekly expiry point of view, as the major put-based concentration was at 25,100, and they are trapped in this fall. So I think we are near to the important support area of 25,050, 25,000 level. So I think if we able to defend these levels, some pullback action is likely to be there from the current level. So this is an opportunity again on the near term for near term trader with stop loss of 25,000. I think one can initiate long here for next 1 or 2 trading session, and we are expecting that some pullback action towards 25,150 to 25,200 we may see in the next 1 or 2 trading session. So keep a stop loss of 25,000 for buying Nifty in this fall. For Bank Nifty, again, hold the long position as 57,000 is clearly holding up. So I think if he continues to trade above 57,000 level, the 57,200 is the immediate hurdle. If we take out those levels, so I think short covering action can trigger, and then we may see further higher level for Bank Nifty. So our take would be on the buying side for this dip with stop loss of 25,000 for Nifty.
Okay. What about your picks this afternoon?
Yeah, so UPL is looking attractive. The way stock managed to give breakout on the weekly chart and holding at higher level and consolidating after a breakout. So we believe that UPL can extend its gain. Possible target towards 760 we may see in the near term perspective. So buy and accumulate would be the strategy with stop loss of 715. Another stock is Laurus Lab. Stock is continuously making higher top, higher bottom formation, and stock is almost trading near to its all-time high trajectory only. After a brief consolidation, now again there is a fresh breakout on the daily chart. Looking at the breakout, we believe that Laurus Lab can extend its gain, and possible target towards 865 to 870 we may see in the near-term perspective. So Laurus Lab is buy with stop loss of 823.
Okay. Laurus Labs UPL on your radar. Meanwhile, even as we're waiting for that big US-India deal, the India-UK Free Trade Agreement is inked. That is what we are hearing. You will have a briefing from the Ministry of External Affairs at 6:30 p.m. today. There is a power-packed delegation that is in the UK right now with Prime Minister Modi. You have top corporate voices there from Sunil Bharti Mittal, Anish Shah, to Ashish Chauhan. Like the whole star cast of corporates is there. This is an important one that is being signed. It's following 3 years of negotiation, and it's going to give a massive boost. In fact, by $34 billion, that's going to be the boost between India and the UK. It's expected to double by 2030. Rishabh Bhatnagar joins in. He's been tracking this very, very closely. Rishabh, you put out a story a short while ago about how whiskey gets cheaper, but I'm sure there's more to that than that headline.
Yes, Tamanna, we're seeing that this major FTA that India is signing in over a decade now with the UK, this is spanning about 26 chapters, including trade, services, as well as intellectual property rights. What we're seeing is that about 99% of Indian exports to the UK will now enjoy zero duty access under this new FTA. Apart from whiskey, like you said, we're seeing that textiles, gems, toys, auto components will be among sectors that will gain from just about 4 to 16% tariff removal from these particular 4 sectors. What we're seeing also is that not just goods, this deal covers services as well, And with the UK, will now be opening access in IT, in finance, education, professional services. And these are major service sector exports that India does in terms of talent as well. What we're seeing also is that there will be sort of temporary access given by the UK to Indian chefs, yoga instructors and musicians as well as part of this deal. And a very important part of this deal is also the social security component of it. There is through which Indian workers in the UK will be able to save about 4,000 crore rupees annually. This is a 3-year social security exemption. Basically, Indian workers, when they are settled temporarily in the UK for up to 3 years, they won't have to pay insurance contributions as part of their salaries there. That's where the saving is coming in from. So it is beneficial to employees as well as employers. And also, apart from goods and services, what we're seeing is that non-tariff barriers will now be also addressed. And therefore, exporters across sectors stand to gain from this particular FTA.
Okay, so exporters across sectors, that's an important one. Rishabh, I'm going to request you to stay with us because there's impact for textile, gems, toys, auto components. It's across the board. This is truly a huge deal, and we've broken it down for you in terms of stocks as well.
But Tamanna, just 2 points out here, and maybe Rishabh spoke about it. The UK is expected to invest about 5 to 10 billion pounds in India until FY30. For energy, clean infrastructure, etc. A lot of material out there which says it's the UK's most significant trade agreement since Brexit. And from all the FTAs that have been signed by India, it is India's most ambitious FTA as well, which enhanced the comprehensive strategic partnership that India has had. So in some sense, it's historic for both the sides as well.
It's historic also. I don't want to say it that way, but we're showing how it's done.
Yeah.
A massive deal without all the kitsch, to put it in different words. You know, promises, threats. This is quietly and beautifully done. Works for both sides. I mean, this is how mature nations come out and do it. But you know, we were talking about stock specific. Which stocks stand to benefit from the historic India-UK free trade agreement? Mahima is joining in with more details.
Right, so I'll start with the textile sector first because that stands to benefit the most because overall tariffs were as high as 12% on textiles, which were being sent to UK. They'll now come down to 0%. Duty-free access to UK's market will provide a level playing field for Indian exporters. Overall, Indian exporters previously faced a high duty disadvantage, and that they were competing against likes of Bangladesh, Pakistan, Cambodia. So that will come down now. And overall, in FY24, around 6.6% of textiles from India went to UK, but that will now increase and grow in double digits. Overall, stocks to benefit from this sector would be Welspun Living, Trident, KPR Mills, Pearl Global, Gokuldas, as well as Arvind Limited. In terms of the other sector, that is footwear, might also benefit from this because the exports had tariffs of 16%, which is now again 0%. So this will benefit that particular segment as well, and almost exports are expected to grow to that $900 million in terms of the footwear segment. Agri is another counter where there will be benefits that will flow in. Staples like turmeric, pepper, cardamom, etc. will also benefit. Zero duty on agri commodities again, so that's a big win for India. Duty access is expected to increase agri exports by over 20% in the next 3 years is what the analysts are penciling in. Now, some counters that could benefit from this include your Tasty Bites, Agro, ADF Foods, which make ready-to-eat foods and export to the UK. In terms of the marine exports, this is also interesting because zero duty access for almost 99% of marine exports. So shrimp, tuna, fish meal, feeds will become duty-free, and stocks that could benefit from this include your Coastal Corp, Apex Frozen Foods, as well as Avanti Feeds. These are the 3 counters that could benefit from that. Engineering goods, now interesting one here, tariff elimination as high as almost 18% under the FTA. So engineering exports to the UK could nearly double in the next 5 years, reaching to almost $7.5 billion by FY30, something that the analysts are penciling in. Now, some counters that could benefit from this include Thermax, Cummins India, there's Grieve Cottons and ABB India that could probably be be benefiting from this. Another few sectors that could benefit includes your gems and jewelry. So your Rajesh Exports, Viber Global, PDS Limited could benefit from this. Chemical companies also stand to benefit. Counters like Gujarat Fluorochemicals, Balaji Amines, Naveen Fluorine, Himadri Specialty, Lakshmi Organics, Fine Organics would also benefit from this as well. So these are the counters that will stand to benefit from the UK FTA.
Got it, Mahima. Sorry, I had to cut you because I think we've got a management with us. Gokuldas Exports, if I'm not wrong, is joining us on the phone line to talk about this. And Mr. Ganpati, thank you so much for taking the time out and speaking to us. How important could this be, or how important is this for the textile sector, for example, and for a company like yours?
Thank you for having me. It's an important event for the industry. Any FTA significantly enhances the export competitiveness of the country. And India's exports to UK, which is just barely above $1 billion, about $1.5 billion, can significantly grow. If you look at Bangladesh, which exports about $3.5 billion from Bangladesh because of duty-free access to UK, we will have a level playing field with that country, and we should be able to export a lot more from India than we used to. We will also have a better deal than China, which goes with duty, and we will have a duty-free access to UK market, and we will be able to compete well with some of the traditionally strong exporting nations. So I believe that the opportunity is at least $1 billion of incremental export opportunity in apparel. It will be good for the Indian apparel industry, and many apparel producers will benefit from this.
Mr. Ganapati, Tamanna here, and thank you so much for speaking with us. You spoke about the relative, relative sort of advantage vis-a-vis Bangladesh. My question to you, sir, is Indian industry prepared and ready to take advantage once the tariff pressure comes off for efficiency, for everything else that Bangladesh has done fairly well as well?
So it's not a relative advantage. We'll have level playing field with Bangladesh, and the relative advantage vis-a-vis China. Yes. Definitely, Indian apparel industry is quite globally competitive. That's the reason why we have 16 billion exports from India. So, Indian apparel exporters can take advantage of it. With the FTA, definitely I feel that, Indian apparel exporters are strong enough that they can do a lot more business with the United Kingdom and expand the opportunity between India and UK.
What do you think is the timeline when all of these advantages start coming in? I'm just asking because I know we'll have some of the details of the deal by 5:30 this evening. There'll be a press conference. There is a huge delegation there as well. But for the textile industry, by when do you think these advantages come in? There is also an investment that the UK will make.
So the advantages will kick in after the zero tariff kicks in. I think it will take several months before we will see that. There will be a lot of procedural steps required to be done by both the governments, including in custom portals, etc. So as and when the zero tariff kicks in, which may be a few months down the line, you will start seeing apparel exports increase. In the meanwhile, I think brands in the United Kingdom and manufacturers in India will start having a lot more dialogues on how do we expand the opportunities there.
Mr. Ganpati, this is Harsh also joining in. Sir, give us perspective. One is you have Bangladesh, of course. You seem to suggest that we are at par where Bangladesh is concerned. What about some of the other countries, Vietnam, etc.? How well are we placed versus them? And does this push
as
you?
I said, right, vis-a-vis all other countries, we will be definitely better placed, and we will have a better opportunity, with respect to the market in UK. So as I said, it's a $1 billion opportunity, in my opinion, incremental opportunity. Let's see how that unfolds. It should take a few years before we fully utilize or take advantage of that situation. But it will happen.
So, and how have you prepared for this? This has been in the offing for a while. Have you been engaging with customers there?
We are working with UK-based clients, and we do have several customers with whom we are in touch with, and we are growing our business relationship with them. So definitely we are prepared. We are talking to many customers, and we will take advantage of this opportunity for India.
So what is the current construct of your top line to the UK? And what does this agreement do likely to your top line maybe in the next 2 to 3 years? How large are you looking at this opportunity from a company standpoint? How large is it for you?
So today UK is not that big. Today UK is about 3 to 4% of our total top line exports to UK. I think it has got the potential to grow substantially. You know, we can even increase our UK revenues by 60-70%, or maybe even 100%. So we'll wait and see. It'll take a few years to get there, but I think as and when the FTA matures, FTA comes into effect, I think we will start seeing a rapid growth in our business with UK-based customers, and a fairly rapid growth.
Looking at this, are you hoping for a favorable deal with the US? How important does that become for your sector, sir?
So with each country, it's different, and we are hoping that with EU and with US, if we do have a good deal with those two countries, then the opportunity for Indian apparel industry will be fairly significant. We're just hoping that will happen soon, keeping fingers crossed and waiting for some good FTAs or BTAs with other countries.
We'll leave it at that, Mr. Ganpati. Thank you so much for taking the time out and being with us, giving us those thoughts. Really appreciate your time. You know, we got to get in closing strategies as well. But Aditya, very quickly, and thank you for waiting patiently with us while all of this was on. Does this entice you enough to make an investment into any of the beneficiaries? Aditya? Okay, I think we've just missed out Aditya. Never mind. Rajesh, if you are with us and if you can hear me, the textile companies, the likes of Gokaldas Exports, Welspun Living, or some of the auto component companies as well, is there a trade in any of these?
So I think Gokaldas Export is consolidating since last couple of days, and it's witnessing some supply pressure around 200-day moving average supply area, which is placed at around 950. So I think any breakout above 950 can take stock further higher towards 1050, 1080 kind of zone. Overall structure is bullish. Stock is consolidating since last couple of month also in a broader range, and the stock is poised for giving breakout over 960. And once the breakout happens, I think rally can extend towards 1100 level also on a short-term perspective for this counter. Even if we analyze on the Welspun Living, this stock is now negotiating with its falling trend line on a monthly chart, which is placed at around 144, 145. Any breakout over 145 can take this stock also higher towards 160 zone. So this is the fourth consecutive month where stock is trying to negotiate with this trend line resistance area. So 145 needs to watch closely. Any breakout should be a buying opportunity. Above 145, one can buy. Stop loss should be placed at around 138.
Okay, Manishi Ray Chaudhary is with us as well of Emmer Capital. And Aditya, are you there with us? If you can hear me, are you firstly to you first, and thank you for waiting patiently. Are you buying into any of these FTA beneficiaries?
Not particularly. If you are a long-term investor, then you're already looking at companies who are exporting. For example, the chemical companies are already under my radar. For example, SRF reported very good set of numbers yesterday, and they are going to be beneficiary of the FTA. So from my perspective, these are short-term news. However, longer term, you need to focus on the quality of the companies per se in order to make investment decisions. But chemicals or shrimp feed companies, where Avanti Feeds or Apex Frozen Food, those look really very interesting, where the valuations are really very attractive.
Mr. Rai Chaudhary, I'm just trying to understand if this is also a confidence booster for the markets overall, a mood booster, so to speak. I know it's not the India-US trade deal, but it's a very significant trade deal with an important trading partner for India, and also sets the template of how we are coming out successfully from a negotiation.
Right. No, you're right about that. I think it's a sentiment booster. We don't get past the details, and as I understand, there were quite a few points of contention.
We'll have to try and get you back. Can barely hear you. All right, Manishi Raichoti there. We'll get back to more on this. Just the timeline there for our viewers who are tuning in right now. 5:30 p.m. is where we'll get details of the deal. Right now, it's a bit, we know the broad contours. We know what sectors will be benefiting, but we'll get details at 5:30 p.m. You will have a joint press conference 6:30 p.m. Well, this is India Standard Time between the two prime ministers, and we'll hear there. Through the evening on NDTV Profit, you are going to hear from some of the largest corporates because there's a big delegation that is there in the United Kingdom. Just final thoughts, just as we're closing, Rajesh Palria, on what you're seeing as the big picks, and do you see any of these sectors which will benefit that could fire tomorrow in trade?
So I think chemical is a basket where one can look at for buying side, because the most of the stocks are on a verge of giving breakout. So chemical would be a sector. SRF, Navin Fluorine, these two stocks can be looked at from that basket. For BT point of view, I think Jindal Steel and Power is looking very attractive. Fresh breakout of a multiple supply zone breakout is happening on the counter on a weekly chart. Looking at the breakout, I think Jindal Steel and Power can be looked at for BTST point of view. Upside target we are projecting on 1020, 1030 with stop loss of 982.
Aditya, textiles, chemicals, even a Tata Motors, do you think these are some of the stocks that you should look at for a more detailed response, maybe tomorrow once the contours of the deal are cleared?
The Tata Motors is going to be one of the biggest beneficiaries because of JLR, and imports of JLR into India would be far more easier. So that is one stock that is going to be a major beneficiary. And as I said, chemical stocks, seafood stocks, and textile stocks for that matter, all of these stocks will continue to benefit from the UK-India FTA.
Okay. Thank you so much, Aditya and Rajesh, for bringing in, that perspective on a day when the markets have been pretty dismal, honestly. I hope there is some good news coming in, because from a Nestle to a Trent, you've had the consumer space suffering. It's only Eternal, which is really running up. Not a great close, Harsh.
Well, no, not really. We're down around 2/3%. We're probably closing at the low point of the day. Let's pull up the intraday chart. That'll get us better perspective. Of course, you have SBI Life's numbers flashing on the bottom of your screen. You want to take note of that. That's a Nifty 50 company. But there you go. Very, very close to the day's lows. 25,018 was the day's low that we've hit. Now, let's pull up the heat map as well. And let's quickly look at the heat map, and within that you're seeing Eternal up around 3.5+%. So that one is still perked up in trade. Dr. Reddy's, despite a weak set of numbers coming in, especially from North America, stock still doing okay. Tata Motors, of course, the India-UK FTA, one of the reasons why Tata Motors is up, but Nestle is down nearly 6, again on the back of numbers. So numbers really dominating headlines. We'll have Shriram Finance's numbers coming in tomorrow, so focus there. Bajaj Finance, on the back of the numbers likely to come in again today evening, the stock is down 1% or thereabouts. So it's a fairly tepid day of trade. The breadth not doing us any favors either, and therefore you're seeing that 160 odd point lower on the Nifty 50 index. Let's pull up the advanced decline now very quickly, and on the exchange, and that will give us just the way in which the breadth has moved. That is reflective of largely how the Nifty's breadth is as well. So you're seeing the same kind of tone and tenor even among...
A flurry of news breaking as we're closing. First of all, Bajaj Finance numbers have come, so you might want to look at those. We also have the joint press conference on the trade deal, which has started. We'll cut across to that very quickly as well.
और ये ब्रिटिश कामदारों के लिए बहुत अच्छी होगी वो मैन्युफैक्चरिंग में आगे बढ़ के, जैसे विस्की डिस्टिलरी है स्कॉटलैंड में, और लंदन में, मैनचेस्टर और लीड्स में सर्विस सेक्टर है, और जो लोग इसका उपयोग करते हैं यहाँ यूके में इंडियन सामान अच्छे दामों में मिलके.
It is good for consumers because it will bring down prices on Indian goods in the United Kingdom, like clothes and shoes and food. and it will deliver benefits for the long term. It will add about £4.8 billion to the UK economy every year and £2.2 billion to wages, and hundreds of millions of pounds to regions and nations up and down the United Kingdom.
और ये और यहाँ के कंज्यूमर के लिए बहुत अच्छा रहेगा और ये दोनों देशों में जो बातचीत होगी, ट्रेड होगी, जो बढ़ेगा.
Don't bother, we can use English word in between. Don't worry about it.
Sorry, His Excellency, I've lost the speed. His Excellency, I've lost the speed.
Yeah, no problem. Yeah.
Sorry, do you want me to repeat?
Yes.
Yes, okay. I think we understand each other well. I mean, look, and we both know this is the biggest and most economically significant trade deal that the UK has made since leaving the EU. And I think I can say that it's one of the most comprehensive deals that India has ever done. So thank you, Prime Minister, for your leadership and for your pragmatism. And I'd like to thank everybody who's worked so hard to get this deal over the line.
और आज ये जो बहुत बड़ी कॉम्प्रिहेंसिव डील तैयार की है और कामयाब की है, उसके लिए मैं आपको बहुत बहुत शुक्रिया कहना चाहता हूँ प्राइम मिनिस्टर साहब. और ये दोनों टीम जहाँ काम करके ये जो काम पूरा किया है, इसके लिए मैं बहुत खुशी हूँ.
And you know, as I've said before, and as we were just discussing in our tete-a-tete, we've entered a new global era, and that is one that requires us to step up, not to stand aside, to deliver for the British people by building deeper partnerships and alliances. And today is very much confirmation of that approach.
और अभी वहाँ पे बात सब कर रहे थे आपके साथ बैठ के, हमने बातें की कि नई ग्लोबल ईरा पैदा करनी है और इसके लिए हमको सब कुछ करना है जो हम सक्षम है, जिसके बाद ब्रिटिश लोगों को यहाँ पे बहुत ही बड़ी पार्टनरशिप मिलेगी आपके देश से, और यहाँ पे जो हम करने वाले हैं उससे दोनों देशों को फायदा होगा.
And the UK has been negotiating a deal like this for many years, but it is this government that got it done. And with it, we're sending a very powerful message that Britain is open for business. And that is already generating huge confidence. Today we're announcing nearly £6 billion in investment and export wins between India and the United Kingdom, creating over 2,200 jobs for British workers.
और ये जो ऐसी नेगोशिएशन मैं पहले बहुत की है, पर ये जो अभी हमने किया है ये बहुत ही बड़ा होगा, क्योंकि ब्रिटिश लोगों को और संसार को ये जानेंगे कि ब्रिटेन इज़ ओपन फॉर बिजनेस, व्यापार के लिए खुला है. और ये ब्रिटिश लोगों के लिए भी बहुत अच्छा होगा, क्योंकि ये 6 बिलियन पाउंड्स के 6 बिलियन पाउंड्स यहाँ पे नहीं पैदा होगा. और यूके और इंडिया ने जो ये साथ काम करने का निर्णय किया है, इससे 2,200 जॉब्स भी पैदा होंगे यहाँ पे.
But of course, as we've discussed this morning, this is not the extent or the limit of our collaboration with India. We have unique bonds of history, of family, and of culture. And we want to strengthen our relationship further so that it is even more ambitious, modern, and focused on the long term, the step up in the relationship that we discussed in the autumn of last year. And that's why, alongside this trade deal, I am delighted that we're building on our partnership by launching our India-UK Vision 2035 strategy, pledging to work more closely on areas such as defence, migration, climate, education and health.
और इस सुबह जब हमने बात की थी कि एक आपस के साथ कोलैबोरेट करेंगे, इससे ये साबित होता है कि हम लोग अपनी इतिहास, फैमिली और संस्कृति को बहुत ही मजबूत बनाना चाहते हैं और जो मजबूत रहा है, और इसीलिए भविष्य में हम ये दोस्ती, ये रिश्ता स्टेप अप करना चाहते हैं। वो ट्रेड डील बना के और इंडिया और यूके 2035 विजन के आधार में वो जो डिफेंस है, माइग्रेशन है, एजुकेशन है, उस पर ध्यान देके।
We will also build on the fantastic work we already do in technology and innovation, celebrating the one-year anniversary of the landmark Technology Security Initiative and making the most of the opportunities it represents for both of our countries.
और टेक्नोलॉजी और इनोवेशन के क्षेत्र में भी अभी पहली एनिवर्सरी मनाया है जो हमने, वो टेक्नोलॉजी, इनोवेशन, सिक्योरिटी के आधार पे है और ये आगे बढ़ेगा, इसका पूरा विश्वास है।
Well, okay, we're dipping in and out of that press conference. Keir Starmer there speaking, and translation coming in of the deal as it is. There's going to be a very, very big move on lowering of tariffs. India will in fact be lowering tariffs on a whole host of products from the United Kingdom. Let me see if we have that feedback and then we'll go back to it right away. We are also going to see an average tariff go from 15% to 3%. In fact, Prime Minister Modi is speaking now. Let's listen in.
Namaskar. Prime Minister Starmer, friends, namaskar, good morning.
सबसे पहले मैं प्रधानमंत्री स्टार्मर के गर्मजोशी भरे स्वागत सत्कार के लिए हार्दिक आभार व्यक्त करता हूं। आज हमारे संबंधों में एक ऐतिहासिक दिवस है। मुझे प्रसन्नता है कि कई वर्षों की मेहनत के बाद आज दोनों देशों के बीच कॉम्प्रिहेंसिव इकोनॉमिक एंड ट्रेड एग्रीमेंट संपन्न हुआ है।
First of all, let me extend my heartfelt gratitude to Prime Minister Starmer for the warm welcome and gracious hospitality. Today marks a historic day in our bilateral relations. I am pleased to note that after many years of hard work, the comprehensive economic and trade agreement between our two countries has been concluded today.
यह समझौता मात्र आर्थिक साझेदारी नहीं, बल्कि साझा समृद्धि की योजना है। एक और भारतीय टेक्सटाइल, फुटवियर, जेम्स एंड ज्वेलरी, सी फूड और इंजीनियरिंग गुड्स को यूके में बेहतर मार्केट एक्सेस मिलेगा। भारत के एग्रीकल्चर प्रोड्यूस और प्रोसेस्ड फूड इंडस्ट्री के लिए यूके की मार्केट में नए अवसर बनेंगे। भारत के युवाओं, किसानों, मछुआरों और एमएसएमई सेक्टर के लिए यह समझौता विशेष रूप से लाभकारी सिद्ध होगा। वहीं दूसरी ओर भारत के लोगों और इंडस्ट्री के लिए यूके में बने प्रोडक्ट्स जैसे मेडिकल डिवाइसेस और एरोस्पेस पार्ट सुलभ और किफायती दरों पर उपलब्ध हो सकेंगे।
This agreement does not merely pave way for economic partnership, but is also a blueprint for our shared prosperity. On the one hand, Indian textiles, footwear, gems and jewelry, seafood, engineering goods will get better market access in the UK. Indian agricultural products, processed food industry will find new opportunities in UK's market. This agreement will prove especially beneficial for India's youth, farmers, fishermen and MSME sector. On the other hand, people and industries in India will be able to access products made in the UK, such as medical devices and aerospace parts at affordable and attractive prices.
इस समझौते के साथ ही डबल कंट्रीब्यूशन कन्वेंशन पर भी सहमति बनी है। इसे दोनों के सर्विस सेक्टर, विशेषकर टेक्नोलॉजी और फाइनेंस के उसको एक नई ऊर्जा मिलेगी। ईज ऑफ डूइंग बिजनेस को गति मिलेगी, कॉस्ट ऑफ डूइंग बिजनेस घटेगा और कॉन्फिडेंस ऑफ डूइंग बिजनेस बढ़ेगा। साथ ही यूके की अर्थव्यवस्था को भारतीय स्किल टैलेंट मिलेगा। इन समझौतों से दोनों देशों में निवेश बढ़ेगा और रोजगार के नए अवसर बनेंगे। इतना ही नहीं, दो लोकतांत्रिक देशों और विश्व की दो बड़ी इकोनॉमीज के बीच हुए यह समझौते वैश्विक स्थिरता और समृद्धि को भी बल देंगे।
Along with this agreement, we also have reached a consensus on the Double Contribution Convention. This will inject new energy into the service sectors of both countries, especially in technology and finance. It will promote ease of doing business, reduce from India's skill talent. These agreements will enhance investments and generate new employment opportunities in both countries. Moreover, as agreements reached between two democracies and two of the world's major economies, they will lend support to global stability and global prosperity.
फ्रेंड्स, अगले दशक में हमारी कॉम्प्रिहेंसिव स्ट्रेटेजिक पार्टनरशिप को नई गति और ऊर्जा देने के लिए विजन 2035 जारी किया जा रहा है। यह टेक्नोलॉजी, डिफेंस, क्लाइमेट, एजुकेशन और पीपल टू पीपल कनेक्ट के क्षेत्रों में एक मजबूत, भरोसेमंद और महत्वाकांक्षी साझेदारी का रोड मैप बनेगा।
Friends, to give new momentum and energy to our comprehensive strategic partnership in the coming decade, today we are launching our Vision 2035. Vision 2035 is a roadmap that will form the basis of a strong, trustworthy and ambitious partnership in the fields of technology, defense, climate, education and people-to-people connect.
डिफेंस और सिक्योरिटी में साझेदारी के लिए डिफेंस इंडस्ट्रियल रोड मैप बनाया गया है। हमारी टेक्नोलॉजी सिक्योरिटी इनिशिएटिव को और मजबूत करने पर काम किया जाएगा। इट इज अवर कमिटमेंट दैट फ्रॉम एआई टू क्रिटिकल मिनरल्स, semiconductors to cyber security, we shall create the future together.
A defense industrial roadmap has also been drawn up for partnership in defense and security. Work will continue on strengthening our technology security initiative. It is our commitment that from AI to critical minerals, from semiconductors to cyber security, we shall create the future together.
फ्रेंड्स, शिक्षा के क्षेत्र में भी दोनों देश मिलकर एक नया चैप्टर लिख रहे हैं। यूके की 6 यूनिवर्सिटीज भारत में कैंपस खोल रही हैं। पिछले हफ्ते ही भारत के गुरुग्राम शहर में साउथ हैम्पटन यूनिवर्सिटी कैंपस का उद्घाटन हुआ है।
Friends, in the field of education too, we are writing a new chapter together. 6 universities of the UK are opening their campuses in India. Just last week, the University of Southampton inaugurated its campus in the city of Gurugram in India.
Friends, पहलगाम में हुए आतंकवादी हमले की कठोर निंदा के लिए हम प्रधानमंत्री स्टारमर और उनकी सरकार का आभार व्यक्त करते हैं। हम एक मत हैं कि आतंकवाद के खिलाफ लड़ाई में दोहरे मापदंडों का कोई स्थान नहीं है। हम इस बात पर भी सहमत हैं कि एक्सट्रीमिस्ट विचारधारा वाली शक्तियों को डेमोक्रेटिक फ्रीडम का दुरुपयोग नहीं करने दिया जा सकता. Those who misuse democratic freedoms to undermine democracy itself must be held account. इकोनॉमिक ऑफेंडर्स के प्रत्यार्पण के विषय पर भी हमारी एजेंसी सहयोग और समन्वय से काम करती रहेगी.
Friends, we thank the Prime Minister and his government for strong condemnation of the terrorist attack in Pahalgam. We are united in the belief that there is no place for double standards in the fight against terrorism. We also agree that the forces which espouse extremist ideologies should not be allowed to misuse democratic freedoms. Those who misuse democratic freedoms to undermine democracy itself must be held to account. Our security agencies will continue to enhance cooperation and coordination on matters such as the extradition of economic offenders.
Friends, इंडो-पैसिफिक में शांति और स्थिरता, यूक्रेन में चल रहे संघर्ष और पश्चिम एशिया की स्थिति पर हम विचार साझा करते रहे हैं. हम जल्द से जल्द शांति और स्थिरता की बहाली का समर्थन करते हैं. सभी देशों की संप्रभुता और क्षेत्रीय अखंडता का सम्मान अनिवार्य है. आज के युग की मांग विस्तारवाद नहीं, विकासवाद ही है.
Friends, we have continued to exchange views on peace and stability in the Indo-Pacific, the ongoing conflict in Ukraine, and the situation in West Asia. We support early restoration of peace and stability. Respect for sovereignty and territorial integrity of all countries is essential. Today's era demands development, not expansionism.
Friends, पिछले महीने अहमदाबाद में हुई दुर्घटना में मारे गए लोगों में कई यूके के नागरिक भाई बहन भी थे. उनके परिवार वालों के प्रति हम संवेदनाएं प्रकट करते हैं. यूके में रहने वाले भारतीय मूल के लोग हमारे संबंधों में एक लिविंग ब्रिज का काम करते हैं. दे डिड नॉट जस्ट ब्रिंग करी फ्रॉम इंडिया बट ऑल्सो क्रिएटिविटी, कमिटमेंट एंड कैरेक्टर. इनका योगदान सिर्फ यूके की समृद्ध इकोनॉमी तक सीमित नहीं है, बल्कि यूके के कल्चर, स्पोर्ट्स और पब्लिक सर्विस में भी दिखता है.
Friends, last month in the unfortunate plane crash in Ahmedabad, our sisters and brothers of the UK were among those who lost their lives. I would like to express my deepest condolences to the families of the victims. The people of Indian origin in the UK form a living bridge that connects our two nations. They did not just bring curry from India, but also creativity, commitment, and character. Their immense contributions are not just limited to UK's prosperous economy, but are also visible in UK's culture, sports, and public service.
Friends, जब भारत और यूके मिले और वह भी टेस्ट सीरीज के दौरान, तो क्रिकेट का उल्लेख तो करना ही पड़ता है. फॉर बोथ ऑफ अस, cricket is not just a game, but a passion, and also a great metaphor for our partnership. There may be a swing and a miss at times, but we always play with a straight bat. We are committed to building high-scoring सॉलिड पार्टनरशिप. आज संपन्न हुए समझौते और विजन 2035 इसी स्पिरिट को आगे बढ़ाने वाले माइलस्टोन है.
Friends, I would be remiss not to mention cricket when India and the UK are coming together, especially during a test series. For both of us, cricket is not just a game, but a passion. And also a great metaphor for our partnership. There may be a swing and a miss at times, but we always play with a straight bat. We are committed to building a high-scoring, solid partnership. The agreements concluded today and Vision 2035 are milestones which advance this very spirit.
प्रधानमंत्री जी, मैं एक बार फिर आपके आतिथ्य सत्कार के लिए आभार व्यक्त करता हूं। मैं आपको भारत यात्रा करने का निमंत्रण भी देता हूं और आशा करता हूं कि हमें शीघ्र ही भारत में आपका स्वागत करने का अवसर मिलेगा। बहुत बहुत धन्यवाद।
Prime Minister, I thank you once again for your warm hospitality. I would also like to take this opportunity to extend an equally warm invitation to you to visit India.
Conclusion of a very, very successful trade deal. A lot of that thrown in as well. Reference to the dastardly Pahalgam attacks and thanking the United Kingdom for their support on it. Reference to the very unfortunate Air India mishap, which was on its way. That flight was on its way to the UK. So all of that coming in. But Rishabh Bhatnagar joining in for more on that. Rishabh, we're going to get the details of the deal at 5:30. But what are you gleaning from the speeches from both the heads of state?
Right, Tamanna, the final document upload might be delayed till 5:30 is what we're hearing, but we have most of the details already. It's now public. We're seeing that about $56 billion in bilateral trade as of now. That will double to $120 billion is what we're hearing by 2030. This is part of the FTA deal. The FTA, of course, covers nearly 100% of the trade value. There's a few sectors that I didn't speak about earlier. One of them is leather. What we're seeing is that UK tariffs of up to 16% will be scrapped on leather. That means that India will gain roughly 5% market share in the next 1 or 2 years. Those are immediate gains. Those are not long-term horizons, but in the next 1 or 2 years, this FTA is poised to ensure that Indian makers will gain about 5% market share in the United Kingdom. And this will unlock also about $900 million worth of exports in leather as well as footwear. Pharma is something that we haven't spoken about, and pharma is, of course, now a two-way street in terms of medical devices. Like Prime Minister Modi just said, that medical devices that are made in the UK will now be cheaper for Indians to buy here. So a lot of life-saving medical devices as well as drugs now accessible to the Indian audience. So what we're also seeing is like medical devices like X-ray as well as ECG machines will now be duty-free. So if you're importing any of these from UK, no tariff will be levied on those. In terms of chemicals now, that is something also we didn't speak about. This will boost India's chemical exports for anywhere about 30 to 40%. This is all mentioned in the FTA. Exports are projected to reach roughly $750 million by FY26. Again, a very near-term gain, a very short-term gain, not the 5 and 10-year numbers that other FTAs boast of. What we're seeing is that in terms of jewelry exports, about 940 million India already exports to the UK. About 400 million is jewelry alone, and that is expected to double in the next 2 to 3 years. So again, a very short-term goal that we're seeing in terms of chemicals, in terms of jewelry, in terms of pharma. Electronics, another one. There is zero duty access to the UK for Indian electronics items. That is something that the government has been pushing for a really long time in India. Smartphones have been a major benefactor of India's electronics push, and we will see UK emerge as a very key market for Indian electronics manufacturers.
Okay.
Those and
so a lot to unpack.
That's
right. That's right, Rishabh. A lot to unpack there in terms of the details of the deal. It's very wide-ranging, but it's I think a landmark deal because it's really bringing down the level of tariffs dramatically. We spoke to Gokul Das exports, and they said that now there's a level playing field, at least in textiles, between India and Bangladesh. For those who like their tipple, whiskey, gin, etc., is going to get much cheaper. But you're going to see the impact over a whole host of other factors as well. Watch out for a Tata Motors tomorrow. It's one of the many, many stocks might be impacted.
Yeah, should be interesting to see how this shapes up. Big deal for both countries, and let's see, hopefully win-win for everybody. But as Prime Minister Modi said, a long partnership. But for now, we call it an end to this very long show today from Tamanna, Harsh and me. Thank you so much for tuning in, but stay tuned for more news and updates on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
that?
for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What?
All right, good evening. Welcome to this special edition of Profit 360. I'm Vishwanath Nair, and today on this special show, we will be giving you exclusive details of how a financial web that stretches from boardrooms to backrooms, where public money, shady loans, and big names are colliding.
That's right, Vishwanath, because Yes Bank's loan book is under the scanner again, but this time it's not just about mismanagement. It's about alleged bribes, backdated approvals, and a 14,000 crore trail that leads straight to Anil Ambani.
Right, so the Enforcement Directorate is now investigating whether Yes Bank officials looked the other way as money was being funneled to defaulters. And at the heart of it all is Reliance Communications and other Anil Ambani Group companies. Once a telecom giant, now a defaulter being branded as a fraudulent account by India's largest public sector bank. To bring us more details, let me go across to my colleague Shrimi to take us through what exactly happened today. Shrimi.
Yes, Vishy. So, the Enforcement Directorate has launched a sweeping investigation into Reliance Anil Dhirubhai Ambani group companies. And in fact, it's uncovering and what it calls the well-planned and deliberate scheme to siphon off 1,000 crores of loans through shell companies. And in fact, this is the move coming after the FIR, which is being launched by Central Bureau of Investigation, and where now ED is taking up this probe under PMLA, Prevention of Money Laundering Act. So what ED sources are telling us that they are probing a very serious allegations of money laundering and the diversion of loan amount worth 3,000 crore and from the Yes Bank, and that is between 2017 and 2019. And in fact, the search operation has been conducted since morning, covering 35 premises of at least 25 top senior executives of these companies, and they have also kind of searched 50 such companies is what inputs are coming from the sources in the Enforcement Directorate. And in fact, certain red flags ED is kind of giving at this point of time, like the kind of shell companies being used, the faking documents, as well as the evergreening. And in fact, it's pointed out that how RHFL corporate loan jumped from somewhere 3,742 crore to 8,670 crore, and that is also coming now under ED scanner. In fact, the ED is also kind of citing the undisclosed foreign income as well, and in fact, it's saying that some of those fraudulent account, declared by SBI as well as the Canara Bank is soon to take up by CBI. They are going to file a formal complaint on that, and that will also be the part of the PMLA investigation. Vishy?
Right, Shrimi, thanks so much for that update. Stay with us. This is obviously not really beginning today. All of these ED searches didn't begin today. There is a pretty intricate web and a paper trail that the ED is actually following, because let's remember, it's not just started out with these searches that have taken place today. This is actually following these FIRs that were registered by the CBI, which have alleged large-scale financial irregularities. Now, as part of the operation, like Shrimi rightly mentioned, we saw the ED officials searching and examining records of over 50 firms allegedly connected to the case, and we're also seeing close to 25 individuals that have also been questioned. We'll get you details of that in just a moment. But before that, let me quickly go across now. We have Ashwin Thul, advocate, standing by and joining us for more details on this particular case. Thank you so much for joining us, sir. Advocate Ashwin Thul, practicing in the Bombay High Court and the Supreme Court. First, take us through, your insight into this entire case. This is not something that is just recent. We're looking at this actually going right up to 2017. And this is also not the first time that, Reliance Communication or Anil Ambani have actually come up as being fraudulent. Of course, the irregularities aspect has been delved into only now, but we're looking at something that dates back to as early as 2017.
That's right. So I wouldn't be in a position to tell you too much about this case other than what is already available in the public domain. But the way usually the ED investigations are conducted is only after there has been a predicate offense that is registered. It's only after a proceed of crime that is received from a predicate offense, which in this case is obviously the allegation being that the money has been siphoned off, public money has been siphoned off. There has been a lot of loan taken to maybe Green Lawn, another loan. All these sanctions of these loans by several other entities involved were done without following the norms, rules, and especially when you're dealing with public money, there are a lot of rules and regulations that the banks or NBFCs or any of them have to follow. So given that there has been a violation or there is an allegation of violation, the investigating agencies such as CBI are entitled to look into this because they have to look after where there is public money involved. And once it is found that there is some kind of, well, you have to be mindful of the fact that the Enforcement Directorate usually starts the inquiry by way of an ECIR. And it is only when they have, and that's what the legislation mandates, that only when they have substantial material and a reason to believe that the offense of laundering has been committed, and that reason to believe has to be in writing. So only after, I think, a lot of search, as you rightly pointed out, that after looking at several documents, they must have come to some kind of a conclusion that there appears to be a reason to believe that some amount of laundering has taken place, that they have now carried out these searches.
Thank you so much for that, and stay with us because we also have Sriram Subramanian, MD and founder InGovern, joining us. Sriram, welcome to NDTV Profit. Good evening. Thank you so much for joining us. What changes, or what would you actually look at in terms of recommendations of how banks assess large corporate loans, especially in cases like this where we've seen that promoters may have a history of defaults or questionable governance?
I think, firstly, there used to be a scenario of phone banking where loans would be sanctioned just by politicians or businessmen calling and by the names of the business groups. The credit committee's appraisal and other factors should definitely be taken into account. The project metrics should be taken into account, and one individual within a bank should not override credit decisions and loan sanction decisions. That is happening. That happened with Yes Bank. That happened with many public sector banks in the erstwhile. Probably even today in smaller amounts, it is still happening at branch levels or at other levels, zonal levels. Unfortunately, politicians tend to have a big say, and banks also tend to be pliable from that perspective. But vigilance within the bank should increase. They should think that they are actually sort of custodians of the funds, of depositors, of shareholder funds. Only then it will be good banking.
Okay, let me come back to Ashwin. Ashwin, what does it legally mean when a borrower is declared fraudulent by a bank? Does it automatically then lead to a CBI case?
So it's not as automatic as that. As I said, banks usually conduct their own investigation and see whether their norms have been followed, whether how has been the conduct of the borrower vis-a-vis returning the money. Is it a bona fide default? They do also whether there have been, because there are all these committees who usually sit to ascertain whether a certain bank should be given to a certain entity or no. So whether all those rules have been followed, and if not, then after conducting their report, they usually submit a complaint to the investigating authorities such as the CBI. And usually what I have seen is that when a responsible authority, like any bank, does submit something like a State Bank of India or a Central Bank of India does submit a complaint, the cognizance of it is taken very seriously by investigating agencies, and they usually immediately act upon it, and they also act upon their internal report to navigate through their own investigation.
Right. Thank you so much, Ashwin. Ashish, I'm sorry. I just want to go across to my colleague Shrimi for a quick news break that has come in. And this is coming from sources who are telling us that the ED has found serious charges of fund diversion that have happened in Reliance Infra. Specifically about 10,000 crore rupees worth of funds that were diverted through this company. And this is the only listed company currently from the Anil Ambani Reliance group of companies. Shrimi, if you can take us through the details of what exactly you found from your sources.
Clearly, Vishy, it seems like ED widening its probe, and all companies are coming now under scanner. The sources tells us, and this is the information we are breaking here at NDTV Profit, that around 2,800 crore investment by Reliance Mutual Funds and Yes Bank 81 bonds are now under scanner. That investigation will go on, and in fact there also the ED suspect quid pro quo. In fact, it's flagging how the bonds later written off. It says that a huge amount of public money get lost because of this the entire quid pro quo, which ED is flagging off at this point of time. In fact, Reliance Mutual Funds, Yes Bank bond investment is also raising alarm, is what ED hinting at. The total uncovered, if you see, it's 10,000 crore of diversion by Reliance Infra via undisclosed C company is what investigation reveals so far. It also says that how, 5,480 crore haircut by Reliance Infra, where only 4 crore has been recovered so far in cash. Then they are also talking about how these rest, kind of settle through non-operational DISCOM recovery seen as unlikely. So the source is telling us here that the DISCOM used in around 6,400 crore settlement are also defunct. So clearly this ED is widening its probe, and we will see, Vishy, more action, more search operation coming in most of these companies where the red flags are coming from the investigator side.
Shrimi, thanks so much for those updates. We'll continue tracking that. Stay with us. But let me quickly go back to Sriram Subramaniam, who's still with us. Would you say for retail shareholders who had invested in Yes Bank back then, what recourse, if any, would they have when governance failures lead to such large-scale frauds like this?
I don't think they need to fear anything, retail shareholders of Yes Bank, because Yes Bank had in 2020 had a change in management, recapitalization, and shareholders, of course, were different. SBI stepped in, the new management stepped in. Rana Kapoor, who was the erstwhile management, was arrested. So there is a marked difference between the Yes Bank of today and the Yes Bank of then, when all these loans were sanctioned. Be that as it may be, I would think if Yes Bank is able to recover any of these amounts, for that matter, it may add to the bottom line of the bank. But I would doubt whether any of these is recoverable. This will drag on for years in courts. And I don't think there is anything positive or negative for Yes Bank, today's Yes Bank.
Right, Sriram Subramaniam and Ashwin and my colleague Shrimi, please stay with us. But this is something that, like we've been saying, hasn't really begun with these ED searches today. There's been a pretty intricate web and a paper trail that the ED is following. And to give us a background of this entire case, dating back to almost 2017, Vishwanath, give us the details. How were these loans sanctioned and who's under the scanner? Give us all the context.
Right. So just taking you through some of the context that has been set through what our sources are telling us at NDTV Profit here right now. So if you were to look at what exactly led to this entire thing, between 2017 and 2019, a number of transactions took place between Yes Bank as well as the Reliance Anil Ambani Group companies. Essentially, a 3,000 crore loan was approved by Yes Bank and given to the Reliance Anil Ambani Group companies, and then those funds were being diverted. Let's try and understand how exactly the questions were raised in this question. Specifically, credit approval memorandums, which CAMs is the usual term that is used. These were backdated to ensure that the loans are in compliance. Furthermore, investments were proposed without any thorough due diligence or credit analysis to these Reliance Group companies. The other important point that sources are telling us that ED has found is that the loans were diverted to many group companies and other shell companies so that they can be siphoned off and out of the system. Loans were given to entities which had weak financials. Clearly, their financial strength wasn't there to be receiving these loans. The documentation on these loans was also not proper. That's clear from also the CAM's backdated system that has been followed here. Due diligence was not being conducted by the bank officials at that point in time between 2017 and 19, while the loans were being extended to these Raga companies. Borrowers have had common addresses, they've had common directors. This is clearly a red flag that banks watch out for before giving loans to any group companies. Another thing is that loans that were given to these companies were then onward lent, meaning that in the form of a corporate loan was extended to other group entities and shell companies on the same date that they were received by the original borrower from Yes Bank. Apart from what has happened here, we also need to look at which other entities are under the scanner at this point in time. If you were to look at the details that have been shared by SEBI to the Enforcement Directorate, they've actually pointed out Reliance Home Finance as a company where there were a number of loans that were being extended, corporate loans specifically. And there has been a dramatic increase in the corporate loans extended by Reliance Home Finance between FY18 and FY19. So in this period of time, a lot of money has gone out of Reliance Home Finance. Another big company, which we mentioned earlier in the show, Reliance Communications, that is already in the midst of a fraud allegation by State Bank of India. SBI has actually declared RCom as a fraud for diverting funds and misusing the loans. What we also know is about Canara Bank. Now, Canara Bank has declared RCom as a fraud for loans involving roughly about 1,050 odd crore, which were borrowed by this company. So that while that tag had happened a while back, Canara Bank was forced to withdraw that fraud tag because the Supreme Court order had required banks to give due personal hearing to all the borrowers before classifying them as fraud. So Canara Bank is in the process of doing that. In fact, the management was speaking on an earnings call earlier, and to our question, they responded that our stance on the account has not changed. However, we will follow whatever the Supreme Court order is and ensure that we are in compliance with the order.
Right, Vishwanath, thanks so much for those that very, very comprehensive insight and background into the case. But let me quickly also go across to this ground report filed by my colleague Paras Dama just a while ago from Ballard Estate in Mumbai. Let's go over to that.
The Enforcement Directorate, which is investigating thoroughly in money laundering case in the country, has today started the search operation in more than 30 to 40 places in Mumbai and other part of the countries. This whole incident is regarding the FIR which was filed by CBI. After this, the ED started investigating this entire scam. Many agencies help in the investigation, including institutions like National Housing Bank, SEBI, National Finance Reporting Authorities, and Bank of Baroda. This entire case is regarding Reliance Anil Ambani Group companies suspected of money laundering of rupees 3,000 crore is in now scanner of Enforcement Directorate. The thing that came to light in the initial investigation of ED are shocking. It is being told that under a well-planned conspiracy, money was diverted by banks, shareholders and common investors. Not only this, there are allegations of bribing Yes Bank officials. The role of the bank prompter himself is also under investigation. According to ED sources, it is suspected that loans worth about rupees 3,000 crore were taken from a bank between 2017 and 2019, and during the same period, money was also sent directly to the bank promoters. This is the ground for the scam was prepared even before the loan was approved. The investigation also revealed that the necessary documents for the companies to which the Yes Bank gave loan were also prepared later. There were blatant violation of the bank loan policy. Huge loans were given without any financial check or documents. Still, from the morning, this search operation is going on in the different parts of Mumbai and the different states of a country, and over there, ED is continuously searching for many clues.
All right, so that was Paras who was doing a show right outside, actually a quick shot from right outside the premises where the ED is conducting those investigations. Now, I want to go to Advocate Ashwin Thoul. So, Mr. Thoul, just help me understand here. Prevention of Money Laundering Act, the PMLA, under which these actions are being undertaken by the Enforcement Directorate. What does this lead to? Let's say that the ED is able to prove in court that these allegations are actual fact and the court accepts that. Now, of course, this is sometime in the future, but what exactly does that lead to? How does the court typically take these PMLA cases and the decisions that the court takes after?
You see, primarily what the ED does in their investigation is that they follow the trail of the proceed of crime. Now, in an offense like this, there are two types of procedures. One is the kickback, the alleged kickback that the public servant has received. And the second is whatever has come out. So, for example, the loan itself, could also be treated as a proceed of crime. Now, anywhere and everywhere where this money has traveled, the entire trace is going to be pulled out. The ED officers do have the power to seize and attach properties. These properties then can be put before the adjudicating officer, and then those can be appropriated, and whatever the money or whoever is seeking claims from it can benefit from or make a claim before the adjudicating officer and take whatever recovery he can. That is one aspect. The other is, of course, the whole process of proving and the trial of the entire whether the offense of converting the money from black to white has actually taken place. Now, these the twin conditions which is usually used to arrest people under this law is a stringent one which does not allow bail. So if anybody gets arrested, then the securing any bail pending trial is a very, very uphill task, and it's been in the news since the past so many years. Other than that, once the trial takes place, then if one is found guilty, then the punishment is up to 7 years. But we've seen that the process of trial, because the volume is so heavy of these investigations and these cases, there's massive paperwork involved. It takes a lot of time in proving the whole Evidence Act. Following those entire process takes a lot of time, and sometimes and therefore we've not seen the then culminating very soon or seen too many convictions under it, as we've seen in the past, recent past about it.
Understood that. I want to go to Sriram Subramanian. Mr. Subramanian, I just wanted to get your view on, earlier to my colleague's question, you said that shareholders don't need to worry, and that may be true. But there is an 81 bond and a bunch of retail investors who had put money there. And while that case has already been through multiple courts over the validity of those 81 bonds, the courts have stood firm that they had to be written off. But if investors are able to point out that maybe there were fraudulent investments in those 81 bonds, is there something that can be done from the bank's point of view?
I don't think there is recourse to the decisions that have been taken from giving loans to dubious corporations like the ADAG group. So I don't think the bank, because the 81 bonds is on the liability side, it is commingled with other probably healthy loans that were given by the bank. So it cannot be figured out that those the 81 funds that were raised were specifically apportioned towards the ADAG group or any other group for that matter. So from that perspective, we cannot club these two transactions, so to say.
Right. Thank you so much for that great insight, and thank you to Ashwin and my colleague Shrimi, who have been standing by with these very crucial updates that we have been bringing you since the morning exclusively on NDTV Profit. But like we've been saying, key questions still emerging from this entire case, Vishwanath. One is, of course, who pays for these fund diversions by the Anil Ambani Reliance Communications Group? Why has ED taken so long to begin these investigations? And more importantly, and an overarching one, how far can this corrupt nexus go? We'll continue addressing those and bringing you all of the latest. But for now, it's a wrap on this special show, and more news and updates after this very short break on NDTV Profit.
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is my Mavashajani, and today we're going to dissect Bikaji Foods. Of course, the numbers, but outside of that, there's plenty of things happening with regard to this large player within the packaged food segment. Let me first start off with volumes. Well, volume growth in core markets is, of course, on a high base, not as strong, but you want to do well in the non-core. So the core markets, which is typically West India and Rajasthan in particular to start with, and now the non-core, as Mahima tells me, is UP, Haryana and the like, more of central India. Volume growth, well, you want to see how much are they targeting and what's the traction they're getting with regard to their non-core markets, whether they're able to build that same brand, that same rapport with the customer or not is really the question. Second one is competition and the impact of that on the growth number. Of course, within core markets, but more so in non-core markets, competition remains strong in a segment like this. Is the receptiveness of products in other states also just as good? How quickly can we evaluate that? What kind of timeline should one look at and what kind of performance should one look for is really the other question we'll try to understand. The fourth piece is probably the most important, and that's raw materials. One in terms of direction, second in terms of pass-through. Price increases don't seem to be something that the company is very enthusiastic about, at least basis commentary. It seems like a low single-digit kind of price increase. Everything's going to largely be driven by volumes, but the cost pass-through will be the question. How much of the cost increase is going to happen? How much of that is going to get passed through? How confident of a 32% gross margin, that's the guidance that they've given, and a 15% EBITDA margin in FY26. How confident are they of that? 32.5 to be absolutely precise, but I'll give it to them if they are able to do that 15% EBITDA margin nonetheless. Acquisitions, what's the thought process and what's the growth prospect with regard to already made acquisitions, and how do they view new acquisitions and new places where they are making investments? There aren't too many large capex projects that they are undertaking, at least in the near term. That's not the announcement. But broadly, acquisitions will be one thing which I have my eye on. Anything else, Mahima, that you feel that we should add?
The interesting part here would be to try and understand as to how they're doing, what they're doing in terms of its international expansion, considering now the UK FTA is in place. That is something to watch out for, because a lot of these competitors of Bikaji Foods, like something like an ADF Foods, is doing the ready-to-eat part of business. So we'd have to see as to what new products also they are trying to foray into. But before we go on to the 8 metrics that we're going to talk about, let's take a quick look as to what the company does exactly. It's probably one of the largest companies in India in the listed space that is into ethnic snacks as well as Western snacks. The product mix per se for the company, ethnic snacks is almost 75% of their overall business. Packaged is almost 6 to 7 odd %. Western snacks is still small in terms of percentage, but a very fast growing business for them, around 9%. Papad is around 6% and others is around 3 odd %. So that's with regards to where the product mix stands. Market wise mix, as Harsh mentioned, the markets are divided between core and focus. The core market is around 72.4%, focus market is 13 odd %. Others comprises of around 9 odd %, and exports right now is almost 5% of the total business. The core markets include your Rajasthan, Assam and Bihar. Focus markets is your Uttar Pradesh, Haryana, Punjab, Delhi, Northern India, and in the southern parts they're focusing on Karnataka and Telangana. In terms of its international presence, the company has presence in over 30 plus countries, but the revenue contribution right now is restricted to that 5% mark. In terms of the SKU mix, family packs contribute to around 57% of the total business, and impulse pack is around 40.6 or 41% odd there. So that's with regards to the mix in terms of SKU. The network, there are around 3,26,000 plus outlets that the company has, and store counts right now are around 15 in the core plus focus markets. In terms of the overall capacity for the company, Bhujia has around 57,600 metric ton of capacity, Namkeen with 1,41,000 metric ton, packet sweets around 62,000, Western snacks at 39,300, Papad with around 11,400 metric ton capacity, and that sums up to overall capacity of 3,25,000 tons. So that's the overall view of, in fact, the whole and soul of Bikaji Foods that one needs to know about.
Okay, so that's how we're looking at the company. Let's look at the key metrics now, and in terms of okay, so those are some segments as well. Mahima, you want to cull that out? Sure.
So in terms of the overall segments, ethnic snacks, this is of course as to where the Q1 FY26 numbers stand. Ethnic snacks grew around 11%, packet sweets grew around 3%, Western snacks grew around 4%, and Papad grew around 5.8%. So growth has been faster in terms of where the Papad segment stands. This quarter, Western snacks has slightly seen a lesser growth as compared to where it was in earlier quarters in double digits per se. So that's one question that we need to ask the management as well. In terms of the core markets performance, that grew around 8.5%, focus markets grew 11.5%, other markets grew around 26.5%. We need to know as to what these other markets are that that's growing faster in, even better than the focus markets as well. And exports grew almost 61%, though a very small chunk, but has seen a significant amount of growth. So an outlook there also is something that the management needs to answer. All right, so that's with regards to where the overall segmental and core market and focus market performance stands.
Yeah, but if we can pull out that core versus focus in terms of revenue mix, when you're looking at that, somewhere you're starting to build in a risk that the focus market or rather the core market is a very heavily reliant market for Bikaji Foods. Around 72% of the top line comes from there.
Correct.
Let's pull up the mix, actually, the revenue mix in about the company. So 72.5% comes from there. And these are, of course, your core markets. Outside of that, when you're looking at focus, it's a much smaller pie. So focus markets is as you correctly mentioned, is just around 13%. The others is what is 9%, which has contributed substantially in terms of growth, at least this quarter.
Correct.
So again, something we should try and understand as to what's playing out and how quickly does this mix change, how quickly does this wheel that we're seeing change, because the focus on the core is just so large.
Correct.
It creates a large risk for the company. So that's the other piece I'd want to know. So, but let's go across. Let's understand the key metrics where Bikaji Foods is concerned. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, valuations and street coverage. So we'll cover all 8. I'll allow Mahima to, as usual, take the lead with regard to income statement.
Right. So income statement overall, you know, it's a thumbs up because it's been a good growth for the company in the past 3 odd years. If you take a look at the overall revenue CAGR, that's been around 18%. The overall EBITDA CAGR has also been around that 33% mark, and net profits have shown a growth of 37%. Margin trajectory overall, where it stood in FY22, that's improved to around 13%, but the margins have taken a hit as compared to where they were in FY24 at 17% to around 13% in FY25. But this is largely because of the kind of inflation that the entire edible oil space has seen. So raw material inflation is something that is impacting the margins overall. So margin trajectory has been slightly on a negative note when it comes to comparison with FY24. But overall, from an FY22 perspective, it's been a good growth. In terms of where the Q1 numbers stand, revenue growth at 14%, EBITDA growth at 5%, margins from that 16% mark to 14.7% mark, and net profit up 3%. Volume growth has been good this quarter for Bikaji, so that was something you know, which stood out for me, which was at 7.5 odd %, and this is because Q4 was not very you know, good for the company, but this quarter they've done well in terms of the volume growth. So that's with regards to, you know, where Harsh, the overall you know, income statement picture stands. So it's a good growth in terms of where the 3-year performance has been. So it's a thumbs up.
Just the one concern possibly is what you correctly pointed out. FY24 to FY25, the margins have fallen. FY24, the profit after tax number was 265 crore. FY25, it's come to below 200 crore. So that contraction in profit after tax is not looking good. It's obviously a concern. How much will it bounce back and what will that inch up be? Will we exceed FY24 levels? What's your sense?
I mean, it will all depend on, you know, overall how this raw material prices impact plays out, first thing. Secondly, you know, as I was mentioning earlier also, there has been a duty cut in edible oils. So that will probably play a positive role and have a better impact on PAT overall. But the other factor is that ad
sorry,
spends...
when will that translate? Will that translate
That will
Q2?
transfer from Q2 itself. Start translating from Q2 itself because they might have some inventory in place already.
Sure.
The third aspect is, I think they are also going big on ad spends. So that is something that is also overall impacting your, you know, bottom line numbers. So we'll have to see as to how the trajectory of ad spends also go, because they've been onboarding, you know, a good, you know, a lot of personalities on board to keep their advertising spends going up, plus social media marketing also is on the card. So that is something that might impact the profitability. But overall, I think considering the duty cut and inflation slowing down is going to be positive for the company.
Point taken. Let's switch over to the balance sheet. Again, not looking bad. Mind you, the company has a market capitalization of around 20,000 crore. You look at the equity plus the reserves, you're looking at a even sub 1500 crore kind of book value. The borrowing number, of course, looking fairly okay from book value standpoint, even more so comfortable from a market cap standpoint. And when you're looking at the cash and bank balances, also there is enough comfort available. Clear thumbs up where the balance sheet is concerned. Cash flow, Mahima.
So cash flow overall, you know, cash flow from operations have slightly slid when you compare it to FY24 numbers. but it's been in the same range at where it was in FY23 per se. But in terms of the cash flow to the overall EBITDA percentage, that has come down, from that 80% mark in FY23 to almost 59%. So that is something which is on the negative side of things, and taking a conservative approach there, we've given it a neutral rating here. Net cash flow from operation overall at 7 crores in FY25, although that has also slid quite significantly from that FY23 number. So that is also a bit of concerning part, and that is why we've given it a neutral rating for now.
Yeah, inventory as well as some amount of build-up over there, working capital build-up, that's contributing to that slightly tepid cash flow number versus the EBITDA. My guess is that's just the nature of the business as well, something to keep in mind. Return ratios, let's quickly look at those, and fairly healthy but fluctuating, so that's something you want to keep in mind. The return ratio was is in the late teens broadly. 1 year of blip or so, but broadly it's in the late teens. We've given this a thumbs up as well. Shareholding, Mahima.
Right, so pretty well held company, it's there is skin in the game. Promoters holding almost 75% of the total company. FIs have increased their stake over a period of time from the 30% mark to 7% in FY25. DIs have also steadily increased their stake in the counter from 10% to 12%. Public shareholding, however, has come down from the 10% mark to around 5% mark. But number of shareholders overall has gone up from that 83,000 mark to almost 1,44,000 mark. And of course, this is in terms of where the in thousands number. But overall, it's a well-held company. DI steadily increasing their stake. FIs increasing their stake, almost doubled in the past 3 odd years. So we've given it a thumbs up when it comes to the shareholding pattern.
Okay, let's look at street cred therefore. And when you're looking at the last 1 year or so, it's been largely range bound. We've given that a neutral, but the last 3 years since listing, it's done fairly well for itself, 2.5x in terms of shareholder returns, so very strong, and therefore kind of nullifying each other over the longer term. It's done fairly well for itself. We've given this a neutral, but valuations.
Right, so valuations, what we've done here is we've compared it to the likes of Gopal Snacks as well as ADF Foods, which are the like-for-like competitors for Bikaji Foods. And in terms of the overall valuations, 1 year forward 26 plus 2 year forward 27, both look expensive when compared to peers. Gopal Snacks trading nearly half at where Bikaji is trading at. Similarly, ADF Foods trading much below than where overall Bikaji Foods is trading at. So valuations look expensive. Plus the 5-year average PE for Bikaji Foods has been around 41 times. So the forward valuations are looking much more expensive as compared to the 5-year average PE as well. So we've given it a thumbs down when it comes to the valuations part of the business.
Well, you have to consider that. Let's look at analyst recommendations now. 7 buy calls, no holds, no sells. Return potential though just 4%. That's reflecting with the kind of valuation that it's getting. So of course, largely looking priced in terms of the 12-month performance. We've given this one a neutral as well, since there is so much conviction, but just not enough upside there. So we've left it at that. Let's bring on board the management. Manoj Verma, CEO Bikaji Foods, and Rishabh Jain, CFO Bikaji Foods, joining us. Mr. Verma, let me start with you. Let me try and understand the outlook with regard to raw material costs and pricing. One, how much is it going to improve starting Q2? What's the visibility now looking like with regard to raw material costs? Second, how confident are you of that 32.5% kind of gross margin and 15% kind of EBITDA margin? What's the sense? Give us that perspective.
Thank you, Harsh. So for doing such a great analysis, I've seen the analysis for the last 10 minutes. So you've done a great job.
Thank you.
So from margin perspective, you see last 2 years, so we listed in November 22, and in last third quarter of last year, due to edible oil increase, tax rate increase by government during peak festivity, edible prices increased to a substantial level. It is close to 60-70% rise in quarter 3. So our EBITDA and gross margin impacted in quarter 3. But you've seen last 2 quarters, we again turn around the company, and overall margin from gross margin to EBITDA has been this quarter has been the highest in last 6-7 quarters. So from that lens, we are very much confident that that 32% is sustainable for us in this year. And from EBITDA lens, we are close to 14.5-15%, very much sustainable. So we are confident about the same.
Hi, Mahima also joining in. Always a pleasure speaking with you. Just want to get your sense on the trajectory of the raw material pricing that Harsh was talking about. There's positives that has come in. The custom duty impact of 10 from that 20% to 10% mark, that should positively aid your margins. Just want to get a sense there. And there's also easing of inflation when it comes to the palm oil prices. What is your sense? Where do you think the margins will go at? Let's say by the end of FY26 or FY27, give us a range of where you're seeing the margins to be like.
So in last 6 months, we've seen good cool off in prices of each raw material, like all pulses and all. Of course, in edible oil also we've seen good reduction in prices after import duty reduction. So we see that our gross margin EBITDA will be in the range of 30 to 33%. Gross margin actually EBITDA will be in the range of 15% at the year end. That's what we see. We will also majorly focus on volume growth and overall top line growth and fund the growth. That's what our major focus is. So our EBITDA target is around 15% in the year. That's the target.
Mr. Verma, let me come to you with regard to growth. 72% of your top line comes from the core market. How much of a shift in strategy has played out in terms of focusing on the focused markets, and what about other markets, because that one has just grown extremely well, at least in this quarter. Give us what's happened, what's the outlook, and what is the medium-term trajectory you see in terms of top-line breakup?
Yeah, so our focus states is grown ahead of the core states, right? And that's what was a part of our strategy. Talking about other states, so while we call them as other states, but by no ways are they under-focused states for us. The only change, the only difference in the strategy of go-to-market is that in those states, we drive through modern trade, new age, e-com, and the other channels, basically. So that's where is the trading model, and which is doing very well. Modern trade is doing extremely well for us, and those are the states where modern trade, say, let's say a state like Maharashtra, Gujarat, which are very high on modern trade stuff, and we have by far higher share in those states. So by virtue of these channels, we are doing extremely well. Also, the bases are relatively low, so therefore these growth looks better in that state.
Okay, so I take your point, and therefore how should, sir, the mix evolve? Because currently the reliance on your core is very, very large. You've always intended to shift away from the core. How quickly does that happen? Give us that perspective.
So Harsh, one is I would want to correct that it was never shifting from core to focus, because these are our most profitable states too, right? So they will continue to be our core and our utmost focus for us. But yes, from strategy and in terms of our route to market, coverage, reach and all. So let me share some numbers with you. So in these core states, we are available in upwards of 800,000 outlets, just 3 states, right? Whereas when we talk about focus states, our presence is about 275,000 outlets. That's where we are in these 6 states. And the rest of other states in all put together is about 150,000 outlets. So the drive, what we are doing in terms of increasing our reach, availability, that's what is part of our strategy and the go-to-market phase, what we do.
Interesting. Rishabh, in terms of your international business, what is the kind of strategy in place that you have? It's been a growing business for you, although 5% of revenues right now, because there are a lot of opportunities out there. There's UK FTA that's in favor of India, plus your competitors are already going into that ready-to-eat segment and going big when it comes to exporting, overall. There's Tasty Bites, ADF Foods, all of them doing that. Do you also want to go ahead and, foray into that segment? One question. And international business expansion, what are the plans looking like?
So we are also very much focused on growing export market, and we see great potential in growing this, because you will see last year we acquired one company named Ariba. They are mainly into frozen, ready to eat, ready to cook. And we also had to set up one plant in Bikaji, that's frozen sweets. So we see great potential in export. Frozen part is a big category, and we see great potential in growing this. And you'll see the numbers in this year also.
Verma, does growth rebound sharply for you, and how much of the cost pass-through goes through this year? Give us that perspective. Give us the knock-on effect on margin. So top line growth, margin, what should those numbers be for FY26?
So from top line lens, we have targeted close to 15 to 16% growth from top line lens. That's what our major focus is. With volume of 10, 11, upper of 10%. That's a target we are taking. And from EBITDA lens, of course, overall 15% EBITDA, that's a target we are taking. And we are on track of achieving the same.
Okay, Mr. Verma, a quick question on competition. How is it looking like? It's not just, the organized space, it's also the unorganized space in the snacking segment that could probably impact. And plus, there is healthy snacks, which is picked up so much. Just want to get your sense there. Is there market shares that are, that are being pared away? Is that anything that you've observed there?
Yeah, so talking about unorganized for this category, unorganized sector plays a big role. And even today, if we look at, it's about 40% of this stationery business is still unorganized. So they will definitely have a role to play. But more importantly, what we have seen is that in last few quarters, the local and regional players, or more importantly, local players have emerged and they've done well. So that's where the challenge is. And we as a company, large player, so we have to fight both, the top leaders and also the small players there. So that's the shift what we have seen. So ₹5 price point has done very well, in terms of category if we look at.
Rishabh, give our viewers maybe a 3-year lens into what we can expect from a Bikaji in terms of performance. You've given us FY26. Give us the 3-year picture, because in no way, from a valuation standpoint, does the stock trade cheap. And I'm not alluding to the fact that there is no potential, but I'm trying to understand from you what the 3-year runway is, so that investors who are already invested in Bikaji or looking to can see that, can have that visibility. What's that number looking like?
So we have just completed our capex cycles. Currently, we are at close to 50% utilization. So our major focus is to drive growth and volume growth. That's a major focus. So we see that at least we should grow at least 15-16% year on year for next 3-4 years. That's a target.
And maintaining that 15% kind of margin on all of that growth.
Of course, yes.
Got it. Mr. Verma, Rishabh, it's been a pleasure. Thank you so much for joining us this morning and giving us all of that to take home with us. But that's all the time we have on KYC. Before we wind up, let's quickly look at and stack up the ratings for Bikaji Foods. In terms of the start, 4 parameters were really robust. They were solid, good performance, cash flow. I want to quickly mark out, we've given it a neutral, but largely par for the course. That's just the way the business is done. And overall, you get a 5.5 on 8. Valuations were a thumbs down. That's something you want to look out for. 5.5 on 8 on the KYC ratings on a Bikaji Foods. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे